Good morning, traders. Let's get it started. It's time to get to some live trading action, and it looks like inflation coming down. What's going on out there? Is it going to be Santa Claus, pal? Let's get right into the action. It's time for live trading. Let's get it started.
Winner, winner, chicken dinner. Those words have been dancing around my head all night. Oh, it's Vegas lore, that phrase.
Good morning, traders. Who's ready to get started? Fists are up. We got to go ahead. The market's already getting moving. Let's talk about what's going on. Looks like inflation might be coming down. Ryan, could it be? Could it be?
It was a good print this morning. There's no let's just get that out there. Definitely a good print. We do see inflation marginally coming down, but here's my thing. Call me crazy, Mitch. Call me crazy, but I would say don't chase this move. What do you think?
I can't call you crazy because it looks like it's already pulling back, right? And that's already a sign to kind of note, right? Now, one thing I will say is that I feel like either the memo was out or everybody was playing, at least the smart money was playing towards the upside. Because yesterday's rally and Power Hour was telling me something. And I feel like a lot of that is what we need to understand. Right now, I really do feel like this. I feel like a lot of the action in the early morning is stopping people out with the volatility. And then we're getting trend type of moves towards the end of the day. So what did we have to start coming to the realization is that in certain times, the Power Hour is really profitable. And Power Hour meaning 3 to 4, right? And so at this point, I'm starting to get to the realization that I might have to actually start paying attention more to the 3 to 4 hour than the 9 to 10 hour or the 9 to 10:30 or something like that, right? And so this goes to show us that right now, a lot of the algorithmic volume is washing traders out, and then institutionals are getting in those lunch orders and taking control. So it could be hedge funds, it could be institutionals, it could be bigger traders, but I don't want to keep missing out on these moves. And so with that being said, I'm going to start even trading even smaller during this time to give myself an advantage to potentially take some trades at that 2 to 3 to 4 o'clock hour, maybe finding a trend to ride that trend a little bit further. Because a lot of the times what we're seeing is little range moves and we're not getting the continuation in the morning. And then all of a sudden you look back in the afternoon and you're like, holy crap, what happened to the stock? Like, it was chopping around all day. I go take lunch. I come back. The stock's up 10%. Well, that's how this market's been lately. Let's get towards the actual stocks, though. Let's take a look at what's moving out there. Right now, I will give a look on the SPY. Then we'll have Ryan take over, take a look at some of the ones that he's watching. And then, of course, we can take a look at what's actually moving. So just really quickly, to keep it simple, let's look at the 1 minute of the SPY reaction. I give the CPI numbers down there so you know what the CPI numbers are. And also month-over-month core going down also. A lot of good signs. Every number pointed in light, not hot. That's a really good sign. This has not happened yet to where every number points to the right direction. And so in that case, yes, it's a pretty bullish day. 410 is the level I talked about to watch to see if we could hold 410 to stay bullish. Right now, we're at 411.20s. The high on that spike was 414.14. So we'll see if we can get back even to this close. This close is towards 411.53. That's going to be your first level to watch for resistance to start playing into above the 410s. And then overall, I will be watching to see if we wash out back through 410s for the reversal to the downside. This could reverse. It doesn't necessarily mean that we're just going to break out, right? I think this is something to keep in mind. But of course, now we've had what? Up 1, down 1, up 2, down 2, up 3, down 3, holding. Now we just need to start holding resistance and creating a new support. We'll see if that happens today into the market. Of course, what type of stocks could you be looking at today? Well, I'm going to be looking at stocks that are also dollar sensitive, like silver, PAAS, one to definitely take a look at today. Already making a move in the pre-market towards 719. So, of course, this one's already making a little bit of a lift, but going to be looking for a little pullback below 17 to get that next push towards 1740s, 1750s is what I can see on the day. This is a pretty tight trade, but silver trade and gold will be some stocks that I'll be looking that are dollars sensitive. You could also be looking at some industrials and seeing how those are trading. XLI, we talked about this. We talked about XLV yesterday. Did get the dip bought yesterday. Now starting to push. We'll look to see if that can continue. XLI is another one that did catch the dip also. We'll look for some of those stocks to continue. I could also look for like a deer to start pushing back towards the upside, maybe a 450 break. Or you could look for CAT to play a little bit of a lag style trade if you're seeing it trying to get towards the 240s today. A lot of stocks going to be making moves. One also that I would put on your radar is for solar. I know that First Solar did do a little bit of a pushback yesterday, a little pullback on the daily as of late, but did get included now into the S&P 500, and this could have it getting picked up by certain, maybe like pension funds and things like that. So just keep this one in mind. Nothing too crazy there. JetBlue gave some pre-announcement. That one could come down a little bit. I'm not going to even mess with that one a little. EVgo has been really pushed down, right? Oversold conditions here in EVgo. So I'm going to actually be looking for this to kind of get a little bit of a spike through 575s. Nice little reversal daily pattern. You have to stick really tight. This would be more of that day trade style vehicle. But why am I looking at EVgo? Announcement with Lyft to go ahead and do like kind of a partnership that's going to help Lyft drivers get discounts to charging up at EVgo stations. But that's it for my news. Of course, there was United Airlines. If you were watching stock market movers yesterday, you guys know I called out almost this move in Boeing to the key. I talked about maybe getting through the 185 yesterday and going towards the 190. Of course, on that United Airlines catalyst, I didn't know that it would be a 200 jet order, but there you guys see it. United Airlines putting in a 200 jet order for Boeing, 100 787 Dreamliners and 100 737 MAX jets. This was reported last week. And so important when you see catalysts to talk about something that's coming a week from now or 2 weeks from now, to write down the date. Write down the date. Know this, because you could have been like watching for this catalyst to come into play, seeing that bullish reaction yesterday, looking for some continuation in Boeing. We'll see if that can continue moving. It's at 192 already. Yesterday was trading in the 184 and even below that before the open.
I remember we saw something similar in RXDX, right? They had that data come out, and the CEO a week or a couple of weeks prior during the earnings call was like, boy, I really can't wait to talk about this. It's like,
that's why it's important. You know what I mean?
Exactly.
Like, write it down. People forget about it.
Only the people that tuned into that and listened to that got that, right? That wasn't a headline. Nope. There was not an article about that. So good stuff there, Mitch. Let me go ahead and flip over to oops. You did it for me, and then I removed it. Okay, so a couple of things this morning. So we are going to talk about the market, but also huge update here to Benzinga Pro this morning. And I just recently, I really quickly want to cover it. Number one, you'll notice that my movers tool this morning looks a little bit different. And that's because we've added a volume and a float filter right into the top section of movers. What this means is that when you set your volume filter in here, remember, I used to set it in here. When you set your volume filter at the top, it scans the entire market. So instead of limiting the list of 100 stocks that I have, I'm actually now scanning for the volume here. It's going to give me a much bigger list of potential plays. So huge update here. The other thing that we allow you to do is we allow you to link tools. So now, and let me actually go ahead and close this one here. Now you can actually link your tools together. So in this workspace, you'll see that let's go ahead and grab this here. You'll see that I have like a colored bar at the top here. on some of these tools. I've basically custom linked these tools together. If you've used Thinkorswim, it works very, very similar. So lots of exciting stuff here this morning. I don't want to spend too much time on it because we want to talk about the market here. But just keep that in mind. Really, really exciting stuff released today. Lots of fixes as well. And then more stuff around the corner too. So keep it under your hat. In any case, let's get back to the market. So let me go back to my movers tool here real quick. We'll take a look at the broader market, but I do want to go over a couple of stocks here that are appearing on the movers tool. Number one, Net Capital here. This is ticker NCPL, trading higher after the company reported Q2 financial results. So it looks like we popped up to 336. Got a really nice formation here. The same is going to hold true for a lot of these small caps. You want to make sure that they hold whatever support area we've identified and then make a move to the upside. It was great to see HARP yesterday actually break the top of the range and then continue. That stock went a mile yesterday. I'd like to see more of that here today. That would really make me feel good, especially about some of these lower price stocks. One stock yesterday that did that was HARP. That does not make a trend. So I want to see if we can actually get that to happen to multiple stocks here. MGTA, another one that is up here this morning. Now, this one's retraced a lot of its move. We're coming right back down here. You can see that some of the levels that I identified. This was flirting with 2 earlier. So although we're back down to the 140s here, what I'd like to see is if we can kind of curl and move through some of these levels, if we can reclaim and then hold VWAP, perhaps 2 is going to be in play if the volume holds up. So we'll watch that. Again, not trading any of this out of the open. In fact, given what the market is doing here, I'm going to be very, very careful out of the open. One of the things I actually want to look for are reversals because I don't trust this move for continuation, but we'll see if we get there. I just want to go over a couple more of these small caps. I'm not going to go over the entire list. I just want to go over a couple of them and show the chart here. WIMI, this is WIMI Hologram Cloud. I feel like this has appeared on the relative volume scanner. Again, big level here that I want to be watching is going to be that 130 area, 130 to 133. If we take that out, this might get crazy. SOXL and SOXS probably going to be some of the better trading vehicles today. We already have a huge range carved out by SOXL. SOXS should be the same, although it's down now. We're looking at the gainers here, so it wouldn't be on this list. But the same is true, right? We've got a pretty nice range here. For the trade, because I don't necessarily want to chase this pop, for the trade here, what I'd like to do is I'd like to actually grab SOXL on a curl. I want to see it bottom out and then curl. I don't necessarily want to buy a falling knife, so I'll probably be a little bit more conservative with my buys here as well. But the ticker that I'm going to be looking at first is going to be SOXS because I'm looking for a regression to the mean here once the market opens. It's also worth noting that I want to see how things trade once the market opens. There's nothing forcing me to buy right at the opening print. Nothing forcing me to trade in that first 15 minutes where we may get a fake out or we may get a pullback. So SOXS and SOXL going to be 2 targets that we're going to be watching quite a bit here today. I'm actually going to skip over BOIL. There's a lot of other good stuff going on. I don't necessarily need to trade natural gas. If you trade BOIL, this might be a great day for you because BOIL and cold might move back and forth as well. This is going to be something that I'm going to avoid, however. Carvana is on the list here. We talked about Carvana. We talked about a lot of like the bankruptcy stuff. This might just be, kind of a bounce after it's really, really been beaten down. If we take a look at the 15-minute chart here, we are trying to kind of bounce from this big sell-off, but even when we enter the gap, these spikes get sold into, right? So we entered a gap right in here, sold into, entered the gap, really took out or retraced most of that gap, still got sold off. So I actually look for the same action here on Carvana. I wouldn't be surprised if this move doesn't even continue into the regular session or dies off shortly after the regular session and we return to lows. Don't really trust Carvana. Moderna had some really, really interesting news today. This is not a stock that we talk about often anymore now with COVID, but a really, really interesting piece of news here today. Moderna shares are trading higher after the company and Merck announced that mRNA 4157V940 in combination, with Keytruda met the primary efficacy endpoint in the phase 2 keynote. So this was a cancer trial. And I'm from what I understand, the combination of these two drugs yielded really good results in terms of cancer spread. So this is interesting. I'm not the COVID angle obviously took Moderna from the low teens to the several hundreds during that period, but it looks like they're actually going into something else here now. News seems good. This is something that I actually want to read a little bit more about. I did see a little bit of a blurb this morning on CNBC about this. Not enough for me to actually feel confident about swing trading this. And then again, given what the market's doing, let's see how the stock reacts. Worth noting that this stock was actually up prior to the CPI print. So it was up on its own news. We'll see what happens when the market actually opens and we start to trade here. Looking down this list, it looks like Bitcoin is up. Some of the other really beaten names like Affirmed, AMC, they're up. Tesla's up today. Let's take a look here at Tesla real quick. I know Tesla is one of the favorites out there. Good morning, everybody. Beach Bum, Martin, Jay, Quantum, Mingo, Linda. Good morning, Jesse. Good morning. So Tesla here, we're getting a nice little move here. Remember, we had actually, let's go back to that. Let's go back to the 5 minute. We've had a really, really rough time here in Tesla. It's really kind of been selling off. We had one day where we bounced there. Looks like we're bouncing again here today, but look what's happening. We're already kind of leaking here in the pre-market on the way back down. So again, don't really trust this move. Looking at the SPY here, looks like we did try to take the next leg up. Again, let's wait and see. We've got just under 4 minutes until the market opens. Let's make some better decisions once the market opens. No reason to get too heavy into this early on. I'm sure we're going to check out Amazon, AMD, and Nvidia. These are the kind of the usual suspects. We'll try to hold it down while Zunaid is out here and trade some of these. Honestly, these stocks look a little bit stronger here in the pre-market than Tesla. Maybe Nvidia and Tesla showing the same weakness here. Apple seems a little bit stronger. Amazon seems a little bit stronger. So we'll see if some of these stocks can give us relative strength. That's one of the things that I don't like about big gap ups here in the market, is that it's much more difficult to find relative strength when everything seems to be surging on a macro print like that. And what's really annoying about that is when it starts to come back in, you could be, buying the up move, and then all of a sudden everything reverses, and you either have to get out, or in some cases you can't get out. So I don't want to get trapped. I want to try and be as tactical as I can. And that's pretty much what I'm looking at so far. Mitch, I will say I do love the Santa hat. We had a couple of chatters here saying that you appear to be wishing the Santa rally into existence, or in this case, wearing the Santa rally into resistance. I do have one question for you, though. Does Hendrix go crazy chasing the little palm balls on top of hats? Because Buddy, I cannot leave my hats out anymore. Otherwise, Buddy steals them, and in some cases will actually rip that palm right off the top of the hat. So I was just wondering if you have the same issue.
I'm teasing him right now. He doesn't want to go for it. He's looking at it. You see him in the corner here. I put myself full screen. You'll probably see him.
There he is. Yeah, he looks chill. He's not. Yeah, see, Buddy is way more.
He's interested in it, but not like where I want to grab it.
Santa,
he's a good kitty. He's a good kitty.
Craig, real quick here. This is interesting, right? You had talked about this. Cost looking nice. Yes, it is. And we actually talked about Costco on the recent sell-off. So let me go ahead and bring up this chart, because this one's actually fairly interesting. One of the things that we were identifying about Costco is this purple area. Didn't I talk about this yesterday? I feel like I talked about this yesterday morning as well. This buy area here on Costco really seems to have held. And again, this goes all the way back to 2021. In fact, I don't think it goes back further than that. No, this goes all the way back to 2021. But this, every time it's come in here, it's actually ended up being a buy. Now, we did get the same type of thing. Let me see if I can extend this a little bit. There we go. We did get the same type of thing, right? It came in here. Now we're actually bouncing. I wouldn't be shocked if we traded back up to the 512, 520 level on this move alone. So maybe another 15 points here, 10, 15 points here. We'll see. This is a stock that I like long-term. Remember, if you remember correctly, I missed my ad in this buy zone. So I'm actually hoping that we come back into this buy zone. But it certainly looks like the next move here is going to be a curl up towards some of these moving averages. So good spot here on Costco. This looks good. This one looks good.
All right, we'll see what happens today. We got to just keep watch.
30
it's going to be a
seconds.
lot of action here. The big thing for me
action,
is not overreacting here at the open. I feel like it was already an overreaction. So joining in on that party is just kind of asking to just get caught out the trade here. 411s acting as resistance. We're right back down as 410s here. Going to keep watch to see what happens. Looks like we rejected right around the close area that we were looking for it to reject, which was around the 411s on the 1 minute on that spike. Going to look to see if we're going to spike down here out the open, or are we going to spike towards the upside? We'll just have to wait and see. For me, it's just watch the SPY right now, really. I'm not going to overreact and be watching too much out the gates here. It's more just be patient. I know that Zunaid's not here today, so if you guys see us be a little bit more patient on trades, well, you guys know Zunaid likes to jump right into those trades. We like to be a little bit more patient on them. So if we're a little bit slower towards the action, it's all about just taking your approach and executing. Ding, 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 ding. Let's go. All right, so just going to call out sectors that are moving. Of course, consumer cyclical right out the gates, getting a little bit of a lift here. What can you look there? Home improvement stores getting a nice push. Home Depot, big push up there. Lowe's pushing up there. Also, auto manufacturers. I saw that Tesla was getting a little bit of a lift there. That's continued. We'll see. This little pullback is an opportunity if you think that Tesla's bullish from here. I'm not going to step in the way in Tesla, but that's always up to you guys to determine there. Technology is the leading sector behind consumer cyclical. Look for stocks like NVIDIA and AMD maybe staying strong. NVIDIA is looking to push above the 185, now towards 187. AMD at 74, 64, it's starting to pull back a little bit. SPY is just battling, now pulling back there towards the 409 60s. Looks like we're getting a quick drop right now in the SPY, but of course we won't know.
Mitch, what's happening here is that it's coming back to its VWAP. So really, to me, the interesting thing is going to be, does it actually hold the VWAP, or do we continue to come back in? I wouldn't be shocked to have it actually bounce off the VWAP here.
All right, trying to get into some silver names. We talked about that. Looking for a pullback below 17 on PAAS. Moderna, man. Moderna yesterday stopping me out, and I would have been deep into the green today with their announcement of their cancer kind of treatment, their cancer vaccine with Merck.
one of their drugs works well in conjunction with Keytruda, which is a Merck drug.
Yeah, this is one of those that I'm gonna always be like, dang, that stop out yesterday. That kind of blows. Nice little move there. Of course, it would just been that, but you don't expect to see that type of daily action where you get this type of downturn and then this type of uplift on the very next day. So it just got a little bit of place. Looking for some pullbacks.
SPY continuing to come back in here, only about 60 cents away from its VWAP now. So definitely coming into VWAP. One of the things that I also noticed here is obviously Bitcoin. Bitcoin popped here, and Judge, yeah, I actually heard about this. Judge, first of all, Judge, good morning. It's great to see you. Appreciate you bringing all the news here. Looks like Mike Leach, coach, has passed this morning. He was, of course, put into emergency care over the weekend. Really, really sad stuff. Definitely rest in peace there. Now I lost my train of thought. Oh, Bitcoin, right. So Bitcoin actually popped. We were above 18,000 briefly. You're seeing a lot of the Bitcoin names here move. Of course, Coin, but also Mara and Riot. Some of the smaller names also moving up here. So keep that on your radar. In fact, Mara and Riot up over 8.5% each of them. So looks like they on the spike. We actually tried to sell off a little bit here. This is actually bouncing. SPY now back into its VWAP here. We're about 10 cents away from its VWAP on SPY. So retracing a lot of that move. And this is what I was saying. Voodoo, I think I saw you earlier saying that you were in the same camp as far as the market. Don't chase this move here. Market
If you're
liable
looking,
to come in. Looks like that's it.
if you're looking for what's working, it looks like some growth names are working right now. So look for that to kind of give you a little bit of a short-term lift. We'll see if that can continue. But name like Roku, up 9% overall, up 2.26% from the open, just to give you a little bit mentality of what type of stock is making a move there. We'll see what happens. Right now, I'm looking at PAAS at silver also, but looking for it to come back into that some of this gap. But Roku, nice little push out the gates here for Roku. If you're looking at those type of names, growth names getting a little bit of a bounce back today. Look at the 15-minute on Roku, lift from 52 to 56.
Yeah, Voodoo, you're watching SOXS and XOSL as well. You know, as far as some of these smaller Crow, you were saying, where is your comment? I can't find it. A good ad on NCPL. NCPL, here's a lot of these names off the mover scanner this morning, coming back in. This is what we talked about in terms of them actually finding support, right? We want to, I'm not sure that this is at support. Looks like it was really kind of testing 280 several times there. Which lines up with this support and resistance area. Let's see what it does here. A lot of these names coming in. MGTA did the exact same thing, although it looks like MGTA now is bouncing, so that's good to see. We'll see if this actually ends up going. No long trigger here on this yet. Just kind of looking down the list at the rest of them here. Let's look at AMST. That's a penny stock. Pennies have been crazy recently. AMST looking like this is trying to curl back up here. Another one that I was kind of tipped off to yesterday is Viri, ticker VIRI. Now, again, I'm not trading it. This is just a 28-cent stock or whatever. Interesting chart here, though. Huge drop from nines. Looks like it really kind of just hung out down here. And then as of yesterday, just started to pop a little bit on volume. So we'll watch VIRI as well for all you penny players out there.
The battle's on right now. It doesn't look good. There's a battle right now going on between will we get back above the 409s or we're just going to continue to leak here. Looks like Apple's leaking, so that's the one I'm looking at right now. Just been going sideways from the open. I'll put it up on the chart to the right here.
Got it. Oh yeah, see.
Apple's just going sideways. You see the wicks, bunch of tight pressure here. I'm going to use Apple and the SPY right now, trying to get a read on the market. How's that EV go looking? Looks like it's trying to push there towards the 590s. Doesn't look too bad for a little push there, but just going to leave it alone. Looking around to see what other stocks are making moves. UAL pulling back here. Boeing pulling back fast there out the gates. SPY pulling back fast there right towards the open. Could be washing people out as it comes back towards hourly support. Maybe catches hourly support as it comes back. That's what I'll be looking for. See where the support can come in. Could be coming down to 404. It's a little bit of a leak here. Apple crushing right back down to the downside. That's why I was looking at a little bit of Apple there to maybe get short on it. I'm going to look at Amazon. That's got a nice little push in the pre-market. Starting to pull back pretty fast here. Yeah, it did pull a little bit of the bull trap out the open there for Amazon. Just keeping patient right now. NVIDIA pulling back fast. AMD pulling back fast. So technology starting to fall. Consumer cyclicals just pulling back from the open also. Seems like a lot of stocks are just on their pullback. They're going to look to try to maybe catch some support, but we'll see if they can catch that support, right? Is there anything breaking through kind of the pre-market action? That's what we need to catch. I'm not seeing it. I'm just seeing a bunch of pullback right now in majority of the sectors.
Dan, good morning, Dan. Great to see you here this morning. Dan saying OPGN 53 million float, already traded 30 million, might want to try and get to that 200 moving average. So let's take a look here what Dan's talking about. Here's your 200-day moving average. We've got the 200-day moving average at 47 cents. Current price here on OPGN is 31 cents. So, Dan, I think this is what you're seeing here. And as far as what you're talking about the float being rotated, right? So it's got a 53 million float. There's already been 30 million shares of volume traded. It's what, 9 minutes after the open here. So looks like float definitely being rotated here. This does look higher. And I would imagine that a break here of this 33 cents, that might be your high a day break there. That actually might send it. We do have a catalyst here. OpGen shares are trading higher after the company announced top line data from its successful completed Univero UTI clinical trial. So there you go. Good spot there, Dan. Great to see you this morning. WVE also on that relative volume scanner. Jay, looks like, Jay, you're calling that out here. Actually, nice little move here. Let me turn this 200 off. Nice little move here. Broke above those pre-market highs. Looks like we actually back tested that level as well, and then moving up here. And we've got a good 20-cent move on that. Good spot here. This is actually one of the better moves here today. SPY now beneath its VWAP, right at 408, trying to hang on to 408. We'll see if it ends up doing that.
Moderna now to 192. Big rip on that one. It is what it is. Match trying to make a little move up. Taking a look at what's doing well in the SPY overall. Meta having a good day there, so that's pretty decent day on a bigger stock. NVIDIA just bounced off the VWAP. If you're trying to take a look at what might be bouncing there, I'm going to be patient here. The SPY isn't convincing me that it's coming right back, but we'll see around 945 if we just get like a big rip up. That's what I'll be looking to see.
Yeah, good call, Mitch, because we have now come in here, right? We've retraced, it looks like about 4 points of this move. Obviously, we have the 414 high, so that's 6 points from that. But I'm talking about in the pre-market, right? Look at the top where that SPY rounds on your 1 minute chart there. What is that? Just about 412, right? On your chart right there, Mitch. Right at the top.
411,
right
60s.
there, right? So we've retraced a good part of that move. The question is, do we bounce here? I could see us bouncing off that 407 where that candle lines up. Yeah, it's about 407. Maybe a VWAP reclaim here and then a move higher. We'll see if we end up getting that push. 945 is what you're looking at, right? 4 minutes from now.
Yep, you got it, man. One that is pulling back that's interesting is Oracle. Oracle with a nice little pullback here.
And they had earnings last night.
That's why I'm looking at it right now. It looks interesting off the 8450s. Oracle, if you like something towards the upside or looking for something towards the upside, I don't feel like this is a bad chart. Nice little pullback. Just recovered that 8450 area. I really liked it off of that. It's already pushing here. As you guys know, I'm not really stressing too much because right now I'm on end of the year mode. I'm in more test mode than making money mode. But definitely Oracle is a really nice chart here. A couple of 5-minute wicks towards the downside. That gives you a nice little benefit kind of support area. You can see it here on the chart, all this area here. That shows me there buying pressure every time it gets down there towards 8440s and 8450 area. So I think that there's some people buying that pullback. We'll see if it can get back towards Oracle's high of 8540s.
And really quick, if you take a look at that Oracle chart here, let me actually pull this up. Let me show you what it is that I'm looking at here. Come on, Oracle. There we go. Let me get my chart up here. So if we take a look at the intraday chart here. So what happened, right? So here's the earnings from last night. Okay, positive earnings. We drifted down a little bit. Now this move up here, this is off the CPI data. So the retrace that we've done, we really only retraced the move off CPI. Now we are bouncing here too, so it does look like it's trying to go higher. But to me, this is all good action. Effectively, we're back testing this range that we put in after the earnings print yesterday, and so far it's held. Looks pretty good. Voodoo says, Ryan, look on the SPY 5-minute. A lot of air down to 398. So let's go ahead and pull that up here. We'll visualize exactly what Voodoo's talking about. You're right. There is a lot of air here. Now, on the 1-minute chart, it does look like we're bouncing. I guess this is the 1 minute. Here's your 5-minute, though. And this is what you're talking about on a lot of air. 398. Okay, let's see what you have. You had 398.95. 398.95. So that's basically the bottom of this candle here. You're talking about a huge range in there, 10 points of range here today. Not sure we end up trading all the way back down, but stranger things have happened before. Well, I think what's going to be interesting here now is going to be what's the next move from here, right? Where does SPY go from here? Do we actually attack this 412 area where we kind of reversed at, or do we trade sideways, or do we break down? It's trying to bounce here. This is actually a pretty encouraging bounce. But we'll see. We'll see where we end up going here. Oh, and then one more thing. Becca, you were mentioning pins. Pins, this is interesting, at least the position that it's currently in. Again, not trying to take this trade here today. SPY continuing to bounce now, 409. So we'll see where this strength goes. Looks like it's trying to go here. This is interesting on pins. So first of all, Pinterest shares are trading higher after Piper Sandler. This is a tech firm. They have a lot of coverage on these tech stocks. Upgraded the stock from neutral to overweight and raised its price target from 25 to 30. So we got a ratings adjustment and a price target adjustment. Currently at 26.15. If you take a look at the daily chart, we are at this resistance. So here's the thing, possible swing long idea here if you're looking to swing something long. A break above this area, Pinterest maybe 30 plus. So with options here, you should be able to define your risk nicely ahead of time. I would look for maybe the January or the February contract and look for a continued up move here. Not a stock that I trust, not a stock that I really like, but chart-wise looking pretty good at this resistance area, especially if we break it. Nice little catalyst here on the Piper Sandler upgrade.
Rodney the Piper.
Roddy Piper. Man, did you watch wrestling when you were a kid?
Of course, man. And you can't.
Yeah,
you got to know the
Ultimate
Piper.
Warrior.
That was a nice
Warrior.
little push there in Oracle. Now it's getting up there towards 85. And so that was a nice little dip that we just got. I'll be looking for a nice little push now towards 85.40s. That looks good there. Going to start looking to see if some of these start setting up for some decent moves. SPY is just, I think it's just chopping around a little bit, but that's just my personal opinion. Maybe you guys think that this is a push back up. Financial services, I kind of like today towards the upside again. Goldman Sachs was one that I was looking at. Right now it's around 374, just bounced off the VWAP, trying to get towards 375 right now. Just taking a look around today, not really trading too much, but just looking around. Hendricks, you can't just take the screen. Come on, man.
Hendricks jocking your steez there.
Yeah, he just wants to kind of hang out. He's like, yeah, forget all this trading life, man. I just want to sleep.
Yeah, that was Buddy yesterday. Yesterday I woke up, it was a real overcast like it is today. It was dark. Buddy's just laying in my bed purring. I'm like, yeah, I wish I could just stay asleep too. I don't necessarily need to.
You see, look, you see him in the corner right here sleeping.
Oh yeah.
Yeah. Just sleeping.
What a good cat.
Hey, at least he listens. You guys heard me. I was like, yo, go lay down. Oracle, look, 85.30, almost to that 85.40. That was a nice little pullback there. So stocks that have good catalysts, right, in the morning, nice little setup, good valuation outlook. Then you get a positive move in the market, but then a quick pullback. That's an opportunity, right, to buy that dip, right? Well, I feel like that dip got bought in Oracle here. We're definitely getting a little lift there in Oracle. Another stock that did do a kind of dip that I liked also, but it was already too far away. It was BTU, a coal stock. I'm going to look to see if I can get another little pullback towards maybe around 28.60s. But it did push up there towards 28.95. We'll see if we can get into 29 handles today. SPY getting back towards 409.40s. And this turned around the 9:40 time. We'll see around 9:45 right now. We're getting through this. 10 a.m. is where I want to see if we get another move down, or do we start coming back towards 411.50s? At that point, I think we'd get into more breakout stage, and you'll see a lot of stocks taking that uplift, but we'll have to wait and see. Goldman Sachs, financial services doing well today, consumer cyclical and technology leading the way.
OPGN here, kind of trading sideways. Remember, this is what we were talking about with the float being rotated. We really wanted to see a break, maybe above this 33 cents. It really seems to be stopping at 33 cents, currently at 30 cents here. Volume dying off here. So this would be something to watch. I think if you get any type of volume spike, this actually might have the impetus to go higher. We shall see. Not in it, not trading any of the pennies here today.
Goldman Sachs, a nice lift, showing that the banks are lifting. Morgan Stanley getting a nice lift. I like JPM on the pullback lag here move, but we'll wait and see. Bank of America starting to get back towards the VWAP, but just calling out tickers right now. Not even taking too many trades, like I told you guys.
Me either.
Just
I've
working
taken
on
nothing
some
today.
strategies. I'm working on strategies right now. I'm not really trying to make the day trading money right now. It's more getting ready for next year, because I'm always trying to think in the long term, really not too much in the short term. Don't think this is the opportunity for me right now.
I'm the same way, Mitch. I'll be honest, I'm a bit tired of day trading. It's pretty much all I've been doing this year. As far as today goes, I mean, just some administrative stuff. As soon as we're done here, I have a bunch of obligations, including an appointment out of my office here. So I'm not even going to be able to watch and manage day trades for very long. I would just be looking for scalps, and so far, not really seeing anything that feels great. More watching the market and seeing where this is going. By the way, SPY rolling over now here. Looks like we tried to touch 410. Couldn't quite get there. Did we get? No. Couldn't quite get there. Now we're rolling over here, 408. So this is exactly why I didn't looks like we're actually rolling right back to the VWAP here. This is exactly why I didn't want to just kind of chase that move up. Mitch, I think really good discipline here this morning. My overall notion is that we come back down. Now that might have actually produced a good entry on SOXS. Let's see. Let's bring up SOXS. That's not in my recent list. Actually, it looks like, yeah, actually SOXX may be a buy spot right here. Now that I'm talking about not trading today, now all of a sudden I really want to. Let's take a look here. No, I'm serious. Stop. All right. Let's see. So the way I would do this is I would play a stop against 2670 on SOXS. Nice, I'm here. Maybe I'll go in just light here.
BTU pushing right back, just pulled back. The bid was at 2860s there.
Okay.
Wasn't able to grab it though at 65s. I put an order out at 68s. It just never filled me. But BTU is lower volume. Like there was only 18,000 shares that traded on that candle. So not going to get upset for no fill there, but tried to get it in order there. I just didn't want to interrupt Ryan, but it's not like I thought I would get a fill too, because I was in between the spread there. I didn't want to jump off the offer. That's the thing with BTU. Sometimes it's light volume trading and the spread is right there. It was like 81 off 65. So that's a little bit wide there for me. Didn't want to jump into the 80s, but getting an opportunity right now back towards it. And that's why I don't like to jump too far off the offer if it's spreading out like that, because next thing you know, you get one little downturn and you're like, whoa, I'm already down like 10, 15 cents. And you got to be real quick on the trigger.
So the SOXS entry at 2720, stop going to be at 2670. So a 50-cent stop, looking for $1 to the upside. Okay. So it looks like I've already made a mistake. Voodoo saying no on SOXS, 2661, better entry if it happens. Okay. So that's actually going to be below my stop. If we end up getting there, we are moving back down here. Good call, Voodoo. Looks like I might have jumped in that a little too early here this morning. Great call, though.
All right, going to look to see if we're going to get some further pullback in silver here. It did pull back to the 17, missed that first pullback towards 1696. It's kind of the level that I was looking for it to kind of dip by into it. SPY starting to push back up, so that's why I'm starting to take a look here. The big level, I think, is 410. Look for 410s. Those are daily levels that are important there, and that's where we turned around last time. If we can get above 410, yeah, I feel like we could stay in the bullish tune. That's what I said in pre-market. 410 was the level. We cracked it already. That's why I'm kind of in the bearish tone until we recover that 410 right now. Then I can be more into that bull.
And real quick, definitely got to shout out Crow here. Crow was talking about NCPL. Let me bring up my chart here. So Crow was talking about NCPL on a bottom formation right here. Crow, I don't remember exactly what your buy price was. But I know that you were talking about it on the sell-off here. You had mentioned that this was a pretty good entry, having a really, really nice bounce. And what's great here is we're actually getting that volume to confirm that move, right? So volume kind of pushing us up to the highs here. I don't know if we get 4, my man, but this looking pretty good. Next thing we got to watch here is a break of this 325. That would give us more room here to the upside. Great job playing this bounce, though. These reversals off support have actually been better than the range breaks to the top. This is something that we've been talking about recently for all of us that trade these small caps. So great trade here. It looks like you really hooked one, or at least you got some green on the screen early here.
Interesting name, New Fortress Energy. Why am I calling that one out? They had an interesting report late on Monday that they're going to be planning to return significant capital to the shareholders. What? A company giving money to their shareholders? Wow. It's hard to hear of nowadays. All you hear about is buybacks, right? Well, this is a little bit better than that. The board today declaring a dividend of $3 per share on NFE. NFE, New Fortress Energy, looking good already, getting the lift. I think that some people want probably in on this. And remember, it already spiked from the 44, but not a bad looking chart overall. If it can hold 48 on pullbacks, I really like this chart. And I mean, $3 a share doesn't sound too bad, right? Record date January 4th, payment date January 13th. Ryan, that doesn't sound that bad, right? $3.
I'm sorry, I was actually reading the chat. I missed.
You're good, my friend. $3 a share on New Fortress Energy. They declared a dividend yesterday, late in the after hours. It's not a bad one to keep on watch.
Yeah, and I think this is EKS. I think this is the one he's talking about. Him and Sydney. Or her and Sydney, pardon me if I forgot that wrong. REITs moving with lower expectations of Fed rate increases, great dividend players too. And then another oil mover, EQT, but then Sydney was saying EKS, company paying a special $3 dividend mentioned earlier. And he said, I missed it, but I do not like special dividends for tax reasons. Interesting. I don't have the insight on that, unfortunately. Maybe okay with the Roth IRA account, added CTO and CIO in all portfolios the last few days. Those are the REITs.
There you go. I see you guys out there. There's some smart heads in here. Let's just say that. That's what it's all about. We got a community of traders. It's not just Ryan and I, right?
Yep, that's right. It's the entire chat, which is why I like this so much. Daniel says Ryan was loading up. Daniel, I wish. Ryan is not in any type of mood or headspace.
Look at oil.
Load up on anything.
Oil looking strong today. Yeah, XOM, nice little move right now in XOM. I'll show you guys that on a 1 minute or 5 minute look. Even looks better on the 5 minute. Look at this little pull move. Little pre-market setup, right into the open, pull back. Look at the trend line. You pulled back right towards support. Could have caught that support break. Right back up there towards resistance. This is usually when I sell out of the move in this style of market, but right back up there towards 108. Not looking too bad there in ExxonMobil.
Tesla at the lows here.
Yeah, that's why I didn't trust that Tesla push in the morning. You heard me. I was like, I'm more bearish than bullish Tesla. But look at that. Already giving back a lot of that big spike. So we'll see what happens if it breaks through the 169. But definitely not looking the best there.
SOXS coming back in now. Looks like it tried to bounce there, but coming back in. Real quick, Shelly, I'm not loading up on anything. Shelly says better load up on cat treats. Shelly, funny story here. Mitch, let me know if this is the same for you. So I actually got a Christmas advent calendar for Buddy that has cat treats in each day. And I was incredibly disappointed because on the first day I opened it, I gave him the cat treats, and he just looked at them and walked away into the other room. He does not appear to be interested in them. And this is normal. He doesn't really like treats, which is kind of a shame. Mitch, you were telling me about, I think, the Temptations or there's one
the Temptations, really, really the Temptations. You know it. Look, watch. Let me put your chart up right quick, Ryan. I'll be right back.
Okay. Oh, I think we're going to get a cat demonstration with treats and the jumping cat. This should be fun. This should be fun. All right, I'll do my best to hold down the fort here. SOXS bouncing here. I'm still in this. I'm down 4 cents, 3 cents from the entry right here. Still in this, but it's still kind of figuring out the direction that it's going here. Looking at the scanner here, OPGN still hanging out around that 29. Pinterest hasn't broken that formation to the upside yet. Let's see here on the daily chart. Oh, actually, yes, it has. Yes, it has. So Pinterest above that 26. What do we have here? 2640 level. Well above it, 30 cents above it now here. Let's see where we end up getting a close here. Possible swing long opportunity here on Pinterest.
All right, SPY rejecting right around the 10 o'clock. This is what I wanted to see. This is a big candle for me on the SPY. Are we going to go right back to the lows? Or are we going to get back above 410? Look at all that rejection at 410. Look at this. This is why I wanted to pay attention to that number. Look at all that. Back. You guys know it. 1, 2, 3. You try to break out on the 4th. Can't do it. Coming back to test support. But are we going to go back all the way to 407.50? That's what I'm looking at now. But I have it hidden here. Look at his reaction already.
Go full screen. I can't see anything.
He's like, "What do you have there?"
Yeah, he knows. He's not asking.
Aha! The good stuff. The temptations. Dun, dun, dun. This is the good stuff, Ryan. Right here. The salmon flavor. That's the good stuff.
Salmon, he says.
Oh, he loves these.
Well, let's see. Is he going to eat one, or what's going to happen here? Full screen, bro. I can't see anything right now.
All right. We got to make a pile. It's the green or the red pile. We're going to make a green or a red pile, right? We got to determine, right? Which one he likes more. We got to separate it here.
This is, by the way, for all of you joining us, this is how Mitch picks his stocks, right? He actually has Hendricks do it. So here we go.
All right. You see the pile.
Can you please go
the
full
right
screen?
pile? Can you do it for me? Can you do it for me? I got the camera right now. All right. So there's the pile. There's Hendricks. He's coming in for the kill. Come on, Hendricks. Which one you want, buddy?
Hendricks doesn't look all that hungry.
He knows he's on. He knows he's on camera. He's like, this is a trap. Look at that face. He's like, this is a trap.
Yeah, he doesn't look all that hungry.
He wants him. He just thinks that I'm trapping him.
Okay. All right. Maybe we should get back to the market here.
All right. Let's get back to the action. And look at the SPY coming down there. Looks like I might be right here, but we'll find out. He wants to come for it. There you go, buddy. You get your treats. He's picking the green pile. I don't know what that means, but. All right. So there we go. Those are the treats you got to get, my man. My man, Buddy, needs some temptation life. All right. SPY coming down to the 408 here. He knows he's on camera. He doesn't like to be on camera, guys. I'll tell you one thing, though. He ate him up already. Now he's not on camera. He's not being shy. All right, 408, 27 now.
Voodoo, absolutely love this. Like, super, super love. Reminding me to not get distracted and look away, which is definitely something that I do in some of these cases. I am watching this here. At this point, Voodoo, stops are moved up. So my stop was at a loss at 26.70, moved this up here to 27.30 now. So I'm at least going to get a little bit of profit. It won't be anything really to speak of here, but I want to see this move push. We were just rejected at the VWAP here at 27.62. I'd love to see a push above that. Frankly, if I get 28, I would just take this off for the moment. So really appreciate that though. Love the good looking out, man.
The battle's out there right now, guys. SPY trying to cut down there. We'll see what happens if we do still break down here. I'm looking even at SQQQ for maybe a move back above 40.50. But the big thing would be the SPY breaking through 407.50s. That's the only way I'm even going to think about SQQQ. But really, technology is doing well, right? So SOXL could be one that you guys could be looking at.
Okay, so stopped out of my Sox S, only a 10-cent gain from entry. Didn't really have that push that I wanted, but initially, and of course now it's bouncing. So, damn it. So this is the chop, right? This is the chop. This is what is making trading more and more difficult here. Probably should not have moved my stop up, but considering that right after I bought it, I immediately went into the red, albeit small. Once we actually got back into the green, I didn't have any desire to go back to. I don't want to lose any of the profit that I've got on that trade. So unfortunately, came right back into 27.30, stopped me out, and then bounced. Currently at 27.47, 27.50. Things are just chopping around here. We'll have another opportunity to take a stab at this. So pins, by the way, coming back below that level here. And actually, it looks like, sorry, Mitch, it does look like the market's trying to roll back over here now, which is unfortunate that I stopped myself out. Need to work on that. That might be a focus for next year, staying in some of these trades a little bit longer.
All right, so we'll look to see if we crack through the 407.50. We've been on a slow little leak there. Yeah, you enjoyed those treats, bud. Success trying to still come back. The key here is going to be the 407.50 area. I'm not even worried about 408.50. I think this is just kind of chop right here. It's about 407.50 to me. If we wash through there, that's what I'm looking at right now. We're battling. At least the 10 o'clock wasn't too bad to look for the turnaround right back down, right? And so now I think we get this move eventually here, bigger style candle on the 5 or 15. And so you can be looking at the 15 to kind of show you a little bit of an easier trend, right? Like we're looking for pullbacks. That could even go to 406 through the 407.50s. So that could be the next move down, and move towards around 406. If it breaks that 407.50, we'll just have to wait and find out. And here you go, 407.90s. Let's see what happens there. There's 407.80s. We'll see.
And so you've got Success on the right-hand chart there. This is the push that I was hoping for, right? We just snapped through it now, and now it's pulling it back. So it's still doing a little bit of choppy action here. But basically what we're looking for here, a move through VWAP, push to the upside, and a continued move to the upside. We're seeing it come back and forth, but to me, to my eye here, sure looks like we want to go higher on SOXS, which means lower on the SPY. We'll see if that continues. That trend here continues.
If you're looking for a stock that's strong on the day, for some reason, it's Google. Yesterday, it was Microsoft.
Let me get a sweater here real quick, Mitch. I'll be right back.
No worries. Looking for a little bit of a pullback there, opportunity to get into Microsoft. It's at 261. You can see that it tried to get above 263.75 3 or 4 times, failed there. Looking for a little bit of a pullback into the 261.70s, and then looking for it to drop. But the SPY is looking heavy here. Want to see what happens at the 407.50s, 407.60s showing up for a second there. We went towards 51. Let's see what happens now. 407.50s, 407.40s. We're holding up right here. Look to see if the volume increases, and you see bigger stocks take a hit there. Microsoft taking a hit there. Apple taking a little bit of a hit there. Is Tesla making a new low? Boom. New low on the in the action there for Tesla. Now at 165.80s. That got hit hard there. Let me take a look at like a bullish stock like Oracle. There you go. That tells me a lot. Oracle dropping fast. That doesn't look the best there for a turnaround. I think you're getting that turnaround to the downside here in some of the tech names. This was a good looking chart. So if Oracle can't hold up, I'm not going to be feeling too confident about these stocks that have been strong like NVIDIA. You can see NVIDIA turning around there, getting towards 183.50. Looks like we're getting a bigger pullback here as you're starting to get some crack of the SPY. Could see a turnaround, but for right now, I'm looking at things that are going down and pulling back. Doesn't look good on stocks right now.
I know you took SOXS off. SOXS really raged, went right to that 28 level that I was initially looking at. So target reached here on SOXS. I traded it poorly. Reality is this trade worked out quite nice. So There you go. Dan saying that OPGN through that 35 level. If we take a look, oops, clicked on the wrong thing here yet again. I keep doing that. Mitch, let me throw my charts up here real quick.
Go for it.
So remember, this is what we were looking for, right? We were watching the 33-cent break. OPGN now has moved over through that 35. You know, one of the things, last time we checked on this, we looked at it right around here, right? Volume was kind of dying off. Looks like the volume's actually peaking up here. Or perking up here, excuse me. Good Lord. Let's see, where are we at here? 68 million shares of volume traded versus a float of 53 million. This has turned over its float once already. It's 10:10 a.m., 10:09 a.m. This morning here, OPGN. Dan, great spot here. Looks like you caught one. This is probably the penny of the day here. I know we're only up 3 cents through that 33-cent break, but great job staying on top of this, by the way. I took this off my screen many times.
All right, guys, taking a
Great
trade
job,
here. This is going to be kind of more of a push towards the upside here. This is ENPH, kind of more trying to get the pullback here on the 15-minute. It's kind of a flag pattern towards the VWAP, and you guys can see ENPH pulling back here. Just give me 1 second to fix the charts here. There we go. 15 minutes being weird right there. I'll do the 5. You can see it pulling back here and just bouncing off the 326 area, 328 area. We'll look for that to push. Got in there at 329.04. Remember, these are very small positions because I'm just testing around, trying to look for different positions. So this is a pullback into yesterday's range. You can see how if you scroll back, you'll see some price action that went right into this kind of range where you went into. Now we catch the dip. Now I'm going to look for the push back towards 336. And for solar having a good day in solar is actually having a pretty decent day. It's up 4.12%, and all the names in the green today. So that's why I'm going for EMPH today. Kind of a sector industry outlook with a good pattern. Let's take it.
Voodoo. Ryan, I'm still waiting on my entries. I don't like the whipsaw. Too vicious. Voodoo, that's exactly what happened to me, right? I got whipsawed out of my trade. Now, the trade actually ended up working. We've pulled back here, currently at 27.75 here, so we kind of retraced that move, but we went right to that level that I talked about. Now, the reason that it didn't work for me, the reason that I was stopped out too early is because I got whipsawed. So good for you to try and avoid that. This is where wisdom and experience really, really shines. I knew going into this, I told the group here that I'm going to dial back the trading. I'm in light trading mode. Mitch said the same thing. Then I saw a setup that got me really, really excited, took it, probably should have waited a little bit longer, got a better entry on there, then got whipsawed out of the position. So it just goes to show you experience and knowledge, they go a long way in this business. Voodoo, you seem to have done that correctly. Now, you said earlier, green is green, right? So although it was only 10 cents, really wasn't much of anything. Green is green. I was able to not take a loss. Which is good, I guess, if I'm trying to look at the positives there. But good discipline here, Voodoo. Keep it coming with the calls.
All right, you can look around to see what else is making moves. Solar stocks are still strong. So if you're looking for what's strong out there and staying strong, solar stocks. Cyclicals are slowly but surely getting into the red. They're at 0.4 from the open, and they're starting to break there. So just be careful on names like that. Home improvement stores were really strong earlier. Those have pulled back significantly now. That's like a Home Depot. Basic materials, I'm looking for that to see if we can get another bounce. Going to look to see what's going on there. Got pullbacks a lot in gold and lumber and silver. The silver ones are actually breaking into the pre-market action, so I wouldn't really be looking at those. Gold seems to be hanging on a little bit better, and steel seems to be hanging on a little bit better today, but we'll see if those can come back. They are into a big pullback like the market. Market is just hanging out here. It went to 407, went to 407.92. It's just on that kind of leak down. When will it get back to rip mode? 410s. 410s on the upside is a big number to watch for me. That's what I'll be looking for on the upside. Right now, it looks like a slow leak down as you're getting some leaking going out there.
Intraday, this is what I'm looking at, right? So I guess if you wanted, you could do this.
Yeah.
You could put the trend line all the way back to the high of the pre-market candle. It would still line up with these other highs. So to me, it seems like we're kind of breaking down here. We do have some pretty good volume here on the SPY, I think, especially compared to yesterday. Yeah, definitely better than yesterday. Expect to see some even better volume tomorrow. Especially after the Fed announcement. That I think is what's going to be on deck here. But this is one of the things that I'm watching here. This trend line. This trend line is actually going out to what, about 11 o'clock? Yeah, about 11 o'clock here. So we'll see when we end up breaking or where we end up breaking. But high here on this next move here, 409, 408 seems to be the top if we get there. JZXN. This is another penny here. I haven't seen this on the scanner yet. Looks like that just kind of bounced. Yeah, forget that. Yeah, William, I think, was asking me earlier. William Reyes, Ryan, did you check mRNA? Yes, William, we did. We actually talked about this. One of the things that's interesting about mRNA is they actually had really good news prior to the CPI print this morning. Right, so they were up on the news of Merck Merck, their drug in combination with Keytruda having good results it doesn't say in the headline here, but I'm pretty sure that this was, cancer vaccine and an investigational personalized mRNA cancer vaccine. So we'll see what we get from that. Market liked this prior to the CPI print. That's basically the point that I'm trying to make here. So even if this does pull back here, remember it's got its own catalyst. It doesn't need to move just in sympathy with the market here today. SOXS making a move back towards the 28s now. So that whipsaw action in full effect.
Yeah, SPY looking heavy here. It could do a reversal action and just start squeezing up, but it is trying to fight through the 407.50s again. We'll see what happens here. Definitely slowed down action, though. And when you're seeing slowed down action, not big bars, what does that show me? The big boys on the sidelines. And so remember what I talked about in pre-market, how I've been feeling like the big boys have been staying out of the early market, washing out traders. Well, guess what? What type of action have you been seeing here out the open? Washing out traders, a lot of it, right? And so you got to be careful out there.
I got washed out of a winning trade.
And then that just shows me, right? Later in the day trades have been doing better. That's not common. It's usually at the open trades that do better, right? Normally, because it's higher volatility, that increase in volatility sometimes, especially if you're in the right side, it's going to give you a bigger increase, right? Well, in this market, it's been a little bit different. It's been later in the market trades that I feel like have held trends. And so those are the type of moves that I'm trying to catch. Right now, what looks good is Apple. Apple's showing me a little bit of some strength here, but it needs to push, right? It would need to really get the market to kind of agree with it. And I put the 15. No, I wanted to put his Apple to the 15. So I got you right now. Apple 15. You can see it here, that wick right there. That looks like a nice little trend line, right? Trend line down here. It's just wicking some people out, washing some people out, and eventually it could still rip towards the upside. And I feel like the market overall, look at this, just a leak, washing out of a lot of the traders that traded between this price action, and then it can catch deeper time frame pullbacks and actually catch some pullback kind of support. Where can that come into play? That's coming closer towards the 406 area. As we get below the 406, now you'll be hitting different levels. Then from 406, you can go to 403. And then you start running into what I call multi-layers of support. As you get closer to those multi-layers of support, you'll have more price action in certain areas where you could find that support. We'll see if the SPY eventually makes a push towards later in the day. But that's what I could kind of expect. A little pullback all day long. And then maybe around 2 o'clock, 3 o'clock, you start seeing some pushes. But of course, this is just my outlook. You guys make your own assessment in the market and your own assessment on risk. It's just what I've been seeing in the pattern that I've been seeing lately. A lot of washing out, and then we get the trend.
OPGN here at 39 cents did flirt with that 40 level here. Dan, once again, great call here. Way to stay on top of this one. Taking a look at crypto. All of the cryptos are up except the FTX token. Of course, the hearing is going on right now.
Is he even there?
I'm sorry?
Is he even there?
No, he's not there. Remember, he was arrested in the Bahamas last night. The new CEO who specializes in bankruptcy is there.
Oh,
Nothing new yet. Maxine Waters just flapping her gums so far. There's nothing really happening.
yeah.
I'll keep you
I mean,
posted.
I don't expect too much out of it, really.
Me either.
I'm just going to be honest. I don't expect too much out of it. What do you expect to see? They're going to try to hit the character of SBF, right? And there's nothing wrong with hitting the character of SBF, because I do agree that he did some wrong things. And we all know that he should, he's probably going to end up paying for that, right? But at the end of the day, it's not only SBF here. And this is where I think people get it twisted. They're using him as a scapegoat for all the action that came prior. Remember, Celsius went down, right? We had Voyager go down. There were other players in here. There were other people that were advertising returns that weren't there. That's the negative part here. That's what we should be going after, not just SBF.
So you're actually hitting on like a key point here. What is the, I mean, there's obviously a Ponzi scheme going on where customer funds were used for personal gain or benefit or whatever. That's obviously just theft. There's no getting around that. But to your point about some of these other things using him as a scapegoat and all of that, this is one of the reasons why we spend so much time focusing on process instead of, well, this is what it yields, right? If you take this day trading setup, if you trade like such and such, you can expect these type of returns. The reality is that's not how it works. And anyone that's been in the market for any length of time is going to tell you that, results vary, and results vary from person to person. So take a look at Voodoo and I this morning here. This is a great example. We were both looking at SOXS to the upside. And Voodoo, correct me if I speak out of place here about you. I don't want to put words in your mouth here, but we're both looking at SOXS to the upside. I took it a little bit early. I ended up stopping out on it. It went to the target that I had. It moved the full dollar that I was looking for, and Voodoo took no trades on it. And so you can have the exact same goal, you can have the exact same thought, and the process can be completely different. So instead of saying, well, yeah, if we were looking at this SOXS trade, you'd be looking at X amount of percent or X amount of yield. Instead of doing that, what we're trying to do is say, hey, focus on this process, and then you can kind of figure out some of those details along the road, figure out how much money that you can make. It's going to be different for everybody. I know it's different because we're talking about crypto here, but to me, it's all about the process, right? Don't buy into those numbers of this is what it can make you. It can also not go well, as you're seeing here. It can also not work out. So have a strong process. You'll be able to make some of those adjustments.
Anyway,
sorry if that was kind of a ramble.
The VWAP wasn't too bad there. SQQQ making a move up. You can see SPY taking another leg down there towards the looking at the 5-minute chart in the 15, looking for support to come into play. There was this little stack up of price action on the SPY right around here, right around the 406.50 area. I think that's where we're heading right now. We got 406.70s showing up here, 406.60s, 57s, 54s, 50s. Now we bounce right off the 50 mark, right? And so 406.50, you could see the price action just bounced there. Now we cut below it towards the 40s. We'll see if we even get towards the 406. You're definitely hitting down on another leg. And so more leak here. And it doesn't mean that you can't trade in that bullish sense. It just means that we need to be more patient a lot of the times, using deeper time frame trades to maybe get around some of the pullback action that we're seeing early in the day. SQQQ making another step up through 41. That was one that I was looking off reversal from the morning action. You are getting that nice little push there. Of course, I'm not trying to make big trades there, but I did get stopped out on EMPH on that pullback there. Of course, this is kind of one share trading, so I'm not really stressing on it. It's not really a loss. It's more along, does the pattern work there or not? And I wanted to hold off 326, got stopped out there. And that's what it's all about, right? It's testing and then taking notes. Well, I'm going to be taking notes on a lot of these trades and seeing what's more working in this environment. I need to do this right now because of course the environment always changes. But if we don't understand the environment we're in, that's how we easily just keep giving up the cash flow there. EMPH pulling back through the 326, wanted to hold these lows where you see the wicks. It cut through there, went through the 326. I'm out of that trade. ENPH pulling back fast there. And the SPY now down to 406. Looks like that 410 held like really good resistance there and started getting hit hard. Now 405.80s.
Sorry, OPGN right to the highs here, 44 cents. Dan, again, on this, man, on this. Great call. Great stuff, Dan. And Voodoo saying here, Ryan, excellent advice. Good process focus equals good discipline equals consistent profit. Well said there, Voodoo. That's basically what I was trying to say when I was rambling. That's what I get, though. I criticized Maxine Waters for flapping her gums, and then I stumbled over everything that I was trying to say. So karma really got back at me quite quickly there.
Yeah, you never know. She might hit you on Twitter.
I hope not.
Maxine wants to talk to you, Ryan.
No, thanks.
She said she wants you to come down.
No, thank you.
Oh, man. What's going on out there, team? How we doing?
OPGN did pull here to 40 cents. Steen, I haven't taken it off the screen. It didn't. It never left the screen. FYI.
It's not about testing. It's about making money, please, Jay. Well, you got to test to make money, man. That's not what it's about. If you don't test at all, I mean, I don't know how you play in this market. If you only just trade, because I don't think that's the long-term success way. I mean, unless you found a way to trade in all type of environments, you got to be able to adapt. They call it the adaptive market theory, right? Is that what do you feel that the markets really move? Are they efficient market? Is it a behavior market that runs? Or is it more adaptive? I think it's more adaptive. I think, and what adaptive market theory says is that you need to know what more long is working today versus what was working 20 years ago, or what the emotional effects are causing traders, right? Efficient markets would be, if completely different. I don't feel like efficient markets theory holds at all, but that's just the way that I feel. Junk bonds moving up. I was stated in the chat, not a bad outlook to think about, right? Bonds might bottom before the equity markets. That's what usually happens. We have been seeing JNK, like a junk bond, high yield going up. I'm looking for a nice little pullback in those to eventually get into it if we could get the pullback, but they could also just keep moving up. Another thing to kind of look at, right, is the TLT. TLT is moving up today, 108.60s. So that doesn't look too bad overall. That bottomed below 94. So it's been a pretty good run there in TLT. We'll see if we eventually get a little pullback. But I also start seeing the moving averages starting to tick upwards on TLT, showing me that bonds eventually might be an area that we want to be looking for potentially in the beginning part of the year, as you're starting to get bottomings in bonds. And then, of course, the equity markets usually follow.
SOXS here went as high as 29. So just a great move here. And just to kind of finish up that, or add something else to that discussion, Jay was saying, I was trading before you were born. This is actually a really good point, because one of the things that I've noticed is that, like in my case, I still consider myself a newer trader. Entering my 8th year of doing this every day, I still consider myself new. A lot of the people that I talk to have decades of experience, 2, 3x the experience that I have, and so hard for me to consider myself a veteran when I'm dealing with people that just have so much more experience. But this is one of the things that I've noticed. Traders that are newer, when they need to adjust their strategy, they often do testing. They often will test a strategy. Mitch, you talked about lowering your position size to 1 share, perhaps paper trading, perhaps, watching different videos, this, that, and the other thing. Those that have experience, sometimes they cut that step out completely, and it's because they can. frankly, right? They've seen a lot of these markets. So when you're switching from style to style, or when you realize that the market conditions have changed, and as a result, you need to adapt to that, they're able to do that without testing strategies, because like Jay said, the whole reason that we're all in this is to make money, right? I mean, we might have different levels of how much we love it, and how we like financial markets and capital deployment and all of those things. All of that can vary from person to person. But for the most part, we're all here to take control of our financial future and make money. And people that have more experience and have seen more things are able to quickly pivot. And that helps them, keep profits high. There's a guy that I talked to who's been doing this for 40 years, longer than I've been alive. Mitch, I'm older than you. And he's, he's seen a lot. He's seen several bear markets. He's seen the global financial crisis, traded through it. He's seen Y2K, right? He's seen the 80s and the huge rush. And that means something. He understands how to quickly pivot, how to adjust his strategy to keep himself safe and to keep the profits rolling. It's absolutely part of it.
Yeah, I would just say at that point is that I'm way more risk adverse, and I've learned to be more risk adverse as time goes on. Some traders are not in that sense, and they don't like to be risk adverse. I think it's more important to test, and those statistics are behind your strategy, than just to trade and think that it's behind your strategy.
Yeah,
I
but
like
if you have a
statistical
feel for
background.
But if you have a feel for it, Mitch, I here's the thing. I can't argue with anybody that
It's both sides.
I can't argue with anybody that has their own system and remains profitable. I have a system that I feel pretty good about, and I get slapped around sometimes.
Yeah, that's what it's about. It's about, like, that's what I'm saying. If you have statistical data to back that strategy, well, then you don't need to test it, right? So that's what I just say. But like always, it's all about how you want to build your system, right? There's discretionary systems and there's non-discretionary systems.
OPGN under 40 here.
SOXS
just right under
leaking.
Yep. SOXS. That has been the trade here so far.
Leak. This market is leaking, and I'm not going to expect anything to change right now. It just seems like it's just a leak down. Do I feel like this is going to happen all day? Yeah, it could happen all day until later in the day, and then all of a sudden get a pickup. So I'm just going to be patient here. If we take a look at what's open, what's green from the open, everything was green from the open, and you can even tell that from the change overall. But if you take a look at from the open, now you have only 3 sectors in the green from this morning. And of course, there's 11 items on here. So that doesn't show very good strength in the overall market from the open. Healthcare is in the green from the open. Energy slightly 0.08 and utility 0.04. So it's not like those are really strong. They're heading down really quickly. Healthcare is the only one that's kind of holding on here. We'll see what happens. What's in the red? Consumer cyclical. Industrials from the open are pulling back fast. Even defensives, basic materials, filling in a lot of that big push that we got in the pre-market, and they could eventually bounce. But we got to be careful with those shorter time frames as we keep cracking through and leaking down.
Quantum is thanking Hendricks. Me, you, and Hendricks. I don't know why they're thanking Hendricks, but it's awesome. Hendricks spelled like the Cubs pitcher's name, not with the X. So that makes me smile. Mitch, I'm sure you don't quite like that. Yep. Jay, who dat, Tesla, blood, Tesla ugly. Man, Tesla really, really struggling today. An interesting thing here about Tesla as well is that this was, this moved up on the CPI, obviously, but it went back to red fast. So we'll look at some of the other names that moved up on the CPI: Netflix, Apple, even names like Amazon, Square, Tyson. Even, I mean, Tyson's not even related to some of those other ones. They're not red yet. Tesla's deep red. Deeper. We're 6 points in the red now, almost. So we're down about 4% here. Tesla really struggling. This reversal trade here. This would have been a good one for all you shorters out there. The 174 173 to 174 area short here. Man, 12 points there.
And guess what?
Tesla doing Tesla. That's true.
Guess what? On Tesla, now you are down underneath everybody that bought after the 813 or 814 stock split in 2020. What does that show me? That everybody that bought in that time and put Tesla in their investment account is now underwater. Keep that in mind, team. Keep that in mind. There's going to be overhead supply now in Tesla.
This is a good comment here. Change agent saying Tesla story has changed. Sentiment towards the brand has turned to negative due to Elon's theater. So first of all, I like how you put that. I would say that the Tesla story hasn't changed. However, the second part of that, the sentiment towards the brand has absolutely changed due to the theater that you mentioned in here. I would say that the Tesla story is still the same, right? EV cars, a whole bunch of, like the power wall, the battery, the charging network. I don't think any of that has changed. The sentiment towards the brand and towards Elon, yeah, that's definitely changed. I don't think that's over yet, though. I really don't.
Yeah, at the end of the day, this is just going to show me that it's probably not the time, right, for EV. And I was talking about that because yesterday we were seeing Ford go up and GM go up. I don't see these holding on very long, especially if Tesla's going to keep getting hit hard on the downside. We'll see what happens out there. SPY finally
trying to bounce.
We might have bounced around the 405. There's a 5-minute low at 835 at 405. So maybe that's the area that we can start bouncing back towards VWAP now. But it's just not a fun type of day to trade right now because of the leak, and the moves are happening in pre-market towards the close and not giving us big opportunities here at the open. And that's actually an odd time. That's not what you usually see. I'll just be as blatant about that. And so what does that show me? I'd rather have cash on the sideline than cash at work right now, because it doesn't, no holding of trend. Even on the move like today, where we got in really good inflation numbers that should at least keep pushing us, right? The inflation coming down. This just shows us that it's still not just one direction right now. Even though we get these little pops, we get a big drop into the open. And what's usually getting stopped out at all these pullbacks? Retail traders. Then 1030 hits. Now the big boys are going to come in here and look for deeper time frame pullbacks. We'll see what happens today.
That bounce looks like it was just short-lived. Maybe just a 5-minute bounce there.
Let's go to some healthcare names and see how those are doing. Pfizer got a lift today. Goldman Sachs upgrading Pfizer to buy. Price target to 60. We're at 53.81 today. That's been a good stock on the day. Pfizer getting a nice little lift there. What was the other one that I saw? Abbott Labs. I think that was a decent one that I've been taking a look at. So I'm just looking around, seeing what type of other stocks are making moves, especially in healthcare. I want to catch those names, especially the big cap names. Merck pulling back here. Of course, you saw Moderna do well, right? Well, Merck actually pulled back. Is this a buy the dip opportunity here? I feel like it's not looking too bad. You have a level to go off of the daily. So I'll show you guys that Merck chart right now. That's MRK, right? Well, look how this is pulling back here. Daily support right underneath it, right? Daily support is somewhere around here, the 109 area. You can see we pulled back already significantly on the day. We pulled back right towards that 109 on the hourly, and now bouncing off of that 109. I feel like some people are maybe taking that buy the dip opportunity there with Merck. Decent headline. Moderna making a move up, not making a move down on there. And so could be just playing a little bit of catch up here, as it was already in an uptrend, at least higher than Moderna. Look at Moderna's chart on the 1 hour. It's been pushing. We'll see if Moderna can continue pushing, but that's a nice little breakout. Remember, we were talking about Moderna's swing trade yesterday, man. That stop out yesterday, whew, that's a costly one. It's already up about 40 points on Moderna, about 20 20% move there. That's not too bad. And guess what, team? I know that I saw some people in the chat and they were like, man, we're not getting enough trading in here. Well, I said, you know what? I need some degenerate in my life, And I said, Mitch, I don't think you can be as good as the degenerates out there. So let's bring in one of our favorite degenerates. Can you guys sound the alarm out there? Sound the alarm. It's time. Hochzade.
What they want, Hoch smash. What they need, Hoch smash. I will never lose, I'm a beast. Hoch smash. If you want it, Hoch smash. Come and get it.
Hoch smash.
What's going on? Yeah, every friend has a degenerate, and I'm happy. Every friend group has a degenerate, and I'm happy to volunteer my time to be that. I love the hoodies from Ryan, by the way.
Don't even get me started. This is the best hoodie that I own.
Hoodie, baby. Hoodie traders.
Don't make me plug this hoodie. This is.
I love how you say from Costco immediately.
Well, I mean, yeah, because I say that because it's not.
I can't believe it either. It is not from Costco. The one I was wearing yesterday was from Costco. This one I had to order special because they don't carry them at Costco.
I love it. I love it, you guys.
Okay. Well, I asked because not to throw a dig at all, because the last time you recommended me to get something from Costco, I did, and it was a hoodie, and it was very comfortable and cheap.
Yeah, the one I was wearing yesterday, I think was $18 when I bought it.
Yeah, I might have to go back.
This one a little bit different though. This hoodie actually from a brand that I really like called M22. This is an outdoor clothing brand that's headquartered in Traverse City, Michigan. So this hoodie is actually built to be more heavy duty and thicker. And boy, it is amazing. Anyway, Zunaid, love the haircut. I now I understand why you were a little bit late today. Haircut looks great.
I looked like this yesterday. Come on, pay attention to me, please.
Pay attention to me. How did you feel about being called a degenerate there in your intro? I was wondering.
Look, I've been called a degenerate for the past
going on about here
22 years. I'm perfectly okay with it. It doesn't bother me at all. What does bother me is that I miss so much of great trading action. I might have to just move all my meetings from here on out and like much later on, but.
No, they just gotta tell them they cost you during that time. You gotta pay me. I make money during that time. So
yeah, I'm supposed to do my year-end review, so maybe I'll throw that in there and see what they think. But no, man, it's been an interesting action. I woke up and then I saw this huge spike. Obviously, I was looking at the futures on the mini side. Saw this huge move on ES, and I'm like, oh. And this wick, I was like, this is interesting. This long wick that I had seen. And then lo and behold, we come right crashing down. So I haven't got a chance to play it, probably for the better, because I would have tried to go long or something. I don't know. So we'll see if we can get a couple of moves, though.
All right. I'm glad to hear. I'm actually going to skip out and get to work now that you are here. We're going to be back at this again tomorrow, though. Right, folks?
Yee.
All right. Have a great day, everybody. Stay safe. Awesome on the SOXL. Hey, remember, we were saying at the beginning here, don't necessarily chase this move, but a lot of it back. We'll see where we go tomorrow. We will bring you some more actionable signals tomorrow. Take care, everybody. I'll leave you in good hands here with Mitch and Zunaid.
All right. Let's keep it going. All right, we'll take a look at what's going on. Yeah, man, it's been a tough one. At least I was looking for that reversal off the 410, so at least we called that one out here. We were looking like, okay, well, I was like, are we going to get above that 410 on that bounce, that 407 bounce? And we just held it like
my screen frozen. I think my screen's frozen. Hang on, let me
no stress.
Share my.
Yeah,
I have so many tabs open. That's what it is.
And so that little takedown from that 4010 went right through that 406 area. Now we're looking like we're holding 406 as resistance. So I'd be looking for a 406 break to the upside to maybe get some little reversal action. But man, we're already down towards 403. We're at 414 this pre-market.
Yeah, I mean, that's insane. By the way, appreciate the love, chat. I see you guys in the comments. Now, something that you mentioned was, support turning to resistance just now. And we talked about that so much. Taking a look at the Apple chart here, you have resistance at that 150. Again, something we've talked about so much at that whole number. You have resistance here. Easily could have gone short. And then, of course, you have this 149 that's kind of keeping support here, right? So let's just kind of draw this consolidation, if you will. Around here, let's go a little bit less to 149. There we go. Whatever. You've got consolidation. Then you've got a break on this is the 1 minute. Let's go to the 5 minute. Then you've got a break here on the 5 minute candle. comes down. Let's just say you're like, hey, you know what? It's not the best entry. I want to wait for it to come back. Great. It comes back to retest it, and then it just flushes at that point, right? So let's say if you did decide to go short there, and yes, this is hindsight, but it's also literally what we've been telling and practicing all year long. Let's say you go ahead and go short right here. Your stop loss, to me, my stop loss would probably be about 55 cents or 56 cents, actually. Let's say you go ahead and risk 1-to-1. You would have achieved that right here, right? On literally the next candle, next 5 minutes, you would have gotten the 1-to-1. That's when you would have, say if you have 100 shares, you cover 50 of them right there and remove the remaining 50 to break even. Then your next target would have been, let's just say, a 2-to-1. And you achieve your 2-to-1 right there. And that's where you go ahead and lock in another 25 or the whole 50, whatever you want. And you move your stops from break even to your first profit target. And that way you can, make sure you're still in the game for as much as possible. Taking a look at Tesla, somewhat of a similar story. You look left here, you have support right around this area. All right. Now, this isn't as clean, but hopefully you understand the concept of it, right? You have support right here that broke. Then it tried to come back and reclaim it. It couldn't hold it for quite long. And then it just rejected. And when it did, it just flushed straight on down to the levels of, what is this, 161.74. So like having support turn to resistance is just so key. And you kind of mentioned it here where you had support here on the SPY. It broke, came back, retested it, couldn't reclaim it. And then you get a nice little flush to the downside. The only area that I'd look to go long now on this one might be 402, but realistically, I would not be surprised if we close the gap by the end of the day. So maybe 400, 498 nines, should be 399s could be an area for you to go long. But for now, I'm going to stay away from everything because it looks like the moves have kind of already happened. There's not much meat in the bone left right now, and we've got an interview coming up in like 15 minutes or so. So I don't necessarily see anything that I personally like that much. Ooh, 188's on. That's a nice rejection. Another spot that could be interesting if you want to play for a long is it's ways away. It could be this 176 on NVIDIA. Because you had resistance here, then it obviously popped up today with pre-market action. If it comes down here and you've got the previous close, this is where I try to nibble some long shares right around this area and then have a stop loss below like 175 break or something like that. You all right?
Yeah. What's up? Sorry about that.
Nothing. No, you good. I just wasn't sure if you were good. But let's see what
I
happens.
was getting ready here for what's coming up next. So I'm lining up here. Gianni De Poche is going to bring us through some technicals. So stay tuned. We got a lot to talk about today. And it looks like we also are going to be having an interview. So stay tuned, guys.
Yeah, we'll have
Dexcom joining us.
Yeah. It'll be Dexcom. We'll be talking to the CEO of Dexcom, Kevin Sayer. They have some interesting stuff that they announced with their diabetes. They received a treatment. They received FDA clearance for their G7. So we'll talk more about that and why it's a big deal and all the other good stuff as well. So it should be a good interview. Shout out to Zoltan for making this one happen. DXCM is the ticker. They are a $50 billion company in terms of market cap. So definitely be on the lookout for that. Should be coming up in about 15 minutes.
All right. So Moderna getting a little bit of a bounce there. Looking to see if I should go for some Merck. I'd like that out. 200.
So look at this one again. You can go ahead and check out on Moderna, right? Just a ticker that I didn't even know you were going to talk about. You have 200 that acted as resistance right here. I'm going to go ahead and just draw it right here. You have resistance, right? And then obviously finally it poked through here at 1010. And then what did it do? It retested and it held. And this is where you get in. This is where you get in, right? So let's say you go long here, right? On the retest and the candle closed, right? As soon as the candle closes, let's say you go. To me, this is where my stop loss would be. So I'm giving it about $3, if you will, right around here. Let's kind of move this. All right. So these two candles, you can see how they consolidate. If it breaks that, I'm out. So you go ahead and have yourself a 1-to-1 trade, and that would have been met right over there. And then you move the remaining to break even. And look what else it did. It went ahead and got your profit target, and then it came back and retested again, and it held, and now it's moving once again to the upside. So always keep an eye on support resistance. And something that I'm looking to do, you can even see it on my chart. I don't even have the VWAP here. I'm trying to learn to not have VWAP be something that I am biased with, right? I'm literally just looking at candles and opens and closes and supports and resistance. That's all I'm looking at for the remainder of the year, hoping that it can go ahead and guide me. Now, obviously, I'll turn it on sometimes just to see where it's at and things like that, but I'll do my best not to have it dictate me. Even the clouds, I feel like sometimes what happens is a level's approaching, but then like VWAP is a little below it or VWAP is above it. And it just plays with my head in terms of where I should get in, where I should get out. Netflix, another one, by the way, it closed the gap here. We've talked about Netflix closing the gap for quite some time. It finally did. If we go ahead and look left, right over here, that gap right there, because we had gapped down. I believe it was on earnings. Yeah, it was. We had gapped from about 333 all the way down to about 249. And then once the gap started to fill right there, it finally went ahead and closed it. And of course, right when it closed it, starts to go ahead and plummet to the downside. Matter of fact, I could be wrong. I think I might have missed it by like $1 or 50 cents or something like that. Don't blame the indicator. Look, I can't blame the alcohol, so I'm going to blame the indicator, okay?
As
What
if.
we've got here. Yeah, I can't. I was telling a buddy of mine the other day, I was like, anytime I lose money, I blame my internet speed, which, is a gig, so I can't, but I still do. It's not fiber, so I don't have a gig up and gig down, but.
You don't do the Citadel call out?
The what? I'm sorry? Oh, like blame Citadel that they took me out? Yeah, I haven't done that one yet. No, sir. No, sir.
That's the one. That's the one you can say when you don't get filled. I got you, bro.
Yeah.
Yeah, it was Citadel. They didn't get me that time.
Yeah, they don't want me to succeed, man.
Trying to hold me
What
back.
do you want me to do? What do you want me to do?
Poor Citadel. They're thrown into every single non-fill now.
I mean, hey, man, I think they have actually caused enough trouble,
Yeah, it's part of the game, right? You want free commissions. Gotta pay to play the game, they say. Tesla, what is going on? 163s. I remember I was on pre-market prep when we were at 190s looking for that 167 move. Now the next stop for me, 155 on Tesla. Ooh. Next level to watch. We'll see if we get down there towards that 155. Tesla's just been on a massive leak since it went up there towards the 300, tried multiple times to get towards the 320, hit the trend line, and huge rejection from there. Then again, like Zunaid was trying to explain earlier, look what happened there on Tesla when it went down there towards around 19, pretty much like 210, then bounced 230, used that as resistance multiple times, and then boom, right back down through that support. Then what happens after that? You go to 180. What do you start using as resistance? You start using the 200 level as resistance. Not what you want to see in the trend if you're definitely a bull in Tesla, as it keeps using resistance as a level to reject off of and come right back down to the continuation on the downside.
And I'm going to practice what I preach here, right, in front of you guys, because we got an interview. I don't want to go too crazy with it, but just one micro E-mini S&P 500 index futures. I just went short here at 40, 50, 25. Why? Because this is a 1-minute chart. Unfortunately, I'm going to actually move this. I'll leave it, whatever, just because it's a fun little trade. You have support that the 40-50 held, by the way, right? You got yourself a beautiful rip for 15 points. Came back down, broke it, retested, failed. Reclaimed it above, downside, came back, tested, failed. Now it's testing it again. If it does go ahead and fail, I'll just go ahead and grab quickly my 5 points. My stop loss is also 5 points to the upside. So let's see if this ends up being a successful quick trade. $26. Get me some lunch if I can. With inflation, that'll probably get me a small fry instead of a large fry. But let's just see, right? We're going to practice what we preach here. And if it fails, cool. We have a 1-to-1 trade right here. Now, if I was short 2 contracts, and if my order was filled in the profit area, then I would move my break even to, I move my stop loss to break even to make sure I don't lose any money on the trade. But that's the trade that we've got right now on the E-minis. And our stop loss is 40, 55, 50, by the way. Oh.
All right, we'll see what else is going on there. It's going to be a good day. Definitely got a lot to talk about, and there's going to be a lot going on. And later today, we'll have some interviews on stock market movers. Also, I got Brian Say, Brian, founding partner at, of course, the Capital Stewards. So check that out. That's going to be later today at 1:15. And then after that, we'll still have also, looks like my man is coming out the cave again, the Bear Cave, Substack's author, Edwin Dorsey. Guys, check out, there's probably some new short report out there. We'll talk about it. The Bear Cave. You guys can come check it out. That's going to be at 1 p.m. today, later. All right, at 11:05, we should be getting into our interview. We're going to keep trading here. Like always, team, if you guys have a big move on the day, throw it up in the chat and let us know.
Here you go. So we're about what, 3 points in the money now. I'm still going to just leave it be. If it goes ahead and takes my limit, great. If it goes ahead and takes my stop loss, that's fine as well. But I also went ahead and practiced the same exact principle on my Apple short here as well. Simply because, look, you had support here at the 148s. Now, I didn't wait till it came and tested it. That's why I took 50 shares instead of like 100 to 200 shares. But if it came up here and tested it, this is where I would go short and then come right back down. So the main principle was, hey, I'm hoping, or I am expecting, whatever terminology you want to use to make yourself feel good, that 148 is going to be resistance, similar to how it was right over here. But we'll see. We're putting money where our mouth is, and we'll see which way the cookie crumbles. Looks like the futures are trying to reclaim the 40-50. You can see on the right-hand side of my watch list right there.
They're trying to reclaim, but still, if anything, I would expect to see like instant move up, not like this little like kind of just slowly back towards the upside. That doesn't make me confident at all in the price action of the SPY. I want to see if it's going to reverse. I think you're going to get the huge candle back, like one candle take like 2 points to the upside, something like that, or you get that big reversal sign. That's what we got later in the day yesterday. I'm going to look for something like that to happen again, somewhere where you just start getting that nice little move back towards the upside, and definitely look for that trend at like 3 p.m. It happened yesterday where all of a sudden there was just a big candle. We got through the resistance, never looked back. We'll see what happens.
There we go. So we went ahead and took our profits on here. You can take a look at the logs. So we went ahead and had our limit hit at 40.45 for one contract. And if I had multiple contracts, I would go ahead and move my stop loss now to break even. But this is why, we talked about it so many times. I've talked about it. Mitch has talked about it. Ryan has talked about it all year long. Support turning to resistance. Talked about it as soon as we came on the show. And then you obviously see us practicing what we preach. So we worked out on that side. Now let's go to the equity side and see how it's going to be with Apple itself. The short that we took, there's Apple. And so far it's working out. We're going to look to take gains at 147.11. I'm going to leave this one alone. If it hits, it hits. If it doesn't, whoop-de-doo. We'll be fine.
Yeah, a bunch of leaking charts, right?
Lows.
Bunch of leaking charts. That's what you look around and you see. And so this is how you got to be patient on a day like today. The move was made pre-market. That's what happened
to the long
today.
side. Yeah.
Yeah. And then, so at that point, if you're trying to play longs, you just get screwed in all this action.
Yeah. And then if you were looking, people can say, oh, it's hindsight, this, that, the other. Well, one, you see us talking about it, you see us trading live. Two, when I saw the gap, right, in my head, I was like, okay, where do I want to go long? I knew that on Apple, it was the break of 150 in the markets, right? I knew that.
Definitely.
I knew that, hey, when it came to Tesla, I'm looking to go above this area here, the 179s. And I knew that on NVIDIA was another ticker that I was taking a look at. Matter of fact, I may have marked it. Let me see if I did. Yeah, I did right there, 188, right? So I kind of knew that, okay, these pre-market highs is where I want to go ahead and go long. So I had a game plan for long, and I didn't necessarily have a game plan for short, except the 150 area on Apple. Now, because of my meetings and things like that, I wasn't able to exactly fully take, advantage of the moves and whatnot, but I was able to take advantage of the 149 break here. to the downside and different things like that. And of course, right now you can see I might end up losing money on this short if Apple goes up to the 178, which should be 148.31 area. But we're going to leave it alone. We're not going to fidget with this one. We were obviously in the money right here, but it didn't hit our risk reward 1-to-1. That's what we're wanting here. So, and let's see what happens here. As and by the way, this is why you don't try to just hit a home run with every trade, because that trade that I made money on would have now been break even with the possibility of being stopped out. All right. So that's why you always want to kind of be careful, manage your risk, take some gains, and go from there. But as the market tries to bounce, Tesla did make new lows. Where's Tesla? There it is. Tesla did make new lows right there, and now it's trying to come right back up.
Can you explain how you get Tesla next resistance 155? Well, a lot of that's going to be going back towards the price action, William, from the stock adjusted split. And so that's the window that you want to be looking at. Is I'll scroll back on my other charts and just kind of show you what that looks like. And so I'm looking at these levels here, and I'll show you it right now. I'm going to put it full screen, and I'll move it, my charts here. Here you see this. So this is going to be Tesla's price action from 2020. 2020, this is September 2020. This is exactly the candle that I've been like kind of drawing out to everybody. The high here, 166.71, right? Was looking for this 167.43 right to the right of it that actually went higher than that candle to hold as support. Then the next level from there is going to be kind of more of the resistance to here. And so you could also see it on the monthly candle. It gets into that level around the 155 level area. So I'm looking for that to be the next level of support. If we can't hold that resistance there, it can come back towards this support. This will be the next level really on the monthly, is around the 135 level. So 167 for me, around 155. And it's a rough estimate there. If you wanted to be a little tighter, maybe you just use this body close towards 154. But in that area, 154, 155, if that doesn't hold, 135 is the next level. One way you could also do this is using monthly levels, right? And so monthly levels on this high here, 155.30. So you see where I'm getting that 155 from? It's that monthly high. And so there you see it. We'll see if Tesla comes back to these levels. And if it can't hold 135, it could easily be back towards even 100. Who knows? And if it comes back towards 100, I mean, that's an epic fall for Tesla. And one thing to note is also that there's a lot of traders that are now caught underwater. So a lot of traders that bought after that first stock split, they were like, man, I'm going to have Tesla 10 years from now, and it's going to be $10,000. Kathy Wood said so. Well, you guys see where Tesla is now. After 2 years of investing in Tesla, you could literally be underwater now in Tesla if you bought after that stock split. And so that just goes to show me that you got to be careful in names like this, long-term investing. If you don't have the right timing in long-term investing, guess what? Buy and hold doesn't always work, team. It doesn't always work. Clear example.
Yeah.
Here on Tesla.
Yeah, I mean, especially, with the type of year that we've had, it's just been unfortunate. I talked to my lovely cousin yesterday. We're talking about investing money. Mm-hmm. And thankfully, she's been investing for quite some time. So her average on the SPY is pretty good. But she asked me the question, I'm like, hey, where do I put my money now? And I'm like, I have no clue. I don't know anything about macro, where we're headed, this, that, the other, right? All I know is, hey, average in. And it's worked in the past. Will it continue working? Yeah, but thankfully she's young enough to where, if it takes 20 years to break even, she'll be okay because she'll be averaging in and it'll help her out in that sense. But yeah, I mean, for some elder folks like my parents and different things like that, it's you got to go into some other areas that might be a little bit more secure, if you will.
What I would say to those traders that are like that, Zunaid, and they're just looking for ways to continue going.
Rejection.
It's the deeper the time frame, probably the better they're going to be looking at things. So even for them that don't really care about the fluctuations, right? They're just trying to figure out, where do I average in? You could even use a yearly chart to help that, right?
Yeah.
And so coming in on yearly lows is not a bad outlook, right?
Yeah.
Because overall, that's giving you a year discount, right? And so
Right.
deeper time frames for the deeper investors. That's what I say. If you're really long term, you should be looking at those monthly charts. Monthly charts would have gave you a good opportunity to time market pullbacks like you're seeing on the SPY, right?
Yeah.
So those get you around it.
Real quick, give me a minute. I'm going to go grab something. I see our guests in the back, so we'll get the interview started with Kevin in a moment. But just a quick update, I did go ahead and go short once more on Apple, as it did go ahead and test the 148. But I'm going to stop trading, focus on the interview. I'm going to go ahead and exit out of this. I'm going to go ahead and check something else out. I'll be right back in a minute, pal.
Not a worry. I'll get you started in just a second here. Zunaid will be joining us back. I'm going to just do a little review here on the sectors and industries, seeing the SPY trying to bottom out, but we'll see what happens. Monthly chart has a lot of resistance. I talked about this in the pre-market. 411.73s with that hold. You can see from the daily candle and the monthly candle here that it is holding on there. Let's go to the daily. You see a lot of wick above that. Now we'll see if we get back towards 406, 410s. Right now, we're battling 200-day moving average could act as support. That's 402.51. We'll see what happens in the overall market. Another thing to note is the moving averages are starting to tick towards the upside on the 50. If this can hold the price action here for a long time, we could eventually maybe get a golden cross on the SPY. If you guys are moving average types of traders, you guys are seeing the SPY try to battle up there back towards 410s. Hasn't been able to break the channel and really hold above there. That's going to be a big outlook for the bulls. SPY just continuing the battle here. Sector analysis overall in industries. Everything is in the red from the open. This is very simply how you can get fooled a lot of the times, because what do you see here to the left? You see a lot of green, right? The sectors overall are in the green, all of them. But from the open, they're all in the red from the open. This is why we need to be paying attention also how stocks move from the open, not necessarily overall price. All right, that's going to do it for me today. I'm going to go ahead and head to the back and let my man Zunaid take on over with a nice interview. Like always, I'll change up a little background. We'll get out of the live trading action. Let Zunaid take control. You guys tune in. Hit the thumbs up. Let's keep it going right here.
All right. Appreciate it, pal. And we talk about it so many times that, you know, you can do your own due diligence. But the number one thing that I enjoy about what we do here at Benzinga is you get to have conversations with the executives, CEOs, CFOs, COOs themselves of publicly traded companies. And, you know, we'd love for all 400 of you in the chat to pay attention to this one, because it's probably one of the most interesting interviews that we're about to have. It's something that we all know family members that deal with diabetes and things like that. So we're going to be interviewing the CEO of Dexcom, ticker DXCM. So without any further ado, let me go ahead and invite Kevin. You ready? You can give me a thumbs up. All right, you're ready to go. Kevin Sayer, CEO of Dexcom, ticker DXCM. How's it going, Kevin?
It's going great. It's a great day.
Yeah, it definitely is. And I appreciate you spending time with us here. I'm sure you've got a lot on your docket. But Kevin, before we get to the nitty gritty, I know you had some announcements for the folks at home and to my niece who may be watching. If you could explain it to me like I'm 5, what is it that your company does?
Yeah, Dexcom makes a continuous glucose monitor for the management of diabetes. You know, in the past, people with diabetes used to have to stick their finger, get a drop of blood, and look at a number and decide what to do to make a treatment decision, particularly those on intensive insulin. Now we have a device, a little tiny sensor that sits under your skin that sends a glucose value every 5 minutes to the device of your choice. We can talk to an insulin pump. We can talk to your phone, a Dexcom receiver. Soon we'll be able to go directly to an Apple Watch. And with that data, we enable people to manage their diabetes much better. On top of that, we also enable people to share data with others. You know, for example, so your niece, if she had another 5-year-old friend who had type 1 diabetes and was on intensive insulin therapy, her parents or her school nurse or her teacher could see that data at the same time. We provide alerts and alarms to indicate that action needs to be taken.
Yeah,
we really solve some pretty serious problems, Zunaid, and it really is the reason our company's been so successful.
Well, I'm going to go ahead and cross off the Apple Watch question because that was going to be one of them for me. But I'm going to
Well, and we're not there yet. But let me
I know
just
you're
answer
not.
it
Yeah.
because people are going to listen. The first version of G7 doesn't have it, but one coming in the not too distant future will.
All right. Well, look, I'll go ahead and pivot then. You mentioned G7, so let's go ahead and talk about that because you had an announcement that was made last week about the next generation Dexcom, which is G7, which received FDA clearance. Now, from what I understand, it's the most accurate glucose monitoring system cleared in the US, right? It seems to be the biggest product launch that you've had to your date. Why is this such a big deal? And feel free to correct me if I've said anything wrong here.
Oh, it is a big deal. And it's taken us a long time to get this next generation technology. I think the first reason it's a big deal, Zunaid, is because it's just so much easier to use than what we've had in the past. It's definitely designed for the consumer. The number of steps to put it on are greatly reduced. The app on your phone is extremely simple. It gives you a view to the future. It lets you see what's going on currently. And then you can also go back and look at how you've done over the past several days to make sure that you're managing yourself well. Our accuracy has always been unparalleled. Dexcom's always been the most accurate sensor, and this will be no exception.
Yeah.
It's going to provide people good data to manage themselves. It's much smaller than what we had before, 60% smaller than our G6. And that's a big deal to somebody to have less real estate on their body, on their arm in particular for G7.
Yeah.
And there are lots of other little features, like it warms up faster. It warms up in 30 minutes. We have a 12-hour grace period at the end of the 10 days. So you don't have to change your sensor immediately at 10 days. We have a grace period there. And of course, we're going to make it affordable and get reimbursement and coverage across the board for people who want to use it.
My favorite part, is of course how easy it is to use, and you don't have to stick a needle, especially with younger students. Because when I was doing research for this, I saw that anyone above the age of 2 can go ahead and use it, right? So that's really cool. Obviously, it opens you up to a bigger market, but especially like going back to my niece, if you will, she's not the biggest fan of needles, right? So having something pricked in isn't exactly a lot of fun. So that's one thing that I love is how easy it is for children to go ahead and use, because that's a soft spot for me. But another thing is how you don't have to necessarily play telephone with the person using the device and your doctor, because like you said, you collect the data and it's easy to kind of communicate, hey, here's what is going on with the levels and different things like that.
It's interesting you say that. One of the things we learned during the pandemic, there was a lot of talk about telemedicine.
Yeah.
But for those who use the Dexcom, we have a system where all this data goes to the cloud and is ingested. And for a doctor televisit, doctor has all your historical Dexcom data right there in front of them. So they can sit and have a meaningful discussion with you. And our customers have the same data themselves if they want to take a look at it. So no, you don't need, you literally can make decisions each and every day on your own and adjust your therapy and try and make yourself healthier. Yeah,
because I'm, obviously with health insurance going on, you got to sign up, things like that. I'm about to go get a physical done next month, and they're like, hey, where are your medical records? And I'm like, oh, I got to go back to the old doctor, fax them in, this, that, the other. So that's why I love the pain point that you're solving. But let's kind of move on to, obviously, you have approval for the G7 that you got from the FDA. What are you anticipating for the next, let's say, 6 to 12 months for the company in terms of milestones you're hoping to achieve and guidance that you could give our viewers?
For the next 6 to 12 months, it will be an effort to get this product out all over the world and in particular into the US. There are many things that go into a product launch. For example, now that it's approved, we can go file documentation with all of the reimbursement authorities, CMS for the Medicare patients, the Medicaid programs, our programs that go through the pharmacy with everybody in that channel, and then with all the insurers as well. So we need to get that ball rolling. We couldn't do it till it's approved. We're obviously manufacturing product to load up inventory so we can launch it. We have to work with partners. We talk to insulin pumps, Tandem and Insulet are 2 partners we have on a worldwide basis. Once this is approved, now we can get that to interact with their system. There will be a bit of a delay while they re-engineer their product to talk to G7. So we have to do that. So there's a lot of G7 launch work to get going. We've got manufacturing lines that we've got to turn on. We haven't turned them all on yet because we haven't been selling products. So there's a lot of G7 activity for us on the execution side. And it's not just US, it's worldwide. We're launching this product on a global basis.
I'm glad you brought that global basis up, because to me, the growth strategy obviously is to serve, because it's not like the diabetes is only limited to the US, right? That's obviously not the case.
That's right.
To me, growing in the US is kind of like, hey, you know the system, you know the governments, you know the ins and outs, supply chain, things like that. I would assume, and please tell me if I'm wrong, is on the easier end to go ahead and take care of once you get past the FDA clearance. My question, I guess, is when you're looking to go worldwide, right, in countries that may not have as much of an established infrastructure as the US does, how difficult is it going to be to get your product out there, not just to the consumer, but also in terms of education, to let them know, hey, this is why you need to use this versus whatever they may be using now?
You know, that is a spectacular question, probably a better question than you even know. When you're a company like Dexcom, this is what we do. We don't have 20 divisions with other products and factories all over the world. This is it.
Yeah.
So we have to be very clever and creative as to how we launch in other countries. There are many countries where CGM is an established form of therapy. And this year, for example, in several European markets, we launched a second generation of our G6 platform that we call Dexcom One, that has a few features taken out of it, but it's priced lower, because that's how we could get technology to those individuals. And as we look at these markets where CGM may not be established, a very good way to go into them, for example, is to go through an e-commerce platform, which is how we launched that Dexcom One product in several smaller countries in Europe. And the uptake was so quick that 2 of the countries, literally within 2 or 3 months, said, you know what, let's just reimburse for this and let's make this available for people. So there's a cash pay strategy where you can go in, let people pay cash online, you develop a user base, and then we can go in and educate clinicians and reimbursement authorities and get the product covered for others. But we have to be careful about what we pick, because our resources are limited. We can't just drop these things out of helicopters, and we have to be thoughtful about it.
Yeah, no, that makes perfect sense. And you've mentioned reimbursement quite a few times. Sticking to the topic of worldwide, what's kind of being done to make sure that the product is affordable for those individuals overseas? Because obviously, look, you got to make a penny. You're not nonprofit, right? You got to make sure that you maintain your margins and things like that. But you also have to make sure that the consumer can afford it. What's kind of being done to help with that scenario? And then I'll take a bigger scope after that question.
So, for example, I talked about what the product we call Dexcom One,
right?
Which is a D-feature G6. We charge a lower price for that. In many countries overseas where CGM is well known, there is full reimbursement by the government, and you go through a process, a company, where you bid on tenders and you get approved, and individuals can get access to the technology. What we have learned over time is we need to lower the cost, our operating and manufacturing costs, so we can offer a product at a lower cost in some of these geographies to get it out there. We truly have adopted that strategy. The first evidence is Dexcom One, and we have plans over time to do more and more of that. I think as we look at going even broader and bigger, one of our biggest initiatives as a company is what is our cost to manufacture and our cost to serve, but breaking it down by market rather than just let's look at everything. Let's look at markets and what can we reasonably expect to be, to charge somebody in a specific market, that what product could we offer for that? And you'll see us over time innovate and change things to be able to go more places.
Yeah. Yeah. You've talked so much about, we've covered the worldwide, we covered the reimbursement aspect, and then we've also covered what makes you, one of the things that makes it unique is the fact that it's, more accurate than the previous ones. We've talked about how you can go ahead and you can't see it as much on your, on your body if you're using it. What other things kind of separate you from your competitors in this space to kind of give you the edge to make sure you get the big chunk of the market's cap?
No, it's a great question. I think one of the big differentiators between us and everybody else has been our connectivity. As I said earlier, we were the first to ever go directly to a phone. In fact, we're the first US approved medical device of this nature to go directly to a phone. The FDA literally created the rules for going to the phone with Dexcom. Yeah. And by going to the phone and enabling people to share data within their care network, it's just been a massive change in the dynamic of diabetes care, particularly for intensive insulin users. I was at a gathering Saturday where a grandfather came up to me and he said, "This is my grandson's data. He won't let his mom watch him anymore because she bugs him all the time. So I've been appointed pretty much his caregiver." And then he proceeded to show me all the text messages from his grandson about G7, wanting to know when he was going to get it and how cool it was going to be. That relationship with our customers and the safety we provide them and the, just how much they rely on the technology has really been something that's differentiated us. And then the connectivity to other devices. We've had an open platform forever. We connect to, I talked about 2 insulin pump partners, but we also offer our data to other software apps as well. If people want to look at their diabetes data in a manner different than what we do it. We're fine. Use the sensors and manage your health as best you can.
Yeah, I absolutely love the connectivity part of it, especially because like my father is in the Southeast, his mother is in the West. And, again, having that information shared at ease puts my father at ease. So I, once again, absolutely love that feature on it. Let me kind of back up. And I've got one more question that I'll turn it over to you. In terms of the financial health of the company, what are we looking at? How is it looking?
Our balance sheet is incredibly strong. We have over $2 billion cash. We have grown incredibly fast over the past several years, and we positioned ourselves for scale and growth in the future. We've got several new manufacturing lines coming up in our Arizona and our San Diego facilities. We're opening up a manufacturing plant in Malaysia in 2023. I think one of the most important things with G7 in the future, particularly as we broaden our diabetes reach to type 2 diabetes, pregnancy, we got the pregnancy contraindication lifted on G7, ultimately to the hospital. One of the most important battles for us or things we have to do is scale and be able to build more. So we're doing that. Financially, the company's positioned extremely well. I have a great team that's been very thoughtful and a great board that's helped lead us through that. So we're positioned for future growth, and that's what we intend to continue to do.
Yeah, it seems like so far you guys are doing incredible things. Well, Kevin, we've covered a lot of different topics here today, but before I let you go, I want to turn the floor over to you and see if there's anything else that you wanted to discuss, anything you were hoping that I would ask that I haven't. The floor is yours to talk to our viewers.
You know what? You covered most everything, but there really has never been a better time to be at Dexcom. This product launch is years of development and hard work and sweat and tears by our people. Everything about our previous products improves with this one. Our users are going to love it. But I think the other thing just to note and the other thing to remember, and I'll just share a quick story. I was in a meeting recently with an investor, and he takes out his phone and he said, I want to show you a video. And it was his mother with type 2 diabetes who explained by using Dexcom, her A1C had come down 2 points. She had lost a significant amount of weight and was completely grateful to us for the changes this has made in her life. And I think as we look to the future, we can make those changes in the lives of many and go beyond the scope of type 1 diabetes. And we're finally ready to do that with this new product offering. That's why we're excited about this for a number of reasons, but that's on the list too. It's going to be a great time for us.
Yeah. Putting your head down and making a product that consumers, especially something this important, is great because it obviously impacts their health in a positive manner as well. Kevin, thank you so much for joining us here today. And I look forward to any updates that you have. And if you have anything else to share with us in the future, would love to have you back.
I'll come back. Thank you very much.
Absolutely. Thank you so much. That is Kevin Sayer, CEO of Dexcom, ticker DXCM. And, I started talking about before the interview had started in the sense of like, this is something that is a really cool device. And obviously they're doing really cool things in that space as well with diabetes. And the fact that what I really love is the fact that it works with younger individuals as well, right? If you're older than 2, you can go ahead and use their device and their monitoring system and things like that. And yeah, like there are a lot of kids out there, young kids that are dealing with these issues and they don't want to be, stabbed with a needle just to get their blood taken and different things like that. So love what they're doing there. And the connectivity thing is also really cool that we can communicate all the information to health professionals, loved ones, this, that, the other. I think it really is a solid product. Let me go to Mitch, bring Mitch back if he's ready to go. Yep. You're not ready to go. Yes, you are ready to go. Okay. Well, I wasn't going to bring you up. I figured you could bring yourself up. You know how to use it.
Yeah, I know how to use it at least. Just watching the market, guys. It looks like lunchtime. That's what it looks like. It looks like I've been asking this for a long time. If anyone knows the good New York lunch spots where all the hedge funds like to eat, Got to share it with Zunaid and I because we like to eat also, and we need to get out there, get the down low, because it seems like it's one of those days. Market's coming down fast here and continuing to come down fast. SPY tried to get a little bit of a bounce there, went to 405.50 and rejects. So it looks like the leaking has continued here, and I'll look to see if we cut through the 404 now. I'm going to be looking for that good power hour towards the close, 3 o'clock, 2 p.m. Anything past 2 p.m., I'm going to start watching to see if I can catch some swing trades going into tomorrow with a nice little bullish tune. As you get what? A whole bunch of leaking, a whole bunch of like red from the open, a lot of traders getting stopped out, and then you could get a nice little rip towards the close. And I'll be looking to see if we get some maybe buying imbalances towards the close. We'll see what happens.
Looking at Apple right now. So I got stopped out here. Let me go ahead and share my charts once again. What is it? I did go ahead and get stopped out on my short. It looked like while I was doing the interview, because you see it kind of popped up and then it came right back down. So I decided to go short one more time. We'll see if it goes ahead and fails. And if it does, then hey, so be it. But I am short once again at the 147.59 level, I believe. Looking to cover around 146.79. Might even try to go for 156, or excuse me, 146s, but we'll see if we get that far.
This is just too far. If Goldman's really saying that, they say that potentially a 0 rate hike, that they wouldn't raise rates tomorrow. Archie, that's a little bit too far. If Goldman's saying that, I don't know who's saying that in Goldman, but I would think that's a little bit way too far fetched. But hey,
yeah,
to each his own, I guess. Whichever analyst is saying that, I'd take that with a big grain of salt. A 0 potential hike rate, maybe 25 if you really wanted to battle, right? Maybe you're like, oh, maybe they go 25. 25 would definitely bring us up. 0 would be a freaking move to 420 in an instant. So I don't think that's going to happen. But yeah, maybe do whatever the opposite Goldman Sachs is saying. Yeah, it might be true. But I mean, I would say maybe 25 gets on the table. And just alone that's a positive move for the Bulls, right? If 25 becomes a question. I really don't think they're going to not raise rates at all. But hey.
Let's see where it
SPY
is.
Just dragging. That's why I wasn't even feeling so bullish, because it seems to me like the action in the intraday just leaks out traders, and then all of a sudden, boom, big rise towards the end of the day.
Yeah.
It's a pattern that I'm seeing constant. And with that being said, sometimes you just got to wait for that pattern to change. And I'm looking for maybe that pattern to change, but today's not that day. Quick leak in the open and just leak.
Yeah, and there's Apple to the downside again.
Yeah, I'm trying to see if there's anything that's going to turn into the green from the open. The only one that's trying to move up here from the open is oil right now. You can see XOM on the pullback. That's not looking like the worst type of stock there. You can see it right here, trying to pull back, trying to get back up there towards those intraday highs, towards 108.50s. That's the only area I see trying to catch a little bit of a bid here. Even healthcare is in the red today, and it's crazy. There's not many times where I look at my sectors and they're deep into the green overall, but from the open, red.
You've got like a 10% move that happened on Tesla from the highs in the pre-market to the lows of the trading session. So that's been an incredible mover.
You know what's incredible? Well, my man DG beats AB in the chat. DG, you know it. Shout out to you, DG.
Man, look, that's a mark of a true professional with Mr. Green. AB?
Hey.
I don't know.
We're going to have to get on him. Chat, buzz him.
Yeah, bombard his email.
We'll do it one day. We'll have fun with him. You got to have fun with my man AB too. I heard he's been working on some content in the background. Stay tuned, team. We got some big things for you guys. 23 right here, Benzinga.
How that goes. All right, let's see what we've got. Yeah, looks like Apple's trying to creep back up. Maybe it'll try to reject off of this 148. If it does pop up back above, would not be surprised if it tries to make a run at the 149s. And then let's see what the SPY is doing. Consolidating right here.
We need some sponsors, right? A little body armor. Sponsor us. You need some body armor for this market.
I would say, never mind. Nope, not gonna try to get in trouble. Nope, we're good. We're good. But here, look, here we've been consolidating since about 1040, right in this range here. So keep an eye on which way we want to break to the upside or downside on the SPY. And of course, we've got more numbers and more conversations happening throughout the week as well. So, you know, the action is not done for the week at all. Nowhere near it.
I'm trying to find some relative strength out there in this market. It's not easy. It's more relative weakness out there, but just a bunch of leaking out there. Ollie from the open getting smacked down. So if you're looking for some weaker stocks, we can also take a look into that. Burlington, did that finally break that big old trend in Burlington? Could be true. Burlington has made a huge move lately. I'm going to keep watch on that stock. I was trying my best not to get in front of it because it has been pushing, but now it's about the third rejection from that 200. Would maybe look for one more move towards 200. But Burlington Store is something to keep on watch longer term, back towards the downside. Just going to keep watch on that daily move. You can see here, I'll put my charts up right quick for Burlington. Been battling that 200 for a while. I have no idea why it went from 110 to 200. I feel like that's a little bit over exaggerated there. We'll see what happens on that name. Apple back towards the red in the 5-minute. It tried to get back towards 148.
I'm gonna head out, get back to my other responsibilities. But Mitch, always a pleasure, my man. We'll see you later. Mr. Green in the back, hello to you, and you guys have fun. See ya.
All right, have a good one, Zunaid. We're waiting for AB to join. He should be here in just a couple of seconds, and then we'll get you guys over to Benzinga Live, starting up at 11:30. But definitely going to take a look to see if we get some of that later action that I've been seeing a lot of the time in the SPY. I'm telling you, 2 to 3 p.m., I'm going to get back into the hot seat and see if we start actually getting another rally. Just been seeing a lot of the institutionals, I feel like. Just quick retail washouts later in the day getting picked up by institutions. Yesterday showed me a lot by that 3 p.m. move that we just broke out and then just started pushing strong here. So we'll see what happens. 410 acted like a huge resistance. So in the long term, we'll look for that to act as some resistance. And if we can get above 410, maybe we won't be looking too bad in the SPY. Overall, definitely energy is probably like the only thing I'm seeing come back right now. Healthcare slightly into the green from the open, but some of those are pulling back. One that was interesting was the Goldman Sachs upgrade there on Pfizer today. Let me take a look how Pfizer's performing now. Saw it earlier. It was looking decent. Let me take a look there at PFE. You guys can see that's pulling back after a nice little push up here. Daily chart, this thing's been an absolute monster on the monthly. Could pull back here, need to kind of fill in some of this gap, especially when Goldman's jumping in there. But Pfizer, not the worst stock here today. Healthcare hasn't been the worst, right? I mean, just look at XLV yesterday, gave us a nice opportunity on that pullback. Today, also pulling back there towards that range. Yesterday's action was all the way down here towards the 138s. We got up towards 143 today. So we'll see that area. Definitely one of my strongest sectors to watch. Healthcare is right now. It looks good. We'll see what happens. Now that the SPY's put in a couple of 15-minute candles here, you can start trying to maybe use those levels to give yourself a little bit of the bogey for the reversal to the upside. I'm being patient more and just waiting on the sideline, but I could see why some traders are starting to think that this 404 is starting to hold on the SPY. Now that you got 1, 2, 3, 4 candles all kind of wicking near that 404 mark. We'll see what happens. All right, just give me 1 second. We'll play up a little Benzinga Pro trailer. We'll be right back. Got to get my man AB in here, take over the show. We got this.
Breaking news.
U.S. Treasuries.
In the case of nuclear or radiological fallout, people living around the desert.
RTW retail wins hitting a high of 45 cents. Seeing some chat room mention on RTW retail wins. Coming up at 2 p.m. Eastern Time today, the federal budget balance for January. Earnings after the close today from EFX, Equifax, MGM, MGM Resorts, NTAP NetApp, and US New Skin, PS Pluralsight, TRIP, TripAdvisor reporting after the close.
All right, team. We're going to be getting you guys over to Benzinga Live. Just getting started up. AB is setting up right now as we speak. So he'll be with us in a few seconds, running a little bit late. But I got you, team. No stress. We'll take a look to see if the SPY finally bottoms out at the 404 and we get ourselves a little bit of a rally. I'm not feeling too confident as I feel like it's lunchtime, but that's just me. Maybe I'm getting hungry here. I've been on for like 4 hours, so that happens. There's AB. Sound the alarm, team. He's here. The king is taking control. I'll bow down and get to the background. The good old mute button. The good old mic not on button. We'll get him rolling here. He's on the battle. He needs to fix it up. But guess what? I'm in the background. I should just let DG take control. I think he was ready to run the show for us today, but we'll let AB bring him in a second here. I'm sure he's ready to go. Has some good ideas out there, and I know that he likes to use a lot of the pivot formula. So we'll take a look at that. There you go. You're back, AB. I got you.
All right.
Sound the alarm. We got this.
There we go. Happy Tuesday, everybody. Welcome back to another episode of Benzinga Live. It's Tuesday. You know that means we're going to have my man David Green on. We might have a special in-person guest, special surprise guest later in the show. If you guys notice, my hair is looking a little crazy today. I wore my beanie into work today because it's very cold out here up in Detroit, up the eastern part of Michigan. So I wore my beanie into work today, and then it just messed up my hair. So I hope you guys will bear with me today. But we will be talking, of course, biggest story of the day so far is about CPI. Market absolutely ripping off that cool report this morning. Another sign that inflation is easing. You had big news in Moderna. Tesla continuing to sell off. So overall, some good market volatility. Like Mitch said, though, it is getting to lunchtime, so we may be slowing down. But I've got my man DG, Dave Green, hanging out in the background. So without further ado, let's go ahead and roll that intro and get my man David Green on the show.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
All righty, Mr. Green.
Everybody.
How are you?
A little frazzled, but all good.
A little frazzled. What's going on? Were you caught short this morning?
No, it was a great day. Just a lot of action, a lot of stuff going on. We had a great pre-market, and we're kind of just hanging around now.
Great day for me too. I had some QQQ calls I was holding into the day that I sold this morning for a pretty little penny, and then I took some of those profits and bought some Tesla puts that are up nicely right now too. So I'm double whammy. I'm double whammy in the market right now. Knock on wood.
Tesla, absolutely horrible, right? With everything else. I'm just trying to get my screen up here so we can see.
And we talked yesterday about the fundamentals of that. You know, I don't know if you saw the news story about consumer sentiment slipping into negative now for the Tesla brand, all this stuff. But I mean, just from a chart perspective, you go to the daily chart on Tesla and you zoom out, it's an ugly chart, and it doesn't look like it doesn't start looking any better anytime soon to me. At least until like closer, I'd say, to like the one, or I'll let you give us some levels here. If you're
we have, I'll tell you right now, we have a gigantic level coming up. Okay. And it's not far from where we are right now. This is a monthly chart, guys and girls. And the level is, let's just call it 160. All right. This is a monthly 65 EMA. That is a huge level. And I'm not so sure it's going to hold. This thing is just horrible. But if we do get any kind of bounce around this 160 area, that could be a little spot where we get a little traction, maybe going back to the upside. Something I'm watching very, very closely. If we break 160, technically, I don't have a level down to $73.50. So, that's a long way down. I don't think we're going to see that. But this is a monthly chart, guys, coming down from 324. So we're right there, Aaron. We're on to preface it. If this thing goes to 160, which it certainly looks like it's going to, and holds that level, it could be a little spot where we get a little bouncy, but that is the only level we have. I've been looking at that for months, and we'll see. We'll see if that's a level that holds. It's gigantor. So we'll see what happens. I tell you, this morning was just, and I want to show you a couple of things, guys, this morning, pre-market. And one of the things that we have on our charts is last week's highs and last week's lows. So I want to show you this. This is what happened pre-market when the number was announced, Aaron. This is last week's high in Apple, 151. I mean, it hit it to the penny. See that? Hit it to the penny, went down $2.50. So that was one of the trades. Look at AMD. I'm going to show you the same exact chart. Weekly, last week's high, hit it to the penny, nothing but down. And look at Netflix. This was a really spectacular one. There it is. Hit last week's high, which was around 329, went down $6.50. Isn't that incredible? I mean, these are not levels that I put in after, to brag and see how good these was. But all three of those stocks hit monthly last week's highs and gave $3, $4, $5, and $6. Now they ended up going higher than there, but that was the trade early in the morning. And I know I heard I don't know who was on before me. I don't remember his name.
Money Mitch.
Spies with the same Mitch. Yeah. In our morning meeting this morning, and again, forget about this. This was, a nice far from moving average trade. But when the market opened, we were targeting this 410 level, right? That was the little trend line. And we said if we broke 410 in the spiders, we'll probably get a significant pullback from there for the rest of the day. And we did. And now, looking at our 5-minute chart, we'll see. We'll see if the spiders can base here. We just made a high around 405.50. Maybe if we can get back above that 405.50, we got room to the upside. We'll see what happens in the next little bit. Mitch also said it's lunchtime, and it is. So if you can look at the volume in almost every stock now, and it's just kind of dying out. But it was just a spectacular morning, technically. Everything did exactly what it was supposed to do. And now everything slowed down. It is lunchtime, so we're kind of just hanging out. But I agree with you on Tesla. That stock has just been absolutely horrendous. We'll see what happens. What's up, Chris? We'll see what happens if we get to that gigantor monthly level.
Yeah. So, okay, well, let's see some other stocks that have had some volatility. Of course, Moderna with some news
Yes.
today. Have you traded Moderna at all?
Yes,
today?
we have a couple of times. I'll show you right now. Okay. So first time we went up to our pivot point early in the morning, about 201. Okay, we did a little short in there. It was stretched out, and I think we got like $2 or $3 out of that. This is clearly our far from moving average trade, which if you guys don't know what it was, this thing had like a 90 RSI at the time. Got up to 208 and pulled back, 6 or 7 points from there. And then we got a little trend trade when it hit the first time down here around 201, and we took 3 or 4 points out of that. All technical analysis, guys and girls. Aaron, I've shared it before, but I'd be happy to share again anything that you guys want to talk about. Goldman Sachs calling for 0 rate hike. That is not going to happen.
Yeah, it's probably going to be 50 basis points is my guess, but that's just.
No, I agree 100%. And the whole thing with this was we were 2/10 better on the CPI. It's not like the CPI came in and it was 1.5 points better, right? It was 2/10 better. And anyone who overreacted this morning and bought into this stuff, they didn't do well. I mean, it was just set up for a short, based on the reaction that the market had. So tomorrow's a whole nother thing now, right? Let's see what happens tomorrow. I have no idea. I'll tell you where we are technically in the spiders now, okay? Look here, we bounced off this, our pivot point was around the 403.50 level. So we kind of held that level to 403.50. I think if we break that, our next level is down around 401. So tomorrow's probably going to be, another wackadoodle crazy day. They'll make the announcement at 2 o'clock. He'll come on at 2:30, and we'll see what happens. Let me show you one more. I want to just show you our weekly chart. It wasn't monthly. I think it was monthly. I don't remember what it was. Yeah, it was monthly. So we spiked up to that 411 level, and now we're just sitting. Check this out. Exactly at this little support level. Exactly 404.50. So this is a pretty important level here. If we break, I think we can see that 401 level or so. So again, we are just reactive rather than proactive. We just trade based on what they give us. That's a contrarian view from Goldman Sachs. Yes, it is. Guys, if you don't know me, I take anything that anybody says, analysts or anything else, with a grain of salt. That's it. To me, analysts are like a-holes. They all have an opinion, right? And everybody has one. So.
Yeah, I mean, the analysts, they're funny. They get bullish. Like, I remember during the bull market, right, all the analyst price targets for Snapchat and stuff were $120 a share. And then, now they're like $8 a share. And it's like, wait, I thought you guys loved this. I thought you guys loved this stock.
They're notorious for upgrading stocks at highs and downgrading them at lows. So that's usually what happens when you look at things like that. So again, we'll see what happens tomorrow. What we'll be doing, that what we do every single morning is, especially when the Fed comes out. I'll tell everybody this: if you're going to do anything in the SPYs or anything else before the Fed comes out, make sure it's in options. Don't get caught in any stocks because you have opinion about it, because that will not work out. All right, here we go, Tesla, guys and girls. All right, so I got a little bit out in Tesla, just markers at 160 and 159.70. Those are the two levels we have. 160 is the big monthly level, and 159.70 is a little bit below that. So let's see what happens here in the next couple of minutes if we get to that 160 level. I'll be very interested to see if we get a bounce off that, because it is gigantor. We're going to play it for a little bounce first time down there. So let's see if we get that in the next couple of minutes while we're hanging out here. We'll see what happens. Snow on the 200 EMA. Let's take a look. 150 in snow. So, Aaron, and for everybody out there, I'll give you a quick overview of all the moving averages that we use. We use a 9, a 15, a 30, a 65, and a 200. Those are all exponential moving averages. And basically what we're doing here is we wait and we see if stocks can hit any of those moving averages, if they move enough, upside or downside, and that's what we put our trades in. Tesla popping. Let's take a look at Tesla.
It's the opposite of popping, to the downside.
Oh, here it comes, guys. We're only 70 cents away. Yeah, it's popping down, Mike. So
I sold my puts that I was holding at the 160 level because I thought, when we were talking about that level, I thought it might, get down here and bounce. So who knows?
Yeah, we had 160 puts in this for last week, and we didn't carry them over. I think they were 60 cents and like $8 now. Let me take a quick look. See where they're trading now. I know we bought, guys, didn't we buy them for like 60 cents last week? The Teslas. 160 puts. No, they're $5 right now. We had them last week. They expired for 60 cents. And again, guys, I'm going to want this to go fast now. The longer it takes to get here, the less likely I am to get into a put.
So you're talking about playing it on the upside or the downside?
What's that?
You're talking about playing it on the upside here for a bounce?
Yes. Yes, because we're coming to that gigantor monthly level. So we'll see if it holds it. We're like 50 cents away. Hopefully we get the spike down right now. If it's going to happen, I want it to go really fast. If it doesn't happen fast, then all bets are off and we can blast through that monthly level. So let's see. We're hanging around 60, 60, 60, 60, 60. I wanted it to spike right down there, guys, because if we spiked right down there, we'd be getting this little bounce already. And we would have got 70, 80, 90 cents already, right? So it got to 160.45. It missed us. So we'll see what happens in the next couple of minutes. My next level in this is really, I don't even want to talk about it, but it's down like at about 75. So look, we might have missed the trade already. We'll see what happens. We'll give it another couple of minutes and we'll see what happens. Spiders broke down. So again, look at this, guys and girls, okay? This is our 30-minute EMA. We rallied into spiders from 404 up to 405.83 and could not get above that level. So if we break these lows, I think there's a good chance we could go down to the 401 level. Let's see what happens in the next couple of minutes. But everything we do is technical, Aaron. I did a live with Public this morning, and I think they have over 2 million subscribers and stuff.
Yeah, and they're big over there at Public. We're friends. We're friendly with Public.
Good. We're starting to do. Me and Peter's starting to do something at least once a week with them. We started last week. We do like a 9:10 to 9:30 thing every morning, and one of the things we talked about was the spiders, and if it broke 410, it was a good short. And I talked about a bunch of different things. But, they asked me, what do you think about the CPI number? And, my answer was, I don't care what the number was. We're just going to react to what it does based on, our technical analysis. So, yeah, we're breaking down a little bit here. This would be a level, guys, where I would definitely buy some SPY, 401.46. And I'd be a little aggressive down there. So let's put a little order down there. I like that a lot. How are those 402 puts printing now, guys? 95 cents. We bought some SPY 402 puts today at 60 cents. And they're up to around 90 cents. So let's get an order out in the SPYs. I really like this down here, guys, if we stretch down there. I'm going to put a full trade out at 401.50. That could be a spot to be aggressive, guys and girls. That would be down a lot from where we are right now. So let's get it out. You never know. Let's pop that out there. Full trade, 100%. Oh, God, I bought it at the market. What the hell is wrong with me? I put the wrong order in. Let me just get out of my mistake. If you ever get into a mistake, guys, just get out of it. All right. What did I say? 401.50. Let's pop that out. 401.
And as always, guys, if you've got stocks you want us to check out, well, we've got David. If you want David to, put his stock into his magical computer that gets him his levels, now's your chance.
There you go. Let's talk. Let me try to get this out. Oh, you know why? I'm hitting sell. What am I doing in the spiders? I don't know what I did. Give me a minute. Okay, let's get this out, guys. 401.50 aggressive. Let's see if we can spike down here. Tesla's taking forever to get here, though, guys. So it might not hold at those levels. All right, I want to be a little aggressive down there in the spiders, guys. That would be a big move down. Out any sane person going down there. Going down there. Where are we going? All right, let's see if Tesla hits us here. Kind of hanging. Again, guys. Oh, it missed by 5 cents, Tesla? No, no way. Ugh. Look at that, guys and girls. Missed it by 5 cents. Usually, guys, when a stock comes close to hitting one of our levels and misses it, we're going to cancel. So we're probably best off looking for a far from moving average trade in Tesla. No, just missed that level. Let's give it a minute. See what happens. SPY's bouncing a little bit here too. Yeah, anyone has any stocks you want us to check out, we will certainly take a peek.
So, okay, I want to go back while we're waiting for people to throw in some ideas about the stocks. Going back to just like the Qs or the SPY real quick. So we ripped off of the cooler inflation. Now we've started to sell off. At what point would you start wanting to think about going long again, that now this sell-off is an overreaction, and hey, we should be up at least, a little bit today because the inflation numbers was better?
Yeah, I'm looking at it right now. My SPY around 401.50. That's our 200 EMA moving average.
401.50.
Yep, 401.50. So we'll put a little bit out there, and if it holds, we can get a little more aggressive for a bounce. Because then you're talking about we're going straight down 3 points, in the spiders, which is a big move. Technically, you should get a little bounce off that level.
Right. I mean, that's where my head's at now, is because we opened up 3% on the SPY, kept moving higher. Eventually, you're going to get that sell-off. Now we've gotten that sell-off, and the sell-off might be, in my opinion, a little bit too much, or we're getting there. So, all right. And look, we've got SPY continuing to move lower. So if we get down to that, 402 flat level, will only be about 50 cents. We're about 75 cents from that level right now, Dave.
Exactly. Yeah, and we'll be straight down almost 4 points. Again, it doesn't mean it's going to hold that level, right? We'll see. It's a level that I want to try getting long. And again, we'll have like a 50-cent stop in it. And you can see Tesla broke those levels, guys, because it took so long to get there. So we'll see if we get a bounce from here or not. The pivot point was right around 159.70. But again, the stock is just absolutely horrendous. We'll see. We'll see if this is really a level or we keep breaking down. I don't even have a position now, because I just want to see how it reacts from here. So the beautiful thing about what we do, guys and girls, is we don't ever have to be forced into doing anything. We hang out. That's it. So just like that, I changed my opinion in Tesla. Let's see what the next move is now. because it's certainly not getting a big bounce from here. Spiders are coming in pretty strong here. Let's see what happens in the SPYs. Again, we always want speed, guys, so the faster something happens down here. And again, some trades we're going to be wrong in, and we have stop orders. That's just the way it is. Sal, are you in Tesla here? Are you doing anything? I don't want you guys to get hurt in this thing. Anybody.
I mean, it's ugly right now. Tesla.
Oh, it's horrible.
Down another buck, fell through that 160 level. I mean, what are we? Yeah, I shouldn't have. Damn, I shouldn't have sold the puts. I had 160s. I sold. All right, whatever. I sold them at 430. They're at 510 right now.
Big deal.
Not a big deal. Not a big deal.
You made a great trade. So the only way I will get into Tesla now is if I get a relative strength below 20. Okay, that'll be a nice far from moving average trade, and we'll look and we'll see what happens. Right now we're $2.40 away from the closest moving average. So let's see. Hi, and everybody else. I just had markers in Tesla. Didn't you guys hear me? I had markers. I didn't say to buy the stock. I had markers. Keep it small.
All right, I'm being patient, Dave, to try to get down to that 401.50 level, but I'm getting a little itchy to get a little long Tesla. Not Tesla, long SPY here.
I know. We're kind of sitting right in the middle of everything right now.
I'm itchy.
Let's wait. I want to wait a couple of minutes. See if we can get What you can do here now, Aaron, we're kind of sitting in the middle of everything. You know, if we can go sideways here a little bit and throw in a green bar, maybe it's a spot to buy. But, I mean, you can see how good that level is. We missed it by 25 cents. So, here's the trade I was looking for. If it got down there, it just spiked up $1.
Right. And so what I'd be looking at right now, Dave, is because I might look at just some calls that expire tomorrow, slightly like $405, $406 calls, slightly out of money.
Let's check it out. Let's see where they are. Let's take a little look. 405 calls expiring tomorrow. I need for a trade. Certainly, if we get down to 401.50, I would look. 405 expiring tomorrow at like $3. So that might be good for a little trade, But that was a spot. So here, guys, I might not even like this now again. Let's see what happens. The next spot below that is around 399, 398. And one thing I've learned in this market, guys and girls, okay, these things can keep going forever. So the best thing about what we do is we're not forced to do anything. I'm not going to know. I might not like the spiders at that 401.50 anymore. We'll see what happens.
I feel silly. I didn't even realize that the Fed announcement is tomorrow. When was the last time we had CPI and then a Fed announcement the very next day?
Probably never. We're close to it. So we're coming down from 161 in Tesla. I'm going to put that, certainly, guys, put out a little marker at 159, at 158. That would be $3 away. I think that can give us a nice far from moving average trade. Guys in the room, I was talking and I said, I'm just putting markers in Tesla. Okay, this thing is absolutely horrible. Let me look at the SPYs. All right, SPYs are coming again here. So let's put it this way in the SPYs now. I am not as confident in that level anymore. So I'm just going to cut my size in half and see if we hold that level.
Order cancel.
We'll see, only because we came close. 158 on Tesla is the monthly 50 small EMA. Okay. All right, we'll certainly take a look there. Let's see what happens. I want to know how everybody who is actively trading out there is doing today, because I know some people who are just absolutely getting wrecked, thinking that things couldn't go lower than where they were when the market opened, right? A marker is an alert. Yes, dude. A marker is an alert. When I put one share out, that just means I want to know if the stock gets to that level. Now, Tesla's almost got to a 20 RSI here. So if we get to a 20 RSI, we're $3 away from the closest moving average. We'll go to a 1-minute chart, look for a green bar, and grab a little bit for a trade. Hopefully it'll happen. I'll walk you guys through exactly how to do it. So let's see what happens in the next couple of minutes here. Same thing with the SPY. I'm cutting my size. I'll give it a 50-cent stop. That's it. Yes, that's the next level we're looking at, Voodoo. Just technically, our next level is down around 399, technically. So the slower this thing goes down to, again, I always want speed on all my trades. The longer this takes to get to something, Aaron, the less effective the trade is going to be.
Yeah, and I've noticed that too, just on days in general, where it looks like, you know, the levels are taking a while to hit, and the stocks are kind of just moseying around. They're like, you know, just ambling around. They're not that excited to get to those levels. It's okay on those days to just go smaller positions, like you're saying.
Yep, 100%. I have a couple of people in my room said they had the best day ever today. So, did Tesla give a little bounce here? Yeah.
Yeah, finally. I mean, eventually, right? It's not going to go. It's not. It can't go. I mean, I don't know. It seems like it's been going down 3, 4, 5% every single day. So we'll see.
Yep. And again, we broke that gigantic level. We'll see where it closes, right? But that gigantic monthly level is around 160. So we'll see. We'll see what happens for the rest of the day. It certainly has looked like crap for the longest time anyway. So see how the spiders bounced again. You know, so that was the spot, man.
Yeah, I mean, why is that, Dave? That sometimes they don't necessarily. Is it just from people cheating that people know they're getting down to this level and they want to get in early?
No, I mean, listen. Sometimes I'll cheat on something, you know, by a couple of pennies when it moves really far. But the bottom line is, you know, we missed it by 25 cents, so really wasn't that close. What I'd be looking to do now is do a short in the spiders if we rallied up, you know, maybe even a trend. Certainly back up here on our 30 EMA. We'll definitely look to get in on the short side now. And look, we'll see where Tesla closes today, right? I mean, it's hanging. Let's see if it gets back above that 160 level, and you know, we'll see what happens. You know, we broke it by a little bit. Now we're getting back up to it, so we'll see. We'll see what happens for the rest of the day.
All right, Dave. Well, it is about noon. Let's see if we've got any tickers, any stocks flying from the chat. Otherwise, we can take a second to talk about Wall Street Global Trading Academy, talk about Green Room Live.
Okay. Yeah, and the video bounced right off that pivot point. In the video, guys, right around 180. Bounced off that pivot point for a couple of banana skins. No, the Fed meeting is tomorrow. I would invite everybody into the room, but next week is our boot camp, so I can't do that. But I will offer everybody a 5-day trial, like as I always do. The week after next, you guys can send me an email at dgreen927@yahoo.com. Wall Street Global Trading Academy, guys. We sell our course there. Our course costs $299. That's WSGTA. For $300, you get our course. It has over 150 hours of archives. It is the best course out. Anthony said. You get continued mentorship with us every Thursday night, live. Me and Pete, the Einstein of Wall Street. He comes every Thursday night to mentor you guys. You only have to pay for the course once, and you get us for the rest of your lives. That's all I got. Next week when we come in, I could invite everybody after the boot camp to come hang out with us for a week. On days like this, the last thing I will say, guys and girls, is just cut your size. Be careful. Certainly wait for technical analysis. This market can go against you longer than we can stay solvent. We've learned that. So just be careful out there. And as always, guys, Benzinga Pro, it's a tool that I use. I could not trade without it. It's important to me as all my moving averages. And I know you get a 2-week free trial. Yes, Twinkle, Einstein of Wall Street is my partner, Pete Tuchman. We have known each other for 35 years.
Too long.
Too long. We got together a couple of years ago now.
Have you seen, I see that they've got Pete on a commercial now. Have you seen that one?
Yes, Pete's all over the place.
I know, but there's some commercial they play all the time on CNBC, and it's like just some B-roll shot of him walking down. I just want to make sure he got some royalties from that. I want to make sure he got.
Who knows? Pete's got 80 million things going on, so God knows.
I thought you were going to say he's got 80 million in the bank. He doesn't need any checks.
Quantum, it is a one-time course. That's it. Costs you $299. You get us. You get us for lifetime. The course itself, guys, it's the best course you'll ever spend $300 on. It covers everything from the beginning to advanced trading to options. It's hours and hours and hours long. And yeah, we give you your money back if you don't like it. So look at Tesla now, guys. Okay, we see we're back above that 160 level. So let's see what this does by the end of the day. Anyway, it's always a pleasure to be here, guys. Thank you, Aaron. Thank you, Claude. The course was great. I appreciate it.
Of course, David. It's always a pleasure to have you. I'm glad you are feeling better. And I'm jealous of the nice weather you guys are probably having down in Florida right now. It's getting chilly up here again.
It is cold today. It's 81 degrees at this point.
Oh, man, I'm so sorry. It's only 25 degrees here. I'm going to have to come crash. I'm going to have to come down there, Dave, some point this winter.
More than welcome anytime.
Awesome. All right, well, Dave, enjoy the rest of your Tuesday. We'll chat next week.
You too, Adam. Always a pleasure.
All right, y'all. That was Dave Green, Wall Street Global Trading Academy. I'll go ahead and drop that link in the chat. Check that out if you want more from Dave and his partner, Peter. Quick rundown agenda for the rest of the show. It is a couple minutes past noon Eastern. That means we will get to our midday lunchtime and check in on the markets, on the indices. I want to check in how crypto's doing today as well. And then here in about 10 minutes or so, we'll be joined by a surprise in-person guest that I'm excited about, talking about some top news stories with that guest coming up. And then we'll just be hanging out for the rest of the day. I might make some more live trades just because I've got some money now in my little YOLO Robinhood account. I'll go ahead and just share that screen right now. Good day so far. So I mentioned I went long going into today, playing the CPI. I just had a bunch of like QQQ calls. Sold those this morning. Put some of that money into some Tesla puts. Sold those puts. Bought some different Tesla puts. Just bought some SPY calls while we were on with Dave. So going to be monitoring these SPY calls. I might sell them if SPY ends up rallying throughout this afternoon and ends up going up a bunch. But really, I bought the SPY calls for tomorrow's Fed announcement. And I'll explain my thesis here. And again, I want to be very, very clear about this while I talk about this trade, that this is a YOLO type trade that I made with money that was A, profits that I made today, and B, money that I don't mind losing if I'm wrong and the market goes down tomorrow or is flat, I'm going to lose all this money. But essentially, my thesis here is that I think a 50 basis point hike is pretty much all but guaranteed. Now, you can make the argument to say, okay, Aaron, so say the Fed goes 50 basis points tomorrow. That's the expectation. So what? What's the big whoop? The only way the market actually outperforms is if the number comes in lower than expected. If the Fed says, okay, we're going to go 25 basis points instead of 50. What I would say to that, or the reason I guess I don't think that's the case, is because and it's kind of in relation to what we had with the CPI today. And this is all just in my opinion, or really vibes. Like I don't really have any data to back this up. But when the expectation is for already the data, the numbers to be moving in the right direction. So what I mean by that was for today, for example, the CPI was already expected to be lower than the previous month's CPI. Then if that number is confirmed, even if it's not lower than expected, that's bullish for the market. So just like tomorrow, the expectation is 50 basis points. That's lower than the 75 basis points we've got in the past 4 or 5 rate hikes. So if we get 50 and it's just in line with market expectation, it's not any better than market expectations, I still expect a strong market reaction because, again, that's better than what we got the past few times. And again, I've brought this point up on the show before. At least in recent history, over the past 30 years or so, anytime the Federal Reserve has started slowing down the interest rate hikes, so going from 100 to 75 or from 75 to 50, right, going to a smaller one than the previous one, that's ended up leading to cuts. So everyone's saying, oh, just because the Fed goes from 75 to 50 doesn't mean they're pivoting. I understand. They're still raising rates, still technically hawkish. But for like all intents and purposes, it kind of is a pivot, right? You kind of are saying, hey, we're not as worried about inflation as we were a few months ago, so we're not going with as big of a rate hike. If you can't recognize the slight shift in you know, as far as on the spectrum of extremely hawkish to extremely dovish, if you can't recognize the slight shift on that spectrum to saying, okay, we can afford a lower rate hike here, I do think that is notable. So again, I'm playing these SPY calls for the announcement tomorrow. There's a chance that You know, again, if SPY happens to rally like 1.5% this afternoon and I'm up, you know, X $100 on this call and I don't have to sweat it overnight, I'll sell them. And I'll kick myself probably if SPY's up tomorrow, but I'll be willing to make that call when we get there. So we shall see. And I'm kind of hedged here in a way. So I bought these way out of the money Tesla puts specifically because Dave was talking about that very important 160 level. And I thought, okay, if we drop below that 160 level, that like increases our chances of having a major sell off toward the end of the week, essentially going from, you know, 160 down toward that 140 level. But those are kind of like super YOLO. And I also wanted to get into them because I sold my other Tesla puts that were closer to in the money, so that if Tesla kept moving lower, I wouldn't be kicking myself for saying, why did I sell those Tesla puts? I have other Tesla puts now. But then, yeah, again, the SPY calls up decently on them right now, up 14%, up 15%, but gonna let those ride into tomorrow again, barring any crazy. We'll say this, because I don't know if we'll be on the show later. If SPY gets back up to 408 by the end of the day, so we're at 403 right now, if SPY goes up another $5, so basically you have to go up another like 1.3% from here before the end of the day, I might bomb out of those calls. Ford adds work crew at Michigan. So, I mean, I love Ford stock long term. It's probably still a little, I don't even know what it's trading at right now. I'm going to guess like $14. $13.50. Pretty good guess, Aaron. Probably still a little expensive up here, and like chart wise, don't love it. But I think, like, again, long term, I would feel very comfortable buying this stock here if I know I'm going to hold it for like 10 plus years. Netflix. I mean, you guys have heard me talk about Netflix on this show a lot over the past couple months. I've been bullish. I've been long. I mean, look, you've got this gap still to kind of like fill up here. I mean, that gap is pretty much majority filled. I think you're probably getting a little bit overextended here just in terms of like here, let me do the quick math of how much we've really moved on Netflix. So in the last year, let's see. So since July, so less than half a year ago, the stock's up 86%. And I do think it got way oversold. And essentially, you know, like, it makes sense it's gone up so much, but I think I would just be worried about some sort of pullback here, right? If it went from 325 back to 300 and then I went long there. Like, I'm just making numbers up, by the way. You know, Dave or someone else would have levels. But basically, my point on Netflix right now is it's just gone up so much over the past few months that I wouldn't be surprised to see some sort of a pullback here in the next, you know, week, couple weeks. And then at that point, if you want to use that pullback as an opportunity to get long, I wouldn't mind that, because I wouldn't see a pullback as a reversal of trend. I would see it as just part of a healthy uptrend, right? Every healthy uptrend still has little pullbacks. And you can see that here in Tesla's chart. I mean, if we zoom in on the daily chart, right? Got all the way up to 300, boom, sold off to 250, boom, made new highs, boom, sold off, boom, made new highs, boom, sold off a little bit, boom, made new highs, probably going to sell off a little bit, and then boom, boom, continue to make new highs. So, I mean, I like Netflix right now. I think, you know, a couple months ago, it was super cheap. It's not as cheap anymore. You can see 4.5 price to sales, forward PE, but below 30. So as far as for kind of a techie growth stock, it is a lot cheaper than what it has been historically. But again, like under $200, it was essentially a screaming buy based on how much money Netflix brings in quarter after quarter, year after year. It was, in hindsight, of course, you know, would have been a very easy trade. Oh, looks like we got a little sell-off on the SPY. So what should we do? I'm going to go ahead and not really average in, but all right. I don't really know what I'm doing anymore. Sorry, guys. I just bought more SPY calls. I don't really know why. floor breaking it. I know we got right to that level that Dave was talking about at 4015, and I just don't understand, like, it doesn't really make sense to me. I guess the market is just like illogical sometimes, but like it made sense that for SPY to go up after the CPI report. It doesn't really make sense for me to trade down like 2%, like on what? And I talked about this yesterday too. It's just like so silly that we can say the market's down today because the jobs came in higher than expected, and the next day say the market's down because we're having recession fears. Angelina, all great questions. So this came up the other day in the chat where someone was like bullish on SPY but bearish on Tesla. And to your point, yes, Tesla is included in the SPY and S&P 500. And like, all right, so let's break this down a little bit. So first of all right, S&P 500 weightings. So Tesla makes up, the weighting is the percentage that the company makes up of the S&P 500. So to put this into perspective, Apple and Microsoft together make up more than a tenth of, really make up, I mean, they make up 12% of the S&P 500. Add Amazon in there, now you're looking at, 13, add Berkshire, now you're looking at like 15% is these 5 names of the S&P 500. Tesla is a very significant holding. It's a top 10 holding. But at the end of the day, it only makes up 1.3% of the S&P 500. So if you think about it, on any given day, say the market is green, but Tesla is red, all that, these 5 names would each need to be up like 1% to offset Tesla being down like 15%. So I get it, like when people bring that up and they bring the connection, but when someone the other day, I forget who it was, but someone the other day was like, oh, that trade won't happen, or like, oh, that guy's long SPY and short Tesla, like both those things can't happen. And it's like, there's a correlation, sure. Tesla is in the S&P 500. It's a top 10 weighting, but can the S&P 500 go up on a day Tesla goes down? Sure. In fact, it's probably happened more days than not over the past couple of weeks. So to your point, Angelina, Tesla is in the S&P 500. But just because Tesla's down doesn't necessarily mean the market is going to be red. I mean, if anything, like Apple, again, Apple and Microsoft are way bigger drivers of the S&P 500 than Tesla is by about tenfold combined. Alrighty, guys. Quick rundown for the rest of the show. I do see my very special in-person guest hanging out here, so we're going to go ahead and get our little bumper intro video playing, get set up, and when we come back, we'll be live with some of the top stories from today. Stay tuned. Smash the like if you have not already.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
Alrighty, everyone. I am welcomed here in office, Benzinga HQ, by the wonderful Brad. How do you say it? Is it Olsen?
Olsen.
Yep. Olsen. I guess there's like an extra E in there. Olsen.
It's Danish. Yep.
Danish. All right. So Brad's joining us from New York. Brad, how are you doing?
Good. Glad to be here.
Brad is our head of the news. Is that your exact title? I don't want to make sure I don't get it wrong.
Like the content team. Yeah.
Okay. So if there's any big news story, big headline, big thing we're breaking, Brad's kind of oversees that, in charge of that. All the hundreds of articles you guys read on Benzinga.com, whether you see it on Benzinga Pro, on the website. Brad's putting his blood, sweat, and tears in it. So, Brad, today, it's Tuesday. We had the CPI report. What's been going on? What have been the biggest stories we've reported on today so far?
I mean, we could start with CPI. Obviously, that's the story of the day that I'm sure a lot of our watchers and listeners are focused on.
Can you bring that mic just a little bit closer to you? Perfect.
Yeah, I think it's obviously CPI. Just that's what's moving the market today. You're obviously seeing a little bit of the S&P come off, a little bit of sell the news type of reaction as that trickles through the market. So, just to touch on that briefly, naturally we saw energy as one of the biggest components come off quite a bit during the last month. We are noticing that I don't know how much more of that impact you're going to get in the subsequent months, right? So as you probably talked about before, WTI crude is at levels seen before the Russian war in Ukraine began. And so with the energy index dropping about 1.5% or so during the past month, it's unclear how much of that's going to impact the inflation or disinflation going forward. So that's kind of top of mind for me, is just watching how that energy story plays out within the larger CPI components. You'll notice almost counterintuitively that the energy stocks today, being cyclical in nature and otherwise, are rising with the broader index. But obviously that's due to a lot of other factors we have to watch. But CPI, obviously the biggest thing for the market, and obviously how that plays into what the Fed is going to talk about tomorrow. Front and center, as you mentioned, just a few minutes ago. What is that going to mean for some of the Fed's commentary? What do they talk about beyond just the basis points that they choose to raise?
Yeah, and I'm interested. I don't know if we've had a time, at least since I've been working here at Benzinga, covering the stock market, that we've had a week where we had a CPI release one day and then a Fed meeting the next day, like back-to-back catalysts like that.
I can't remember something. I mean, we've always had big weeks. You've had non-farm payroll weeks, which have been sandwiched by a lot of heavy catalyst type events. But yeah, I'm with you. Back to back, our heads are going to spin for sure.
Yeah. I see Andy O in the chat saying great last name. I have an inclination of what maybe Andy O's last name is.
That's right.
But yeah, Brad, so to your point, we've got the AAA national gas prices. You mentioned crude oil, but we like to talk about gas prices because that's, people in our audience, that's what they're paying.
That's right. You got to fill up at the gas station.
And so right now the current average, this is from AAA, is $3.25. We'll call it rounding up. A year ago was $3.33. So we are now at almost 10 cents cheaper than we were a year ago. But another thing that we've talked about on the show a lot is that over the past, year's worth of CPI reports, there have been different drivers essentially each month of, that inflation. If like a year ago, it was like new and used cars were the most expensive thing.
Right.
6 months ago, it was gas. Now we're seeing, rent be a big driver of inflation.
Shelter's a huge
Shelter,
yeah.
which, a lot of economists say they think will be a little bit more sticky than something like gas prices that come up and down, very quickly. So that will be something to monitor, like you said. Like the energy prices may come down, but shelter, rent, those things will continue to probably stay high. But hopefully, some other prices in areas coming down will offset those high prices. Moving on from CPI, any other top headlines of the day that you've been watching?
I mean, I think we stay on energy. I think it impacts everybody at home. I think it's this may not be an explicit market driver, but the Department of Energy's announcement just a few hours ago of achieving fusion ignition, I think, has the potential to disrupt a ton of industries and the associated stocks within. So I mentioned the energy sector rising today. You could think that with the achievement of fusion energy, which is the idea that you achieve more energy out of a reaction that you put in, almost creating boundless energy for the world. You think that the energy sector might be taking a hit, or they might be, shaking in their boots, so to speak. But to me, that the announcement from the Lawrence Livermore, I think the laboratory and Department of Energy, I think is one of the more historic developments that we're going to have to watch, assuming that you're involved in any sort of energy stocks. We noticed that just recently Chevron and Google signed an agreement to explore a cold fusion experiment. We'll see how that works. Obviously, the government's not in the business of providing commercially available energy to households, so obviously they're going to look for some private sector partners. And so I think that's where the opportunity is. You know, just because you'll maybe potentially have limitless free energy 10, 15 years down the line doesn't mean it's the end of our energy stocks. I think Exxon and their plan out to 2027 has I think they've put out something like they plan to spend about $15 billion as part of their clean energy investments. So, you know, I think you got to look to which players are going to explore fusion, how are they going to make it commercially available, and, you know, you can see how that can play out. But I think the promise of, you know, having limitless free energy as we're filling up at the gas station and as we're heating our homes during the winter, I'm extremely excited about this announcement. And obviously it was very, very small, right? There's only a small amount of energy that was put in. It was about half a kilowatt, and they got a kilowatt back. To give you an idea of how much energy that is, it's about 2.5 gallons, taking 2.5 gallons of water and heating that up to boiling point from room temperature. So they managed to take about half that energy and create that much energy out of it. Just as a test.
Yeah, I mean, that's incredible that you know, they were able to do that. I'm not going to speak to the science behind it, the actual fusion, because I don't know what's going on there, Brad.
I'm not a scientist either.
But to your point, so a couple of things here I think I want to touch on. So just looking at the XLE, which is the you know, the spider tracking energy over the last month or so, still down about 8%. So I think what we saw a lot last week, and maybe even a little bit the week before, you saw kind of energy and financials selling off a little bit, kind of scaring some investors that maybe people were starting to worry about a recession. So today, with the CPI number, maybe that's giving investors more confidence that, okay, the Fed won't have to keep raising rates. Maybe that will help us stave off a recession. Maybe these energy names will be okay. To your point about the nuclear fusion potentially hurting the industry, I agree. I mean, they probably should be shaking their boots, not just about the nuclear fusion, but about a lot of these, you know, renewables that are getting cheaper and cheaper that demand is rising for. But it does sound a lot like one of those, like, you know, you get the first headline, you know, like doctors have like made movement on like Alzheimer's or something, and it's like, all right, that's a good development, but we're still probably years and years away from this being any sort of viable product.
No, I mean, I use the example, I think this was something like maybe 15 years ago, when I think I reported on Lockheed Martin's graphene development, where they were able to create a film and push water through it and easily desalinate water with little to no energy, which is the biggest struggle, obviously, with desalination, which is you've got to push a lot of volume through this very, very small amount of film. But they made that development. Everyone was very excited about basically free, cheap, limitless desalinated water from the ocean, and here we are 15 years later, and, you know, I haven't really seen anything commercially available. And you can go to, you know, California and Israel and a few other places where they do a lot of desalination, and, you know, I don't know if the technologies that work there, but you're right, it was just on a small scale. We may have a long way to go.
Yep. Well, let's see if we've got any questions flying in the chat. Any other headlines you were looking at today, Brad? So the other good example of that, by the way, sorry, not to mean to cut you off.
No.
For anyone out there in the chat that maybe, you know, might know this, but for any guys out there that, you know, are dealing with like hair loss or anything, there's like 1 million headlines a year that are like, scientists have found the cure to balding, and then people are like, they've been saying that for 20 years. Every single time there's like a Reddit post about that. Those are all the comments.
Yeah, no, that's true. I have quite a few friends. I'm not, luckily, I'm not one just yet. But maybe my father could make use of it, and quite a few of my friends. But no, I think the other big headline, I'd be remiss for not mentioning it, is the Sam Bankman-Fried news. You have Congress people up in arms over the timing of his arrest in the Bahamas. We have great coverage on the site about trying to chronicle all those developments for all the watchers, readers, and listeners out there. So kind of stay tuned to our coverage there.
What do you make of that? Do you have any problem with the timing of it? Do you think there's anything nefarious going on there?
I mean, I'm not one to spout conspiracy theories. You know, I would probably let each regulatory body sort it out for themselves. I guess it's not a surprise that, you know, the Department of Justice or whoever else didn't give anyone a heads up on any of these House committees. Sometimes they are in close coordination, but it is fascinating that he was just due to speak virtually, at least. And, you know, I guess he still might be doing it virtually, and maybe he was tipping his hand. Maybe that virtual testimony might be in a jail. Right, so when you're communicating with that judge, right, you might have to be doing that via camera.
Yeah, it seemed like to me, and again, I don't want to speculate either, any conspiracy theories. It seemed like a lot of people that were saying Sam Bankman-Fried's not going to get arrested because he's a big donor to Dems, all this stuff. Then he gets arrested. They're saying, okay, he did get arrested, but it's because now they're protecting him, and it's like, all right. You know, it's like, I don't know. It's like they're protecting from what? They're arresting him. They wouldn't arrest him without if they didn't think they had stuff to arrest him on. But we'll see. We'll wait for it to play out. Hopefully, we'll get, you know, as much, if not all, the information possible regarding the situation. But I wouldn't be surprised, I guess, if there are still some questions left when it's all shaken out.
Of course, and I mean, it also matters like what is he actually found guilty of doing, right? I mean, there's going to be a lot of charges of I guess, I think the allegations are around fraud, specifically around U.S.-based investors, right? I think there's an important distinction to make between FTX US and FTX International and what players were truly affected by that. So you're going to have to watch to see, you know, how strong the case is regarding where they actually have jurisdiction and where they don't have jurisdiction.
I mean, is that why you think like a lot of people who are maybe like associated, not as, you know, maybe people speaking at different conferences and stuff were like reserved to make any actual allegations against Sam Bankman-Fried before the legal systems like played out?
Yeah, I don't think it serves anyone to go out there and, you know, kick dirt or throw mud or kick anyone,
especially when your business like we're connected with.
Yeah,
someone.
I mean, there's reputational risk associated with all that. So yeah, I mean, I think it's probably best I don't think anyone wins by necessarily doing that. And I think you also have a lot of interests that are tied up, and no one knows, you know, what money's going to be clawed back, you know, who is a beneficiary of his, I guess, the money that he spread around. We don't know what those are, you know, what are the ramifications are of any of that type of stuff. So
yeah,
a lot of money was flushed around. No one knows where it went. You know, hopefully the blockchain will do some of that hard lifting and trying to extrapolate those details, but we won't know.
Got it. Yes, I don't know if you have anything else on your radar. One story that I've seen going around this week. So there's been a lot about Tesla, obviously. Every day there's something new about Tesla, Elon Musk. But the news story this week is that Elon Musk has lost his title as the richest man in the world. This comes on the heel of the report yesterday that we covered of you know, Tesla's consumer sentiment slipping in the negative.
Well, yeah, I mean, a lot of his wealth is tied up in Tesla stock. That's no secret to anyone. I think the more interesting headline that came out of that was the fact that for the first time, a non-tech or investment-oriented individual is at the top of the world's richest list, right? It's the founder of the luxury brand, was it LVMH, right?
Yep. I had no clue, by the way, he was that wealthy.
Yeah, I mean, it's fun to follow those lists, and you know, I think he made it into the news a few times for his yachts being spotted off the coasts of these extraordinary places, and but yeah, I mean, that's a very powerful brand, and I think that was kind of an interesting side note, is that, you know, no one in the investment or tech world is atop the list anymore.
Yeah, or even like the head of the Saudi oil fund. You know, I would have thought.
Right, but then you also have these Indian conglomerates, the massive like textile industries and outsourcing, like tech outsourcing companies, and they've done like the steel. The Ambani brothers are also very wealthy, but yeah, there's the world is changing.
All right, so speaking of. You know, you mentioned the LMVH CEO is now the richest man in the world. So we'll stay on the topic just of kind of retail for 1 second. This can be where we end. If you've, you know, I'm sure you've got some more editorial responsibilities to hop to. What have you done any Christmas shopping yet? What are the hottest gifts your family members are asking for?
It's interesting.
You've gone to Lululemon. You've gone to Macy's. Where are we going this year?
You know what? I haven't really gotten that far. My wife has some sort of jewelry that she likes, so I don't know if that's gonna really. Maybe that might be in the Macy's territory, or maybe Zales.
Okay.
You know, so we'll see on that front. I'm not big into lists. My wife wants lists. She wants everything to be specific the way she wants it. I think she returns half the things I get her, otherwise. But yeah, nothing on my radar in terms of purchases. I think we've seen a couple. Extraordinary retail stocks recently, like Crocs and otherwise. I'm sure those are going to be some good gifts items. That's back in vogue. The stock's on fire. I think you wrote a nice story the other day about these luxury jackets. I think Canada Goose is coming back.
Canada Goose,
right?
yeah.
So it's been a couple of years since those were all the rage. They're very, very pricey.
Really, those were big.
Oh no, those you're right. No, those actually that's been coming off a little bit, right? I forget exactly, but they're dropping that and they're gravitating towards some of these lower cost items.
Yeah. So yeah, I mean we around Christmas time always trying to figure out what are going to be the hot gifts of that year. I mean, to me, Lulu's just a monster. I feel like if you've got any woman in your family, honestly, I was gonna give an age range, but I don't even think there needs to be an age range. I think I honestly not even women. I love Lululemon stuff too. I think everyone loves Lululemon stuff. I know Lululemon gave a very scary warning the other day, saying something along the lines that they had like 80% more inventory that they did this time last year, like heading into the holidays. But I'd still be surprised that if it's not one of like the hottest stores at malls around the country. My one holiday thought, like stock market related, I've given on the show before, but last year, I don't think you were with us at Benzinga, Brad, but Meta, Quest.
Oh, the Quest.
The day after Christmas was the #1 app on the App Store, because that many people got the headsets as a gift that they had to get that. Then they had to go download the app to set up their new gift, and it was the #1 app on the App Store. Meta recognized this, said like, oh, we actually did really well at holiday, put some more money into advertising this year, the product around holidays and stuff. So I would be shocked if it's not. I think either way. I think if the Quest headset app isn't in the top 5 this year after Christmas, that's a big problem for Quest. But I think it will be again. I think it will come out again as a winner for a second consecutive year of Christmas. That's my bold Christmas prediction. Not investment advice,
Right.
but I don't mind throwing out some bold predictions here.
No, I think it's a good call. Lulu's, obviously, you're right. It has been a monster. But yeah, that's a good way to look at it. And also Quest is, we'll see. We have the reputational crisis, right, within tech. We have, Zuckerberg has taken quite the hit over the past year in his wealth while we were speaking on the richest people in the world. So very interesting to see whether that filters down into the gift giving this year or not, or maybe there's some heavy discounting into the Christmas
Maybe
season.
some people stuffing stockings with Bitcoins and Ethereum because they're so cheap right now.
Yeah, you don't have to wait for January 2nd for any of that right now. So.
No. All right, Brad. Well, it was great to have you on the show.
It's great
Thanks
to
for
be
joining
here.
me.
All right, thanks a lot.
How long are you in town for?
I'm heading out tonight.
Oh man.
Yeah.
Unfortunate. Well, if you got time, maybe we can grab a beer or something before you head out.
Yeah, sounds good.
All right, guys. Smash the like for Brad. Again, anything you read on benzinga.com, Brad goes through Brad. So shout out Brad.
Thanks for having me.
Of course. All right, guys. We've got about 25 minutes left of the show. Spartacus says, "Yep, I'm a guy. I have 4 pairs of Lulu pants in various colors. Love them. And yes, you got a couple items for girlfriend and family from there." Yeah, I mean, it's just a it's. I realized this the other day. I think part of growing up is realizing that sometimes like mainstream things are just like mainstream for a reason. Like Taylor Swift, she's pretty good. Lululemon, it's pretty comfortable. Like Chick-fil-A, popular for a reason. We always want to be like, liking things that other people aren't liking or finding a new thing. But again, I think part of growing up is just realizing that sometimes the popular things are popular for a reason. Not sure which was nastier, that Gap or where we are now. Selling pretty fierce. You talking about SPY, Jay? Because I might go full. I don't know. I might just do something stupid here and buy more calls. Go full bull. because I just don't get it, man. I mean, look, like the SPY ripped up to what 413 earlier today, and now we're down to 400 flat. Like, tell me what happened. Tell me why CPI coming down is now, you know, not good news. Like, why are we really that worried about a recession right now? Go to the mall right now. Go to your local mall. Go to your local airport. Are people spending money? Yes. Like, again, I know that's all anecdotal. There's probably some data out there that might start looking a little scary. I don't really know. But, like, to me, my only recession fears would be, you know, about the Fed continuing to raise rates. I'm going to do it. Scared money don't make money. I'm buying more calls. You guys can call me crazy. They wrote me, but I didn't write back. But yeah, I mean, Lulu is, it's like the people that, I don't know if you guys have ever like came across this, but so, like the people that always want to have like the hot music takes and find like the new like hipster bands and not, you know, act like they don't like mainstream music. I've had people like try to tell me that they're like, yeah, like I don't like the Beatles, or the Beatles aren't that good. And it's just like, dude, who are you trying to impress? Like, it's the Beatles. They're good. It's as simple as that. It's not even subjective at that point. That's just objective. It's literally an objective fact. Fed rate hike tool says, let's do the, yeah, I mean, I think that's conservative almost. I mean, look, it was giving it a 73% yesterday. That's before we got a cool CPI. I would almost think it's like 85%, 50, and then like maybe even probably not 25, but I don't see 70. I don't see 75 happening. I mean, I don't know. Maybe like, I guess there's a possibility they go. What would be the benefit of going back to 75? Just saying, hey, we're gonna crush inflation once and for all, even if it means the S&P 500 is gonna go to new lows. And you know, like I don't really know. I don't think 25 is in the cart. I mean, this is from the CME tool, so you can go through the methodology if you want. I'll drop the link in here. But the way that CME is calculating this is through its through the bond markets and stuff. Yeah, 1% is the nuclear option. I do think. I mean, 20% is not nothing. 20% is 1 in 5. If I told you like, hey, I'll give you $100, but there's a 1 in 5 chance your femur's gonna break, you probably wouldn't do it, because 1 in 5 is still, you know, a decent shot. If I put 5 M&Ms in your hand, and I said, you know, one of these 5 is gonna kill you, you wouldn't eat the M&Ms, or you wouldn't eat one of them, because that's a decent shot. So they're saying 1 in 5 chance we do continue to get 75 basis points. So again, like I'm not throwing that off the table. I would be surprised. I think the only reason Jerome Powell or the Fed would do that is if they're saying like, okay, the market's gotten a little ahead of itself. Today the S&P 500 hit its highest level since September. So its highest level in 3 months. Oh my God, I'm just seeing a Carvana commercial on CNBC right now too. Maybe they're seeing that and saying Carvana's still paying for advertising. We got to cut. But you know, the only way I think that Powell and the rest of the Federal Reserve go 75 is if they look at the market and essentially say we've gotten a little bit ahead of ourselves. People have basically started pricing in that inflation has topped and we haven't really fully dealt with it yet. We're going to go ahead and err on the side of killing inflation, even if that means hurting the markets, because the markets have already gone up a decent amount. I don't think that'd be the smart thing to do. I think there are probably people bearish out there that would welcome that. There are probably people out there that, you know, wouldn't think it'd be like the dumbest thing in the world. But I think most people, most business leaders, I mean, even I saw Professor Siegel from Wharton on CNBC while we were on the show. Obviously couldn't hear what he was saying because, you know, I was live on the show and it was just on the TV on mute. But I assume he was talking about how necessary it is for the Fed to start cutting rates, because at some point you got to look around and see inflation is falling and say, okay, right now our I don't know what the right expression is. It's like when your like toolbox is hurting more. It's like the when the method is worse than the means. I don't know what I don't know what the phrase I'm looking for is, but what the Fed is trying to do to help inflation is gonna is at this point, to what Professor Wharton is saying, or not Professor Wharton, what Professor Siegel is saying, what Elon Musk is saying, that now they're going too far and going to hurt the economy unnecessarily, just by raising rates too much too quickly. One thing I'm curious about now, because we talked about it yesterday, was the energy prices in Europe. EPV was the short, down again. Who was posting? That was Javier Blas on Twitter. Let's see if he gave any updates on the UK energy. Are they getting better or worse? Worse is all I want to know. Yeah, and again, just to make my point clear on the whole like Europe energy situation, I know that energy situation is probably like pretty dire and not great. My whole point was I didn't think it was going to be bad enough to essentially like hurt the U.S. equity market. Like I think the U.S. market will just continue to outperform like global markets, and that probably means the dollar is going to remain strong. I'm not really sure on that, but again, I like. All right, buying more SPY calls down here. You guys ever averaged into a bad trade? It makes it more exciting to just double down. I was doing that with the any college basketball fans in here. Big Mizzou KU game the other day. I went to Mizzou, so I bet on Mizzou before the game. We were down like 15 points, and I started throwing live bets on Mizzou to come back and win the game. Because it's like dollar cost averaging. It's like dollar cost averaging into a trade. Eventually it's got to come back, right? Rally. Santa rally calls or Hail Satan puts? No, I mean, what? Easy Mike, were you going for Mizzou too? I hate KU. That was such a bad game. KU is really, really good. They might be honestly like the best team in the country right now. Surprise. Surprise, surprise. And I had to watch them win. They won the national championship last year, right? NCAA basketball champ. Yeah, they beat UNC, right? Championship 2022. Was that 2022? 2021? Yeah, they beat whatever. I don't want to talk about it. When you age, you may change your approach. I really don't think, guys, a zero rate hike is in the cards. I really, really don't. Honestly, I think a 75 basis point hike is probably way, way more likely than a zero. But neither are likely. 50 is my prediction. U.S. scientists achieved nuclear fusion. We talked about that. Neil deGrasse Tyson, everyone's favorite, go-to scientist on CNN, talking about that right now. Some interesting. This is a couple weeks older, but so I thought found this interesting. So, talking a lot about the housing market. So we know mortgage rates have started to come down a tiny bit, but still remain very high, at least over the at least relative to where they've been the past 10 years. Housing prices, as a result of the high mortgage rates, have started to come down, but haven't really, corrected as much as some people were calling for, or maybe some people are hoping for, people that don't have a house. And here's what I think is important to understand is that in 2008, when you had the housing, and I just went back and refreshed on on the Big Short book, but there were these underlying problems in the housing market that really got exposed in 07 and 08 that I don't think we're really dealing with now. And if you think about one of the big risks of having high interest rates for a while is that those mortgage rates remaining high and causing housing prices to continue to fall, thus causing, if housing prices continue to fall, people want to sell their house to, salvage the money they can before it drops another 20% in value, thus bringing the supply up, the demand lower, creating a housing market crash. That's a lot harder for that to happen when there is still a shortage of houses. So again, I don't see the likelihood of a true housing market crash or one similar to one we saw in 2008 because we still have a housing shortage. We still have not enough homes for the demand. So if housing prices continue to fall, people are forced to sell them. Guess what? There will be buyers because there will be people that have been waiting for this opportunity to buy homes. All right, so here are Zillow's bold predictions for 2023. The Midwest to feature front and center. While in the grip of the pandemic, the Sun Belt had a strong pull on American movers, easily meeting last year's forecast for an aggressive rise to housing. Florida markets dominated the annual appreciation leaderboard, with Tennessee, Carolinas, Texas metro areas peppering into the top spots among the 100 largest movers. The heat will stay on in the Sunshine State, to be sure, but as affordability has become the key driver of both supply and demand in the market, places that still feature reasonable prices are already seeing momentum shift their way and should have the healthiest housing markets in 2023. So enter the Midwest. Unlike nearly every other region in the United States, prices in the most Midwest metro areas haven't run up to extremes. Mortgage costs as a share of income are still within healthy sub-30 levels across Ohio, Pennsylvania, Kansas, upstate New York. All right, Zillow. Are we considering upstate New York the Midwest in this article? Ohio, Pennsylvania, Kansas, upstate New York, and Iowa? And Illinois? Like, one of these is not like the others. One of these is not like the others. Also, I don't know what Zillow considers a healthy mortgage cost as a share of income. But for Ohio, I mean, anything above 1% seems way too high. Or Kansas, for that matter. I mean this so seriously. All right, at least for Kansas. I don't know about Ohio. I don't know. I've never really spent time in Ohio. I think Benzinga could offer to triple my salary to move to Ohio, and I would say no. Kansas, I would say no. Ohio, I would consider. Because like Cincinnati could probably be fun. Cleveland probably sucks. I don't know. I don't really know anything about Ohio, so I'm probably offending some people here. Kansas, though, couldn't do. Upstate New York, though. All right, anyway. Having available houses to choose from is another key component of a healthy market, and the Midwest stands out. Inventory isn't in a massive hole compared to the pre-pandemic times. So, like, people are basically saying, hey, people want to buy houses. They're going to buy houses where they can buy houses, whether that be in Ohio, Pennsylvania, upstate New York, you name it. Cincy and Columbus. Oh, yeah, I forgot about Columbus. Columbus, I'm sure, would be fun. I mean, because Ohio State's just fucking massive. It's like a 60, 70,000 students, one of the biggest college towns in the country. I'm sure it would be very fun. You're going to trust Zillow? No, I'm not. These are literally Zillow's bold predictions. I'm not even saying they're... I don't even think Zillow is saying trust these. I think they're saying, hey, we're making some bold predictions. That bold predictions are predictions that you don't expect necessarily to be true. Or at least that's how I see it. Hot takes. Buying with friends and family. This is one that I actually thought was interesting and why I wanted to bring it up. Buying with friends and family will gain momentum. Soaring housing costs were a popular party conversation topic in 2022, but plots of buying a home with a friend or non-partner relative turned out to be more than idle chatter for a surprising share of folks. With housing costs rising far beyond previous affordability norms, those chasing down home ownership are turning to unconventional means of making it pencil out financially, and this should continue in 2023. A Zillow survey fielded this spring found that among successful recent homebuyers, 18% had purchased along with a friend or relative who wasn't their spouse or partner, and 19% of prospective homebuyers intended to buy with a friend or relative in the next 12 months. So basically 1 in 5 houses that was sold last year, they're saying people, might have thrown in money together and bought that house together, or they threw in money with someone in their family that wasn't, their husband or wife or partner. And for both groups, affordability and qualifying for a mortgage were cited as the top reasons for buying together. Challenges that are now even more acute. Mortgage payments for a typical U.S. home rose from needing 27% of median household income in January to 30% in March to 37% in October, far beyond the 30% threshold where housing becomes a financial burden. So basically saying that typically if someone's mortgage, accounts for about 30% of their income, they should be fine financially. That number started increasing, got too high. So now, people started buying homes with their friends. Affordability crisis will stabilize, if not improve. So affordability. The share of median income required to pay housing costs is the biggest challenge for buyers, sellers, and renters today. Monthly mortgage costs have doubled since 2019, driven by pandemic-era price hikes and to an even greater degree by rapid mortgage rate growth this year. High mortgage rates are not only pushing buyers to the sidelines, they're tanking new inventory as homeowners decide to hang out to their current houses and low rates. Renters are not exempt from the madness. Rents have grown faster than wages, making it harder to save up for a down payment. The average hourly wage has grown 23% over the past 5 years, but rents are up 37% during that time after a pandemic-era surge. So basically, for a lot of people, essentially, or at least like from the numbers-wise, a lot of people that have gotten raises or seen their wages grow have seen their rents grow by just as much, if not more, essentially offsetting any benefit they've gotten. Walter Lyon saying, don't move to Cleveland. Don't worry, Walter. That was never, ever on the cards. And I say that as someone in Detroit. So, yeah. I just not... That went to Xavier? Yeah. Where is Xavier? In Ohio somewhere? Buying with friends sounds nutty to me. I agree. I just don't know how it would work. Unless, like, the only way I could see it work is if, like, maybe... someone was buying with the intention of like holding long term, and someone went in with the intention of just to like live there for a couple of years, and then the person who was going to live there forever like bought the equity back from the person who was going to move out. So the person, because okay, that could be a win-win, because then the person who was going to hold on to it forever got it more affordable. Like maybe they couldn't afford the house on day one right now, but they were when their friend like put some money in, and now that friend gets to live there for like a year or two. And then over time, the friend who gets to hold the house forever buys them out of the equity. The person basically got either a free place to live or got some good living expenses. And then the person who owns the house got the ability to buy it when they wouldn't have in the first place. If that makes sense. I could see that being like a win-win. Intentions change. Yeah, exactly. And I think it always, people always say this, but like, anytime like going into business or complicating like friends with anything money related can oftentimes like not be the best idea. And yeah, you could have something like crazy, if two friends went in 50-50 on a house, say that the house went up 100% in value, one person wants to sell it and make a quick buck, the other person wants to, keep it. Wait, really? People are moving from Denver to Cleveland? Why? Why would anyone do that? I know Denver, by the way, out of like all this city, because there's a bunch of cities out there that like outside of New York City and LA and stuff have been like the fastest, have seen rent grow the fastest. And I think Denver is one of those that over the past 10 years, like real estate has gotten has grown, or the price of real estate has gone up the most in Denver than basically like every other city in the country. I know Raleigh is actually surprisingly, Raleigh and some other parts of North Carolina are like surprisingly pretty poppin' too. There's like a bunch of people moving there, which it is a beautiful, beautiful part of the country. And again, what this whole Zillow point is saying is at the end of the day, like affordability is going to drive a lot of what's going on, right? Like maybe Raleigh wasn't the number one destination, but it was good enough and affordable. And now, guess what? Enough people move there, new restaurants pop up, new, like entertainment starts popping up, and then they start coming in. So it's like if you build it, they will come. I do think that's good insight from Zillow, right? To instead of thinking about, oh, Nashville is so hot, like let's buy property there, it's going to keep getting hot. Well, Nashville's already gotten really expensive. Maybe you start looking at places that haven't gotten so expensive yet. I mean, honestly, like, funny name too, Onion News. Yeah, MD saying wait 6 to 8 months on housing. Yeah, I mean, I could see there being some more shakeout for sure before it's all said and done. But for right now, just riding. I don't know. I mean, I'm 25, so like if the housing market does completely crash, I'm not rooting for that because that's terrible for the U.S. economy. In fact, most like Americans have a portion, if not like a significant portion, of their wealth baked into like the equity of their home. So a housing market. But that will be a small bright side is for people like me that have maybe not thought like owning a home would be possible at least any point in the next like 10, 15 years, maybe would become more possible. But honestly, right now, I was thinking about this the other day too. People always talk about how like rent is just like throwing money away. And I understand there are workarounds to this too. But even if I had the money and like found a great deal, I don't think I would buy a house right now just because I wouldn't want to be like that tied down. Like say I pay $1,000 in rent every month. Yes, I'm paying $1,000 in rent. At the end of the day, I don't own anything. I don't have any equity, so that money is just being thrown away. But my spin zone to that is I pay $1,000 a month, and I could pick up and move tomorrow and not worry about it. If my washer breaks, I call my landlord and it's fixed. I don't have to worry about it. Like, I do think there is something to be said that like there's value in paying for rent and having that freedom if that's what matters to you at like 24, 25. Like if I bought a house right now in Detroit and wanted to move in 2 years, right, like I could rent it out and probably be fine, or sell it and like maybe eat some money on fees from like buying and selling a house. I don't really know. But I do think like for a lot of young people, this whole idea of like you need to be a property owner, paying rent is just throwing money away, is silly for some people. Because like for me, myself, I'm saying I do think I get $1,000 worth of value paying my rent each month, because again, I have that freedom. Like I can pick up and move, once my lease is up and don't have to worry about like all those struggles. Again, I get it that it's not ideal to be just like paying money and not own any equity and essentially like you don't get anything in return for that money. Trust me, I get that sentiment. But to act like there's no like value or there's no benefits to paying on rent or to be paying rent versus owning a house, there are certain benefits and cases where I think it would make sense. Now, if I'm still paying rent 5 years from now and I've been in the same place for 5 years and I'm paying $1,000 of rent every month for 5 years and that racks up to, $30,000, then yeah, that's stupid. I would have been better off taking that $30,000 and putting different core values. Yeah, and I think that's part of it too, is that like, yeah, 30 years ago, there were probably a lot of people 25 ready to buy a house, ready to start a family, ready to settle down. And I'm saying I'm not. So I'm okay paying rent knowing that like I don't want to own a house right now, at least until I'm a little bit more settled. But yeah, I look a little different today. I said this at the top of the show. I wore my beanie into work today because it was very cold outside. And I think my hair was still a little wet this morning because when I got to work and took my beanie off, my hair was just literally like sticking straight up, and I tried to like brush it. I tried to do everything, couldn't figure it out. So that's what we're dealing with today. I actually had a children's book growing up that my mom used to read to me. Let me see if I can find it. Yeah, I found it. I had this book growing up called Aaron's Hair. It was about this kid with crazy hair. So I'm kind of living up to that book today. This was like my favorite book growing up, called Aaron's Hair. If you've got a whoa, what the hell? That's bullshit. Was this the French version? They've changed the name on it? They made it the Hair of Max? That pisses me off. This book is Aaron's Hair. Why would they change it to that? Does it like rhyme? La Tignacie de Max? I'm upset by that. Maybe Aaron doesn't have a good like French translation or something. But I love this book growing up. Basically about a kid with crazy hair. So that's where we're at today. Not your hair anymore. Dude, I'm actually like, I can't believe this, that they where'd that Max hair go? They what? That's not what it is. It's Max's hair now. No, but yeah. All right, guys. It is time. 1:02 p.m. You know what time it is? It is time to start moving over to Money Mitch. Money Mitch got a packed show today. Some big interviews coming up. Going to be talking to the Bear Cave, my man Edwin Dorsey. Edwin Dorsey. What else can you say about the kid? I mean, he's just a kid, killing it. He's like 23 or something. Writes his short report newsletter. Moves stocks. I mean, this kid will put out a short report and the stock will be down like 5-10% the next day or the day of. Sorry, went to Stanford. Very smart kid. He'll also be talking to Brian C.E., the CFA and founding partner at the Capital Stewards. So without further ado, let's get my man Money Mitch on the show. Money Mitch, how you doing, man? What are you laughing?
Man?
What are you laughing at me? You laughing at my hair today? You laughing at what?
Well, I mean, we can get into a lot of things, but I mean, you got to enjoy it, right? That's the whole part of watching AB. You get some laughs, you get some information, you get some enjoyment. I don't know about you, but now I have a children's book to read about Aaron's hair.
That's what I'm saying. And anyone looking for a Christmas present?
I don't know who that Max guy is in France.
I'm gonna find him though. I'm gonna go to France and find him and see who this guy is that stole my hair and figure it out.
That's what it's all about. We don't hang. We don't hide. We don't hide. We don't hide.
Yeah, I could have canceled the show today. I could have said my voice was gone and made an excuse because I was having a bad hair day. But you know, Zinger Nation means more to me than to do that.
Yeah, we'll just put that Scully back on and rock it the rest of the day. No one will know a single thing, man. Who cares if it's inside, right?
Hell yeah.
I'm rocking one too. I'm hiding the hair also. You know, you don't want to see what's underneath this Christmas hat, but we won't get into that conversation. It's time to get the stock market movers, my man AB. We'll see you tomorrow.
Peace and love, y'all. We'll be back tomorrow.
All right, let's get into the action. Not your hair anymore. Thanks, AB. Lots of love out there. And yes, 2 p.m. Argentina. We'll have to wait and see. Let's get into the action. This is Stock Market Movers. Of course, we got a lot to talk about today. We got Brian C., CFA, founding partner at Capital Stewards. We got the Bear Cave. We got to get into all that action. That's going to be at 1:15, 1:45. But until we get into that, we got some headlines to get to. And of course, CPI taking control. Now the question that I'm going to put out there, is this going to leave a power hour rally coming? I don't know. Find out right here. Stock Market Movers. Why do I think that could happen? Let's take a look. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, team, let's get into the markets. There's a lot going on right now. Of course, we're going to go ahead and first things first, let's get into the overall market. Take a look at the action, and we'll see here. As you guys can see, the SPY has kind of been in this channel, right? There has been points of extreme where we started to crack down below this, but I just kind of draw this tightening down, right? We're in this kind of bear. We've had a couple of ticks off of that top trend line. Now we get back up there, and wouldn't you know it, we can't hold above that trend line. That runs right into the action that we did on, of course, December 1st, where we were up there towards 410. And in the intraday, we talked about it on live trading. Would 410 hold as resistance? I'll take you towards a shorter time frame so you guys can see how that 410, when we crack down below that 410, we came right back up there, held that as resistance, and then started getting knocked right back down. So it looks like 410 is acting like major resistance right now. And like I've mentioned, I'm looking for that power hour rally. Why? Well, let's take a look at what happened yesterday, right? Just keep it simple. Let's go towards the 15 minutes, and you guys can see 245 yesterday. We were going sideways from about 11:15 all the way until 245, where we got above the high of 396.16. Next thing you know, we were at 396.74. By the end of the day, we were up there towards 398.92s. So we're going to look for maybe similar action to come back into it. Going back into yesterday's range is what I'd also be looking for, as we're just getting really close to that towards the close. We could see it here right off the resistance there. We got close towards it. So let's see if we get back below the 400, eventually cutting back on the upside of this move towards the VWAP is what I'll be looking for. But it's been a slow leak from this morning. And what happened this morning? That's more important, right? What are we going to talk about today? What's the key economic data that everyone has on their mind is, of course, CPI. CPI. Let's get into that action. And to do that, what I'm going to do is I'm going to bring in the report here so that we can dive in a little bit deeper into understanding what happened today, right? Well, let's get right towards the action first. This is going to be for the consumer index, of course. And we want to go ahead and take a look. This was released on, of course, December 13th. Let's take a look at this and get into the action. I do see that my internet is being a little bit unstable today. Let me know in the chat by any means if I start chopping out. I do see my internet kind of giving out a little bit there. I'll try to close up some windows to make sure that we can keep going here. But I do want to know if for any reason you guys hear me start chop up. Just let me know in the chat and I'll make sure to slow things down. All right, I'm going to close up some other windows here, trying to help out here, make sure that we're getting good internet. Still showing me unstable, but I'm going to keep going here. If you guys let me know in the chat how it's been. All right, so the first thing we want to pay attention to is the 1 month over change, right? And so this is kind of more of a graphical representation of it. And so we need to take a look at what is really going on here, right? So, of course, this was last December, right? We started getting those spikes. The spikes really in June is when we really got that last little spike. We were still getting a little bit of a raise here, but it wasn't like kind of that 1.0, right? Over 1.0, those were big spikes on the 1 month percent change. Now we started seeing what? 0.4, and the estimate was 0.3. We went down to 0.1. Not a bad outlook there as we're starting to come down. And you guys can see here from the 12-month percent change in CPI, how we really kind of peaked in that June time. Of course, the purple line here is going to be all items less food and energy. What do we mean by that? That's the core price, right? Core price is definitely focused to kind of keep watch on there. And you guys can see how even the core price is starting to tick down. We saw that also in the numbers today, as we saw core CPI get in at 0.2 versus the 0.3 estimate. And that's a good outlook, right? If we can exclude food and energy and really start seeing at least that inflation coming down, that's going to be a good level to watch. And now we're really starting to get 2 or 3 months of data that's pointing towards more of that peaking action and starting to really come down. Now, this is, of course, going to help the Fed in leaning into slowing down the interest rates. I don't think that they're going to stop by any means on tomorrow's meeting, but there was mention out there that some people were thinking that could be a potential to happen. Now, of course, you guys can look into here, the percentage change on the table. This is definitely important to keep a watch. This is what's going to tell you that you need to be looking at if it's going up or down and what areas to be watching for to look to see if you're seeing inflation come down. Now, of course, food has been very sticky, right? We're not really seeing that much of a downturn in food. Then let's go to energy. And when we go to energy, now we finally got another negative reading. That's what we wanted to see. in October, we got a positive reading. Why did we get a positive reading in October? Well, gasoline and fuel oil started spiking back towards the positive numbers. Now we're getting negative numbers to come in there with a -2 and -2. That's what you want to be seeing in the energy side, right? I also talked about how in pipe services, we started seeing an increase here in August and September. And since then, we started seeing big decreases here, -4.6 in October to -3.5. That's a good outlook there. And so we need to kind of go ahead and keep watch what happens here. But energy side is looking good. Then we look at used vehicles. We've already talked about how used vehicles, cars are going down, right? And that's a good outlook. -1.1 in September, -2.4. Now -2.9 here in November. That's showing us used cars and trucks. Yes, deflation coming in there. Inflation getting hit hard. What is getting hit hard there? There's deflationary pressures from the interest rates being so high. So is the Fed having an effect? Well, at least in the vehicles, you could see they're having some type of effect. Now, when we look at shelter is something that definitely to keep and watch. We can see that we peaked out around August and September with that 0.7. Now in October, we got that 0.8. That's the peak. Now we're going to look to see if this can start going back down. 0.6 in November's reading. We'll look for like a 0.4 in December. That's what we really want to get back down underneath. Of course, shelter makes up about 60% of the CPI. So that's why I'm focusing on that range. And I think this is something that we need to keep watch. We've all seen how rent prices are finally starting to go down. So we'll have to wait and see what happens there. But of course, like always, it's hard to go ahead and kind of understand what's going on right now because good news is bad news. Bad news is good news. So let's talk a little bit about what we saw today. We definitely got the CPI to come in light, and we were looking at it. Estimates were 7.3. I thought in the 6 handle could really get this market ripping, and that's not what we got. We got at least closer. We went down 0.2. And if you remember back in the prior kind of report, we were expected to come back down towards 7.9, which was a decrease of 0.2. And so that's what I'm starting to see a trend of. A decrease about 0.2 or more leading forward is what I'll be watching. Another thing that you can be looking at is, of course, the average and how that's going down. Core CPI coming down is also a good outlook as we're really just starting to see all the CPI data start pointing in the right direction, at least for the bulls out there. The bears probably went running today, but also sticking around a little bit as the SPY's just been leaking out from the open. And that's the tough part. We did get that spike there towards 414. Now we're back down to 400. And you believe that, team. This morning, one thing that I will mention is on pre-market prep, we were warning a lot about overreactions that have been happening lately. One of the things that, of course, Anne-Marie Band said this morning on pre-market prep is just looking at those overreactions and not jumping too much into that first type of push. Well, now we're pulling back there. 1 p.m. is starting to bottom around the 400. So we could start seeing some buyers step up, but we'll have to wait and see towards the close. All right, getting out of the CPI talk, I'm going to catch chat and talk in the chat. How we doing out there, Dylan? How we doing? Twinkle Toes, what's up out there? Ashton, head and shoulders on that inflation graph. We'll have to wait and see. I don't use too many patterns like that on the inflation, but hey, definitely inflation coming down. That's not a bad thing. And of course, the Fed is going to be definitely watching that and having a great conversation today. And we got to see what kind of conversation comes out of that. What kind of change in terminology do we hear tomorrow that we haven't heard in last meeting, right? Or his last speech. Let's keep an eye out on especially words of how those can continue pushing. And I'll ask that to my guest coming up here at 1:15. All right, it's we're going to keep going here. We'll take a look at what's going on out there right now. It's a definitely tough time. We'll look to see if the market can rally here towards the close. That's one trend that I've been seeing often. So we'll wait and see to find out if we get that rally into the power hour, right? So other than that, We're going to get into some headlines. Of course, there was a lot that's moving out there. We'll get into some of the Binance headlines out when we talk to Bear Cave Substack's author, Edwin Dorsey. But it's time to go ahead and get out of the overall market, get towards our first interview today. We got Brian C., CFA, founding partner at the Capital Stewards. Let's get right towards the action and bring him on here. All right, let's bring on Brian. How are we doing today?
Hey, Mitch, how are you?
It's good to have you on. Definitely ready to talk about the markets. And first thing I want to find out, of course, is what was your first reaction to the CPI data this morning?
Yeah, our view is that headline inflation is going to continue to decline as we head into 2023. What we saw this morning, the report showed a significant reduction in headline inflation, which is that top number, right? But what was more notable, I think, than the headline print was the drop in core CPI, which is, as you may know, excludes food and energy prices. That's a better gauge of what's happening on prices throughout the economy. In core CPI in particular, housing was responsible for almost all of the gain that we saw from October to November. And we know from like real-time data from Zillow and rent gauges that we see around the country that housing is not obviously going up, it's going down, it's going the other direction. So I think the core inflation is really slowing even more maybe than what we saw this morning. So inflation's going down, it's not going up. I think that's going to be here to stay as we move into 2023.
Definitely a good thing to see is that I think that now with a couple of months of good data, we can actually come to that conclusion right now. Of course, what's your outlook moving forward for inflation going into 23?
Yeah, so I think we said this in our 2023 outlook, and I've been saying this a lot in the media. I think moving from 8% down to 6 or 5% inflation is going to feel relatively easy because we're going to see oil and food and some other things contribute to there, and that move can happen pretty quickly. But the move from 5-6% down to 2.5% is going to be a lot more challenging. We saw in the report this morning, services inflation in particular is still really sticky, and that's because the labor market is still really strong. The labor market's kind of like a Titanic. It's going to take a long time to turn the ship around. And so I think even though we may see inflation move down pretty substantially over the next few months, it's going to be a while before we really get to more normalized markets. And so we don't see, the big question is, do we think the Fed's going to cut rates in 2023? We don't see that happening. We see more of a pause and just them holding steady because it takes longer ultimately for inflation to normalize all the way back down from where we've been.
Now, of course, the level to watch is where will we get to, right? Where will the Fed funds kind of peak? Of course, there was a little bit of adjustment this morning by the CME Fed tool looking forward. What do you expect here from the Fed funds rate, and where do you think peaking actually happens?
Yeah, so we've been expecting somewhere between 5 and 5.5%, so north of 5% for a long time. It took a while for the market to sort of come around to that point of view. I think over the summer we were saying that everybody thought we were crazy. When we thought peak Fed funds was going to be 3.5 or 4%. Obviously, we're closer to 5 now than we've been. We saw that come down a little bit this morning, but again, I think the Fed's going to have to get to 5 or perhaps above there and then stay for a while. I do think inflation moderating over the next couple of months will give them the cover they need to not continue to increase rates a whole lot. But again, I think the extent to which they stay at a high level is going to be longer than what the market thinks today.
What should investors be keeping their eyes on, of course, for recession concerns?
Yeah, so there's a lot of evidence for a recession, right? I mean, you can look at things like the leading economic indicators. You can look at certainly the Fed and the fact that they're going to have to keep rates elevated for a longer period of time. But there's also a lot of evidence that we're not going to have a significant recession. When you look at what's going on with consumer spending, it remains really strong. The state of the consumer is really strong. When you look at what's happening in production across the economy, the services spending continues to be really, really strong. We're not going to have a recession if we have spending growth from the consumer in the services space. It's just not going to happen. It's too big a piece of the economy. So I think instead of trying to play the game of are we going to have a technical recession in 2023 or not, which is essentially saying the difference between growth that is negative 0.5% or positive 0.5%. I think it's better for us just to understand that we know that rising rates is going to slow the economy and drive our investment thinking based on that versus trying to figure out, are we going to have a technical recession or not? We can let the academics debate that. We know it's going to be a slow economy. Whether it ultimately tips over for a few quarters or not, I think is less of a concern.
Of course, one of the concerns is earnings maybe even going into contraction. Is that what you see in 23?
Yeah, so earnings right now it's not so much that they're going to contract, but I think we're not going to meet the expectations that the market has currently. We're expecting earnings to be somewhere between 220 and 230 on the S&P going into next year. That's implying growth from what we saw in the fourth quarter of this year. And in the fourth quarter, especially when you back out energy, we actually saw a decline in S&P 500 earnings. And that's because not on the revenue side, but it's because companies are starting to have increased prices, right, that they haven't been able to pass along to the consumers. And even though inflation's coming down, we're starting to buy things. All this stuff works on a lag. The idea that that margin compression isn't going to be true next year seems unlikely. Even if you just got a return to S&P 500 earnings to 2019 levels, that'd be a 10% decline from where we are today. So I don't know that we actually get a decline, but I think the idea that we're going to see 10, 15% earnings growth is pretty far-fetched. I think something more like flat to slightly up earnings is more likely the case. And the market is pricing in what's most important, that earnings growth. And I don't know that we're going to see that as we head into next year.
Of course. Now, one of the things that we're starting to see, of course, inflation's coming down. Now, with that also happening today, we saw a spike down in the dollar, and that's showing signs of weakness. What could this mean for stocks?
Yeah, so the dollar coming down definitely is going to be an important part of the story next year. So the dollar, obviously, significant increase this year is money poured into the United States with the Fed raising interest rates. That makes sense, right? People want to own U.S. cash. At 4.5%, 5%, that's a good investment, right? When the reverse happens, that's good in kind of three areas, right? The first is actually for U.S. large cap stocks. That are get a large percent of their earnings and their revenue from overseas. When the dollar's depreciating actually gives them a little bit of a boost in their earnings. It's also good for emerging market debt and emerging market equity. And when we think about investing in emerging markets, there's kind of two things that you have to look at. So one is valuation, and those asset classes are valued, favorably compared to where they've been historically. But that can be true for a long period of time. You've also got to have a catalyst for what's going to make those valuations improve. And we think the decline in the dollar could be that catalyst going into 2023.
Of course, now tomorrow we'll be looking at kind of what Jerome Powell has to say. And is there any specific language that you might be looking towards in tomorrow's conference that we as investors should be looking out for?
Yeah, so Jerome Powell has done an exceedingly good job of leading the market and making sure that he doesn't surprise anyone when he comes out and gives his speeches. And so I expect a 50 basis point hike, and I kind of expect more of the same. And that's that, they see inflation starting to moderate, but 7% inflation is still not that great, and so they need to continue to keep their foot on throttle, so to speak, to keep inflation moving in the right direction. Language around, 1 or 2 consecutive declines is not, does not necessarily mean that the job is done. I think the surprise potentially would be anything language around a 25 basis point increase going forward. I think the market would probably react pretty favorably to that. And obviously anything that's more hawkish than that would potentially see a market decline. But I think you saw investors kind of get back to, reality a little bit this morning, right? The market obviously took off at the open on the inflation data. And then as you see more institutional trading happening later and later in the day, you see folks saying, hey, this is kind of what we've been expecting. Inflation's going to go down over time. So not a lot to actually to see here.
All right. And of course, I feel like this will be the focus next year. Of course, is going to be, there's always the kind of the sexy words out there that get included. And next year, it's going to be all about, when do we get the pivot?
Yeah, right.
Well, what do you think there, Brian?
Yeah, when's the pivot going to come? Again, I think it depends on what you mean by pivot. It's kind of like we've been defining the word soft landing or landing throughout the last couple of years. Is it a soft landing? Is it a hard landing? Is the landing without the landing gear? Is it a water landing? What kind of landing is it? I think pivot means much the same thing. If by pivot you mean the Fed actually cutting interest rates, we don't see that happening next year because we think the move to really lower inflation is going to be challenging. If by pivot you mean the Fed pausing and stop, and into the hiking cycle, I think you'll probably see that in the first quarter, whether you get a few 25 basis point increases or the Fed stops at 5%. I think that probably is what we're likely to see near term. That's what's priced into the market. But a pivot to where the Fed actually starts to cut rates, short of some geopolitical shock or something that we're not expecting happening. I don't see that happening in the economy next year, just because I don't see inflation, getting back down to 2%. I don't really even see it getting down to 3% through the 12 months of next year.
Just so I think we're both in agreement. For me, I would say pivot is more a cutting of rates than slowing down the rates, but that's just what I would say. Let's keep going. We'll take a last question here. You've already mentioned some of this, but the labor market. What do you see as the two scenarios that could be playing out here?
Yeah, so the labor market, I think that you're right. There are two scenarios, and the labor market is really what's going to be the key. And we've been talking about this for the last 18 months. It was the reason why we thought inflation was coming on a lot stronger than the market did in 2020 and 2021. And it's going to take labor market weakness for inflation to ultimately get back down to that 2.5% that the Fed wants to see. The market is really, really strong still, and it's going to take a long time for that to change. In the U.S., we saw, because of COVID, a lot of folks exit the labor market, right? And the labor supply has been challenged, and it's been trending down because of the way we sit generationally with the boomers retiring for some time. And so there's going to have to be a way for us to create more workers, more folks that want to work in the United States. Our view is that that's probably going to have to happen through immigration, and that's potentially a policy opportunity for the folks in DC. That's not a short-term solution. That's going to take a long time, but there's only two ways to get more people. You either immigrate folks from other countries, or you have more babies. That's the only way that it works. And we're having like 400,000 fewer babies in the U.S. than we were a decade ago. So that doesn't really seem to be the answer. So I think in order for the U.S. to ultimately solve the labor supply issue, it's going to have to be through immigration. Again, you can't do all of that next year. You can start moving in the right direction. And that's, I'm hopeful that that's what we'll see. If we don't, I think, there's kind of this opportunity to be stuck in the doldrums of labor oversupply and labor undersupply for some time. And I think that would be a bad outcome.
Yeah, definitely something to keep watch. We'll see what happens here. Appreciate you covering a ton of different areas. We covered it all here. Appreciate it. Brian C., you guys keep up with him. CFA and founding partners at the Capital Stewards. We'll definitely have you back on, Brian. Appreciate you coming on.
Yeah. Thanks, Mitch.
Have a good one. All right, there you guys see it. That's what it's all about. We talked about everything from where he sees the Fed fund peaking and also inflation outlook into 23. I think this is an important outlook to keep in mind, right? It's going to be a lot easier to go, like he said, from 8 to 6 than probably it is going to be from 4 to 2, right? And so as we get closer down the scale, it seems to make sense. Yes, we're going to see inflation coming down. But will it start slowing down also? And will this leave room for the Fed to continue sliding in those 25 basis point hike rates as we get towards that Fed fund peak, right? This is why we need to also keep in mind what's going on with the Fed fund peaks, right? Where are we seeing that end for the raising of the rates? Because if you can see that end, then at least there, you can at least start calling that the bottom is in. I think that I would be looking for at least that first statement when we're stopping hiking rates. I don't think that's going to happen tomorrow. And I do see some people mentioning things like that in the chat. I don't think by any means there's going to be a no rate hike tomorrow. So if you're in that camp, well, hey, to each his own, but I know I don't see anywhere near that happening. All right, let's get into the market. Let's get back towards the action. We got a lot more to talk about getting out of the interview. Let's take a look at the SPY. And wouldn't you know it, we're starting to bottom around the 400, started to come back up around the 1 o'clock hour. what I would say about this is that a lot of the time retail is trading through what? The first couple hours in the intraday. What are we seeing the first couple of hours? We're seeing washouts. Then eventually, like you saw it, and I think Brian even gave us a little hint there, the bigger traders come in towards the end of the day, right? And then they start stepping up. Well, I think that they're starting to take a shot. We'll see towards the power hour if we can get a nice little pullback and then an extension back up. But for right now, SPY leaked out all day long until about 1 p.m. Maybe that's our low right now, 399.07 on the day. We'll have to wait and find out. All right, let's get back towards the headlines. We'll go through some of these and we'll take a look at how they're performing on the day. One stock that we mentioned this morning is Oracle, right? They gave out their earnings. Let's take a look there. ORCL, right? You guys can take a look there. And we did get a little lift, right? Yesterday's price action pushed with the earnings. Then this morning, pushed a little bit further, then quickly coming right back down. That just shows us that even a bullish stock like this one couldn't hang on. And why I liked it was, I mean, let's give the numbers here. EPS at $1.21 beat the $1.18 estimate. Sales at $12.3 billion beat the $12.04 billion estimate. They saw their cloud infrastructure revenue at $1 billion, up 53% year over year. And if there's anywhere where they're seeing growth is definitely in that cloud space. And Piper Sandler maintaining neutral on Oracle, raising the price target to 85. As you guys can see, it went down towards the 80 today. We'll see if it's able to come back. And you can see it's in yesterday's range. That's definitely a tough trade there in Oracle. Let's continue going. We'll go towards the next stock that I wanted to call out, which was Boeing. Do you guys remember? We talked about Boeing yesterday here. What did we talk about Boeing? Is that potentially there could be a catalyst with United Airlines this morning. And wouldn't you see it? Boom, it hits the tape. Why important to definitely write down whatever you get catalysts that are going to happen in like a week from now, an announcement for an event, something like that. I always try to write down those little notes. Maybe you have a calendar for specific things like this. You want to go ahead and have these written down because a lot of the time investors remember them the day that they were announced, but noise comes through the vine, right? We get confused. We're thinking CPI. We're thinking about other things, overall market. And this morning, a lot of traders missed out on this Boeing trade because they just weren't thinking about it. And that's how simple it is sometimes to get a really nice trade. And that made a really nice move back up above the 190 area. Now we'll see if Boeing can continue to run. Of course, what was the news is that United Airlines announcing a 200 jet order for 100 787 Dreamliners and 100 737 MAX jets. And this was reported last week by Reuters. So we got to catch things like that so that we can get some of these easy trades. Not a bad trade there, and definitely why you want to be focusing on what's happening. All right, let's keep going. I see you guys in the chat. I'm not even going to get into it there. You guys can talk amongst there. I really don't think that there will be a no interest rate hike rate tomorrow. I really highly doubt that. Put it this way. If that happens tomorrow, I ain't probably coming back for the next week. That's how unlikely I think of that. But hey, to each his own, and we never know what will happen. We'll just have to wait and find out. Let's get back into the action. Of course, we just talked about United Airlines and Oracle. We can get it into Moderna. Moderna was one that I was looking at yesterday for a little swing to the upside. I like the area. I like the daily chart. And man, what a reversal action in Moderna. Cracked through the support yesterday, then breaks out big towards the 206 today. We're up there towards 210. Not a bad move there in Moderna. But what happened here? It wasn't only Moderna that hit the tape today. It was a catalyst that actually got this moving. Let's talk about that. It also showed up in Merck. And what happened here was an mRNA, an investigational personalized mRNA cancer vaccine in combination with Keytruda met primary efficacy endpoints in phase 2B Keynote 942 trial. Now, the big thing here is I was looking to see if Merck was lagging behind it. And I like this chart because Moderna was moving up on this, But Merck was actually pulling back. That's why I talked about on live trading that I thought that this could be a buy the pullback opportunity here. And you guys can see it's already making its way back there towards that pre-market high. Daily outlook had a nice support around the 109. That's another reason why I was looking for this. Now closed back above 111s. Will look great for this chart to continue pushing. We'll wait to see what happens here in Merck. All right, that's why I like looking at what we call the leader laggard style trade. That can definitely help you find some good opportunities out there. So don't miss chances like this. All right, let's keep going. We'll get out of Merck. We can take a look at some other news. And about 1:45, we'll get into it with my man from, of course, the Bear Cave, Substack, Edwin Dorsey, coming up next. We'll talk a little bit about crypto. I'm going to give him the floor also to clear maybe some air of Rumble. But like always, stick around, team. We got a great show for you. Let's get into what was hot and what was not in just about 2 minutes as we wrap up the headlines for today. There was a couple of more headlines that I want to run through. So I'm going to quickly run through these, and then we'll get towards what was hot and what was not. JetBlue pre-announcement today. That's why you might be seeing this downturn. A lot of people were probably catching this spike this morning. But if you looked at what they were giving you in the news, you might have been joining the short party on JetBlue. Now expecting Q4 revenue per ASM at the low end of 15 to 19% guidance range. Of course, this is not a good outlook. Pre-announcing there that pretty much they're not meeting their guidance here. And you guys can see quick downturn on the daily now, down to 697. Who's not to say that it doesn't take out these lows to 663 going towards 621? Watch out there in JetBlue. It's definitely on a take down versus a take off, which is what we expected. JetBlue doing a little bit of a spike there with the CPI came out, but right towards the open, pow, right back down. EVgo, another one that announced a partnership today that went up and came right back down. EVgo getting the lift right out the gates, pushing up there. And this was a partnership with Lyft to launch a new partnership to accelerate rideshare electrification nationwide. So essentially, EVgo teaming up here with Lyft to try to give Lyft drivers an advantage, discounts at the charging stations, and try to help on the electrification. I think this is a smart move by EVgo to even offer discounts of fees at their fast charging stations to help those EV drivers that are working for Lyft. So not a bad move here. And I think that you could see a very similar move probably potentially happening from Uber, as they always try to play a little bit of copycat catch up, right? So we'll see what happens there. EVgo announcing a partnership with Lyft, and Lyft getting a little bit of a push up on this. I don't think it's that big of a push there for Lyft, but it definitely gives you a little bit of an advantage, right, over Uber that doesn't have this similar deal. We'll have to wait and see how Uber comes out with something similar. But Uber did get the spike too and pulled right back down. We'll see what happens to these companies, EVgo, Lyft. Can they come up? And does EVgo even make sense? We'll see what happens. It can't get off the ground right now. Look where EVgo is. $5.47 has announced a good amount of partnerships and just continues on the leak down. Just shows you that eventually I think this gets a lift, but by that time, it could be already too late for the company. We'll have to wait and see what happens on EVgo. And I mean, it's not like I don't see their chargers. I got a charger just down the street of EVgo. So something to keep in mind. This is a tough area right now, charging stations. And you can see it also in ChargePoint. Just hasn't been able to hang on and get that lift. All right, getting out of EVgo, of course, we'll take a look really quickly at what was hot and what was not in the market. That's always a great thing to do as we keep watch to what happens in the intraday and what happened from the open. Now, overall, if you look at the change right here on the top, this is the sector outlooks. You can see there's only really one sector, just tiny bit into the green, in the red overall. So this is how you can get fooled a lot of the times by overall moves versus from moves from the open. That's why I like to pay attention from moves from the open, so I can get around this and really see what's up from the bell, right? So energy is up from the bell. Stocks like XOM, you guys can be watching. We'll see how that's kind of works today, but not looking too bad there. And what do you see here in the industry? All green type of moves, but from the open, this one's up significant amount. And there's also other ones like PBR getting a little bit of a bounce back today. Oxy getting a little bit of a bounce back today, right? We already went to ExxonMobil. You could take a look at Chevron getting a little bit of a bounce back. That's not looking too bad. Healthcare is behind that, still in the red from the open, just to show you how strong it's been a leak down from the open. But I've been pointing towards kind of the index here that I have, that you're starting to get really that golden cross outlook there on healthcare. It's a really strong sector that I want to keep watch going into next year. Basic materials also in the red, but what's dragging us down really is consumer cyclical from the open, really getting hit hard. Right at the gates, you got stocks that were really jumping like Home Depot, and it came all right back down. So you can see it here. Spike even from the open, and then pow, right back down. So got to be careful on moves like that, especially if you're trying to play momentum. When those support breaks, you got to be careful because you can really get caught on some downside action. Home improvement stores got a little bounce today, shortly lived there. We'll have to wait and see. Technology was leading us up for a long time this morning and then just gave it up. NVIDIA is a clear example of that, right? Nice little push up and then a leak right back down. And so we got to be careful with stocks like this, and be careful with what I would call the full range move, where you go up to a resistance and then you're like, I'm going to join the party on this pullback. Well, I mean, where do you join the party? If you join the party here, you probably got stopped out right below it. Join the party here, stopped out right below it. You got to go deeper into the time frames if you're looking for those pullbacks, because it's very easy to get stopped out on like kind of a shorter time frame when you're getting these kind of pullbacks in these stocks, especially bigger time frame pullbacks like hourly moves where you go 1, 2, 3 hours back down, and then you could have gotten stopped out and all that as it starts to bounce here off the 178. We'll see what happens there in NVIDIA. AMD, similar chart, right? Downside action, now getting the bounce. I talked about it early on today. I was looking for a power hour run. We'll see if we get it in the SPY, as we did find some bottoming action around the 400. Got up there to 402. Now starting to battle a little bit. Going to look for a test down to break down the 400s and then eventually get that quick sweep back up. We'll have to wait and see if we get that action. All right, it's 1:44. We could keep going in what was hot and what was not, catching up with the chat out there. How we doing? Easy Mike, MD in the house. What's going on out there, team? Rodrigo, what do you like? Goldman Sachs leak saying no rate hike at all? I'll tell you one thing. I don't believe that one, at least not one bit. But hey, we'll have to wait and see, right? News is news. Rumors are rumors. And we'll have to wait and find out if everything's true. But I got a great segment coming up for you guys. We'll get out of the markets. Let's get away from that. Let's go towards, of course, we're going to get towards the bear cave. Got to turn things up right here, right? We can't have this blue in the bear cave. We're going red in the bear cave. Let's get this started. Let's get it going, team. It's time for our second interview of the day. All right, time to bring you into the bear cave with Substack's author, Edwin Dorsey. How we doing, man?
I'm doing great, Mitch. Thanks so much for having me on. It's always exciting to be on Benzinga.
Yeah, I try to bring a little festivity into it, a little Santa Claus dump rally, whichever way you look at it. But hey, I'm in the bear cave. I'm in your shoes now. You tell me what's going on out there. Let's first, before we get into all the crypto madness, because that's the way I call it. It's crypto madness. It's driving everybody insane. Investors, people that are never even heard of crypto are finding out about SBF. So we'll get into all that. First, I want to do is give you the room to kind of clear the air. What do you feel that you've gotten right on last time when we talked about Rumble? What do you feel you may have gotten wrong? And moving forward, how do you see the stock in an update? I'll start there.
So Rumble is a recent SPAC merger. I think anytime you get these SPAC mergers, they tend to be very volatile because it's tough to short. The volumes are lower. The float is relatively small. I was just not impressed with the SPAC, the management team, or the company itself. I think it got a little bit of a hype once Elon Musk was buying Twitter, and people thought there might be this like conservative revolution and Donald Trump might come back and maybe that would help Rumble. In fact, that's probably the opposite. Rumble is, a hyper conservative, YouTube basically. But if you see Twitter become a new place that's more hospitable to conservatives, I think that'll hurt Rumble's future. I just don't think Rumble's a multi-billion-dollar company. There's nothing wrong with having a YouTube focused on conservatives. It just, I don't think the market's there for them to be like anything more than a small niche company with maybe 10 million a year in revenue or something like that. So I'm super skeptical. I kind of stand by what I wrote before, and I don't think the future prospects are too great for them. Although because it's a recent SPAC merger, no doubt it's going to be very volatile and maybe not a great short in the near term.
Yeah, it's tough. It's tough to whenever you're dealing with stocks like this that have such a high beta, right? I mean, the moves that happen in this are no small moves by relative means, right? And so I think one of the things with a Rumble is also, like you mentioned, for me, what this really was kind of more of a battle was between Rumble and kind of DWAC, right? All the DWAC fans out there. And I thought that was going to give you more of the battle, right? Truth Social and Rumble. Which one of these will survive through this? And really, I mean, we all know how there's a big following behind Trump, right? And that's why a lot of people have been following DWAC. But since the very beginning, I thought that deal was never going to go through. And we've still seen that battle still happen, right? I mean, they still, from last time I checked, Edwin, they're still trying to do the vote, right?
Yeah, the DWAC seems like a real mess.
Yeah, this seems like an even bigger mess, right? And so I think at this point, I would say, if I would say between these two, DWAC and Rumble, which one at least will maybe survive the other one? I would have to say Rumble right now, because at least they're getting creators on here and doing something, right? We're not going to say that at least that's not going on. They actually have some creators and they've been able to pull some content and try to battle a little bit to the monster that is YouTube, right? And so that exists. I think you would agree with me on that.
Absolutely, Mitch. But on this point with Rumble, it's not clear how many of the big creators are there just completely on their own freely versus how many are being paid to be there. So you're completely right. There's some big names doing Rumble channels. It looks like, and this isn't made super clear to investors, most of the big channels on there are actually paid to be on there and paid to post content on there. And to be fair, Substack, where I host my newsletter, had a similar model where they were paying people to join the platform to get people started. The key for making it a long-term successful enterprise is getting like new people on there on their own volition, earning a lot of money completely without Rumble paying them. And Substack had that right away. Substack was formed in 2017, and right away there was a product market fit and it took off. Rumble, I believe, was formed in 2013, and we still, even though there's big channels, I believe they're all being paid. And it's a question of like, can they get that organic, like big following channels earning a lot without financial incentives from the company, which aren't sustainable?
Yeah, something definitely to keep watch. We'll have to wait and see more and more. At least one thing that helps is they are a public company, right? Going to have to be reporting to us. So we'll wait and find out. And I think that we'll see how the story of Rumble plays out. But as you guys can see from the price action, don't think you have been too wrong there, at least, Edwin. We're down now towards $8. We'll have to wait and see if we can get back above the $10, as I'm sure there's maybe some overhead supply. We'll wait and see. Of course, like you mentioned, I'm with you on that one too, Edwin. We could have some volatility in the future. But let's put Rumble into a package, put that to the side. Let's pick up what I think you were really excited to talk about, which is getting more into cryptocurrency, right? And the disasters that are going on here. Let's first start off with what were your thoughts on the release today from Forbes putting out a head testimony that was supposed to happen today, but didn't? Fill us in. What's going on?
It is kind of embarrassing. People can go read what SBF's testimony would have been. He was swearing in the beginning. He comes across, honestly, a little bit like a spoiled baby. At one point, he was claiming that the bankruptcy group John Ray, wouldn't give him access to his personal LinkedIn. So he's like locked out of his LinkedIn. Dude, I don't think you understand the magnitude of the harm you cause and the problems you're facing when you're complaining about being locked out of your LinkedIn.
Two-step verification, right? I mean, like, come on. What age are we in?
John J. Ray III definitely seems like he's the adult in the room and the competent one running the show. And SBF has some huge problems ahead. And as you know from my recent articles in the Bear Cave, I don't think this is going to be contained to just SBF. I think there's going to be some public companies that are going to be harmed because of his misconduct too. And that's kind of the more interesting thing for investors.
I agree with you there, Edwin. One thing that I've been clearly stating, and I started stating this really when Celsius started going down, right? It wasn't just SBF here, right? I think that SBF is, he's due his own diligence, and it was important what happened there. We're going to hold him accountable. But I also feel him and view him a little bit like a scapegoat here also, because he wasn't the only one that was promising these returns, right? Promising the safety that was in these platforms. It was a lot of characters that portrayed and helped gave this view that gave the lift to SBF that he got, right? At least I think that there was some warning flags going around that a lot of people weren't really making it clearly apparent.
Yeah, Mark Cajotes was kind of one of the earliest to point out a lot of these red flags, where one of the things he pointed out a month before the collapse is FTX's chief regulatory officer is somebody who used to be the general counsel for a rigged online poker site. And it's like, that's such a massive red flag. And he's like one of the 6 listed executive officers on their website. And no one bothered to do like a deep Google search on him. I think Dan Freeberg's the name. So there was a lot of issues. And I think the most negligent party here, at least on the surface so far, one of the worst parties appears to be Silvergate Bank, which facilitated billions and billions of transactions to FTX, or purportedly to FTX, but was actually sending customer money to Alameda Research. And that played a big role in allowing like Alameda to essentially day trade with customer funds and lose all the money. So in terms of public companies that are going to be affected, I think Silvergate Capital, ticker SI, could be in a lot of trouble. And the market's starting to wake up to it. The stock's down 12% today, but I'm super skeptical of their future prospects and how this plays out for the stock.
Yeah, I mean, clearly from the very moment that FTX started happening, I think you really started to draw questions on what's going on really behind the doors that we can't see in Silvergate. And clearly you started seeing more connections start showing up. And I think that you're not wrong in your doubt. I think that there was clearly questions to start coming into concern with SI. And I also, just started calling out with the price of Bitcoin down, how would it affect these companies? Since that happened, it's already been kind of showing the writing on the wall. Like one company, and we can just kind of really quickly talk about it, is like MicroStrategy. Like I've been saying since around 300 that it was already kind of that area that you could start thinking about that this would be coming down, because I didn't see the winter of crypto ending anytime soon, right? Mm-hmm. And in August 2nd through September 19, MicroStrategy was buying Bitcoins in all this mess, right? I think if anything that we learned, it's probably that the winter might be a little bit longer than most are thinking here, especially with the uncertainty, right? Because that's really the after effects, right? I mean, the whole SBF thing, they'll probably, have his little sell. We'll have to wait and see what happens there. But really, what does this do for investors overall and their outlook in trying to invest in cryptocurrency?
Well, I think it's going to just diminish the total market size. So as you can imagine, people probably aren't thrilled to start trading cryptocurrency now. So Coinbase is going to be one of the companies affected. I think you'll see a lot of these like long tail of altcoins and weird coins that never really had a clear purpose. The market for those is going to be greatly reduced. Bitcoin and Ethereum, maybe they have like a little more staying power, and there's still going to be a market to trade them. But because this long tail of like all these weird side projects are now losing a ton of credibility and losing the benefit of the doubt, trading and that'll be reduced. And trading for those long tail of cryptocurrencies typically occurred on Coinbase. So I think we're going to see Coinbase's losses explode. And one of the things I've been talking about in my articles in the Bear Cave is how we assume the US banking system is really completely independent from this crypto ecosystem, but it's not, because a lot of these crypto coins and these stable coins have, billions and tens of billions of deposits in our banking system, often concentrated at a small number of banks that are willing to bank with crypto companies. And as that market shrinks, as people move from stable coins to US dollars and pull money out of these exchanges, you're going to see all these billions and tens of billions in deposits at US banks that bank with these crypto companies really go down really fast, and that might have some problems.
Yeah, definitely. One thing that I think a lot of people don't understand is how correlated the markets are. You want to think that there's no correlation there with Bitcoin and our markets, but if anything, I think this downturn in the market has really showed us, right, how correlated. And if anything happened in the last wave, is that it became even further correlated. As, of course, all that influx of money comes in, a lot of the bigger investors took their shot. They got into here, right? I think at this point, I would say that Bitcoin might move with the market overall at this point.
Yeah, I have no strong opinion on Bitcoin. Bitcoin is, intriguing to me. I don't.
It's a whole nother ball game, Edwin.
I'm not sure to. I think it's easier to just do a deeper dive on some of these companies and try to evaluate their flaws, or so I can speak more to the crypto ecosystem of stocks than Bitcoin.
Yeah, one of the things that I would definitely start taking a look in, and I'm sure you've already done so, Edwin, is these mining companies, right? How are these mining companies going to survive with this situations going on in the background, right? I mean, there's certain hash rate that they have to have for them to be profitable. And where they're at now, it just doesn't seem like they're going to be able to stay and survive.
If you want a cool story related to the mining companies, there's a publicly traded bank, Provident Bank Corp. PVBC is the ticker. They're like, the 10th oldest bank in the United States. They've been around 200 years. And for some silly reason, they started lending a ton of money to these mining companies, like over $100 million, this small bank, to these, Bitcoin mining companies. And all these mining companies are going belly up. And now they're repossessing these useless like Bitcoin mining equipment that can't really be resold. And that's a bank that's going to be taking huge hits from trying to get into this like crypto mining adjacent space.
There's always so many ends and doors, and like always, you need people like Edwin to kind of at least look underneath the hood, point us towards a certain direction. What else should we be looking at here? You mentioned SI. Any other companies you think that could be having some larger effect with the contagion that's going on from FTX?
The three companies I'd mentioned are Silvergate, and Silvergate. I think they're the best, company to look at skeptically. I think, I tweeted, I think they're going to be under $10 by the end of the year, and a likely zero from all the fines they're going to be facing. So they're by far and away the one that I'd want to bet against if I was going to be trading. I'm a little skeptical on Coinbase, but there might be some value in having a huge user base, but Coinbase is just bleeding so much money. I'm not sure if any big financial institution would want to acquire them. I don't really see a path for them to become profitable anytime soon. I don't think the management's great there. So Coinbase is a little interesting. There's some other like banks that did some business with the crypto firms, like Metropolitan Commercial Bank. They issued like a lot of credit card partnerships, with some like offshore crypto firms, but by far and away, Silvergate's going to be the one that's going to get hurt, because they facilitated over $1 trillion worth of transactions for the crypto ecosystem.
Yeah.
And the thing is, if you don't follow anti-money laundering laws, if you don't follow know your customer laws, you're going to be hit with massive fines. And I think the market's waking up to the fact that this bank could be facing life-changing fines, and we're going to see what happens.
Definitely. And they've been putting out more and more warnings, right? The SEC calling out companies to start being transparent or more transparent in this space before they have to start coming in here and letting us know. But But appreciate you, like always, coming on, Edwin, and letting us know what you're seeing out there. And if you see anything else, let me know. I'll knock the lights back down. We can get back into the bear cave and have a good chat. Appreciate you coming on, Edwin.
Thanks for having me on, Mitch.
Always. And definitely, I mean, SI just looks like, I mean, when I think about like my studies and stuff like that, and I think about overall like volume analysis, this is a clear example of what volume analysis tells us, is that a lot of the times we're going to get what? Higher volume with high demand. That's going to drive prices. Eventually, there's going to be lower demand, still high demand, still pushing there, but lower volume. You clearly see it here as we get towards that spot here in the sideways consolidation. Then we get that last little pre-breakout. We get that last little moat pop towards the upside. A lot of times we're going to see higher volume towards the peaks as you start seeing it turn around. And then we start getting into what? We get into higher volume decline, right? Eventually, that's usually followed by a lower volume decline that we saw here happen, followed by the capitulation moment, where you're actually starting to see the volume increase and the price action come down. So this just shows us more and more. Classic volume analysis on SI showed us that this is the classic wave. And now it's going to be a matter of, can it come down and save itself here, where it can get so low that it can give that kind of reversal sign and stick around. But we'll have to wait and find out if there's any more negative catalysts that come into SI. So just be careful out there, team. All right, getting this down, we'll take a look into the market. It's 2:02. I went into overtime here, so I need you guys in the chat out there. Give me a thumbs up. Remember what we talked about earlier today. We said, I'm looking for a power hour rally. And I said, we'll look for what? A little move back down towards like the 400, trying to break that down action, coming right back. Looks like we're getting that action right now. 402 starting to show up. I'll be looking at some trades. But if you want to catch me and how I'm looking at the power hour, how I maybe traded the power hour, come to at the close, 3:30. You don't want to miss it, team. I'm going to be looking at this market. It's looking interesting for me. I'm not going to take any trades right now in stock market movers, but I'm going to start setting up and looking at the power hour to see if we get that rally. Find out on at the close, 3:30. I'll see you guys there. Hit the thumbs up. Let's find out what happens in the World Cup also, and of course, the markets. I'll see you next time, team. Hit the like on your way out if you guys appreciated today's show.